Let's first take a look at the Asian markets as to how they are doing this morning. We just mentioned the Japanese markets were gaining this morning after the inflation data that was reported, but the same cannot be said for the other indices across the Asia Pacific because the Taiwanese index is trading with losses of almost 1%, as is the Hang Seng, and that is trading with losses of over 1.25% this morning. And that is the Taiwanese index, remember, hit a record high this week, but since then has been in consolidation mode and now is seeing a bit of profit booking from higher levels. The Hang Seng also trading with losses of well over 1%. Pull up the GIF Nifty as well. The Nifty has been in the consolidation mode of its own after hitting record highs. The implied open suggesting a mildly positive start for our own markets, around 16 points higher as of now. But moving over to Wall Street, when they resumed trading after the Juneteenth holiday, it was a mixed session there. The Dow Jones surged 300 points and gained for the third straight day. The S&P 500 briefly topped the 5,500 level but pulled back and closed about 14 points lower. The tech-heavy Nasdaq Composite, the day's underperformer, slipped 140 points. CNBC's Pippa Stevens gets us a wrap of all the big stock movers on Wall Street.
Well, shares of Dell Technologies and Supermicro jumped at one point on Thursday after Elon Musk said the two hardware makers will provide servers to help his artificial intelligence startup xAI develop a supercomputer. In a post on X, Musk said, quote, Dell is assembling half of the racks that are going into the supercomputer that xAI is building. But share gains later faded and the two stocks closed in the red. Meantime, Accenture gaining 7%, the second best stock in the S&P. The company did miss earnings estimates, but the share is getting a boost on growing AI sales. CEO Julie Sweet telling CNBC that Accenture saw more than $900 million in generative AI bookings for its third quarter, bringing it to $2 billion for the fiscal year. But Apple supplier Jabil sinking. That stock was the worst performer in the S&P after the company did beat earnings and revenue estimates in its latest report, but pointed to softness in its automotive and transportation markets. So from the worst to the best, that would be Gilead, the top S&P stock, Thursday, after the company said a late-stage trial of its HIV drug showed 100% efficacy for preventing the virus in women. The results bringing Gilead one step closer to broadening its HIV division, and those shares closed up 8%.
And as the S&P 500 reaches new highs, the BNY Wealth believes that large caps will lead further gains, while Citi has raised the year-end target to 5,600. Listen in.
We are constructive on markets. We are positive. We think the fundamentals are strong and in certain sectors getting better, raising the earnings for the S&P overall. So there are some charts that are asymptotic and that looks not healthy, but on the other hand, the fundamentals are increasing as well. We're just very optimistic. We're overweight U.S. large cap. We've been that way for the last 2 years. Again, it's just been the right place to be because in the end, other countries are looking better than feared, but the growth here is so much stronger in the developed economies that you have to be invested here, we think.
The setup here is, when you think about it, fairly straightforward. When you look at the year-to-date index return, the way we break it down is that when we ran the math at 14% or so for the S&P, 5 percentage points of that came from NVIDIA. 4 percentage points came from the rest of the Mag 7. That left the remaining 493 within the S&P contributing about 5%. Essentially, what's been happening here is that the fundamental beat and raise dynamic for NVIDIA and the rest of the Mag 7 has stood out this year and has lifted expectations for that cohort of companies that in turn has influenced where broader S&P earnings are going. So to a certain degree, what we're really doing here is truing up our starting point for the year 5,100, which assumed a contribution from the Mag 7, but not to the extent that we're getting right now. So where we go from here, we're still looking for a very strong earnings follow through for that component of the market going into the end of the year. Right. We are looking for a contribution from the rest of the Mag 7. That becomes more of a story as we head into 2025, though.
If you want to get scared, take my old job and look at the Russell 2000. And what we were watching last Wednesday, while Powell was speaking in particular, was Russell relative to S&P. And you basically had this big pop on the CPI data. You gave almost all of it back by the afternoon, and small caps by the end of the week had made major new lows relative to the S&P. And so we see that nervousness being expressed in that discrete trade. However, it's not really being extrapolated to the broader market yet because of those defensive undertones. You know, I do think their opportunity is there down the road. I do worry when I do hear some people, not a ton, but I hear some people trying to make these bullish arguments on small cap because the cuts are coming. And I just feel like we need to wait and see. It's almost like listening to children who aren't listening to their parents, and they're just, you know, determined to hear what they want to hear from the Fed. And I think there's going to be some disappointment on that timeline. Our camp at RBC is looking for a December cut, not a September cut. So when I still hear these September discussions, I feel like for this particular year, we may be still sitting up for a little bit of disappointment.
All the action from the US markets overnight, but moving across the Atlantic now to the European markets, where it was a strong day of gains there following 3 central bank decisions. The French CAC and the German DAX surged over 1%, while the British FTSE settled with gains of close to 70 points. Now, in an important central bank decision from the region, the Bank of England left rates unchanged at 5.25% in what was their last decision ahead of the crucial July general elections in the UK. The BOE policymakers, however, said that the decision to not cut rates this time around was finely balanced. The Swiss National Bank, meanwhile, cut rates by 25 basis points, citing easing pricing pressures, and Norway's central bank, on the other hand, opted to leave rates unchanged at a 16-year high and said that a cut was expected only in 2025. Now, as investors continue to debate on whether a rate cut from the Fed is on its way in September, the soft incoming economic data has got economists to discuss the risks of over-tightening by the Fed and other central bank actions. Let us listen in to what KPMG's Jane Swank had to say.
I think we're in this sort of watchful waiting period where it's not whether or not central banks cut this year. The Bank of England much more dovish than even expected on their statement, leaning in that direction for August, hopefully. But the Federal Reserve also sort of wanting to make sure that they hit the landing and don't overshoot, although I do think the risk is still high that they do overshoot given some of the softening in economic data. And that's important. You know, we've seen the Fed sort of push out their patience here to the extreme, and I think it's going to take an awful lot of good data for them to actually ease by September.
And it's time for a short break here on Power Breakfast. Up next, we tell you how all of these global cues that we just highlighted will impact our own market. Stay tuned. Back on the other side.
Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity, and low self-esteem.
In India, you see a lot of gum disease, which is also promoted by things like tobacco and supari.
Poor oral health is linked to serious systemic issues like heart disease, Alzheimer's, digestive problems, bacterial pneumonia, preterm delivery, and cancer.
If your teeth, the way they meet, what we call occlusion, is not proper, it can lead to other damage to the joints, to the gums. We have bone loss around the teeth.
Use a soft brush, destroy your brush, don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
We are hoping to see the credit growth in the range of about 14 to 16%. And we expect to see very broad-based growth in credit, right from SME, agriculture, retail, and also in the corporate. As far as we are concerned, our domestic NIM last year was 3.43. So I expect our domestic NIM should be around the same number.
The shock and awe story of NVIDIA, Shankar. I mean, you know, today the most valuable...
Back with us here on Power Breakfast, and now our research team is joining in with how the trade setup looks like, the stocks that are likely to be in the news, and the FNO setup for the day as well. First up, Vamakshi is joining in to get us all the market cues that we need to watch out for today. Vamakshi, good morning. Final trading day of the week. What's the setup looking like?
Well, absolutely, Hormaz. Let me first start off with the global markets. S&P 500 briefly topped 5,500 for the first time as Nvidia's market leadership continues. Nasdaq cooled off after hitting an all-time high, but the Dow Jones was an outlier. It was up nearly 0.8%. Moving on to the European markets, they also managed to close higher after the Swiss National Bank delivered a second interest rate cuts of 25 basis points to 1.25%. The Bank of England kept its interest rate unchanged at 5.25% in line with the expectations. The Indian markets, the range-bound action continues out here as well, and Nifty recovered from previous day's fall. And in fact, after a weak start, Nifty managed to post a record close. The gains in Nifty were largely led by the private banks as well as Reliance Industries. Nifty Bank's outperformance as compared to Nifty continues, except SBI and IndusInd Bank. All Nifty Bank constituents posted gains in the trading session yesterday. The broader market also continued to outperform the Nifty mid cap was up nearly 1%, while Nifty small cap was up nearly 0.6%. As far as sectoral moves are concerned, the gains in realty were led by prestige estates and macro tech developers, while the metal pack was led by Vedanta, NMDC and Nalco. Auto and pharma were some of the sectors that were the laggards yesterday. As far as the trading session today is concerned, we will be watching out for RBI's MPC meeting minutes. The Fed monetary policy report is also expected to come through, so keep an eye out on that. But as far as specific stocks are concerned, IT stocks will be on our radar after Accenture reported its numbers. Outsourcing deals were very strong, and FY24 guidance for the company has been narrowed. Sensex and FTSE index rejig is also expected to take place. Adani Ports will be included from the Sensex, while Wipro will be excluded from the Sensex. In fact, Nuvama is expecting net passive FII flow of 250 million in India on account of the FTSE rejig. Higher flows are expected in ICICI Bank and Bharti Airtel. Now, ahead of the GST meeting on June 22nd, fertilizer online gaming companies will also be in focus. As far as the gift Nifty is concerned, it's indicating a positive start to the trading session today.
Vamakshi, thanks a lot for that update. Now over to Upasna, who would list out the stocks to watch out for in today's trading session. Upasna, good morning.
Good morning. First up, let me start with Cipla. The company signs non-exclusive patent license agreement with Takeda for drug vonoprazan, and the agreement is signed for the Indian market. It's mainly for treated acid-related illness amongst patients. Next up is Jindal Stainless, the company to supply stainless steel to produce 100 Make in India freight wagons from Mozambique. Next up is GIC Housing Finance. The malware attack affected some of the end user system of the company, but the company has immediately isolated the affected systems from the network to stop the further impact. Well, Aster DM will also be in focus, as according to sources, Olympus Capital Asia investment is likely to sell 10% equity, and floor price is seen around 331 per share, and deal size of the block is around 835 crores with an upsize at 1670 crores. Next up is GSK Pharma, that will also be in focus, as the company has executed an agreement with Go Aptiv Private Limited. This tie-up will simplify the operating model and accelerate volume growth for the company. Next up is Britannia Industries. The permanent workers of Taratala, Kolkata-based factory have accepted voluntary retirement scheme offered by the company. Next up is GE Power India. It has received letter of intent worth 243 crores from NTPC GE Power Services Private Limited. GM Financial will also be in focus, as SEBI passes order asking it not to act as a lead manager for debt issues till March 2025. Well, this is SEBI's order after interim one barring GM Financial from acting as a lead manager for debt issues. In addition, GM Financial has voluntarily agreed to stop IPO financing business. Hence, that stock will be in focus. Next up is Welspun Speciality. The company has received order from GPCB, that is Gujarat Pollution Control Board, directing the company to cease operations at its Bharuch unit. And lastly, Time Technoplast will also be in focus, as the company has received final approval from Petroleum and Explosive Safety Organization for manufacturing.
Thanks a lot, Upasna, for that update. And Mangalam is now joining in with cues from the FNO space. Mangalam, good morning. It's been range-bound consolidation on the Nifty, but we are making new highs. What's the setup looking like?
Well, it is exactly that. We are seeing range-bound consolidation with the Nifty making new highs. Nothing really to worry about. It's been a good week for the bulls because the Nifty bank broke out. We have the mid-cap index doing a lot better, and the Nifty is doing just Nifty things after, conquering level after level. Importantly, the domestic market and the market itself is absorbing all the flows from the big, large trades that took place all through this week. And yesterday was no different. The big, large trades yesterday were PNB Housing Finance and nearly 2% equity trading hands exchanging hands in rate gain as well. That stock ended about 3% higher. Importantly, the FIIs continue to buy in index futures. So short covering and long addition continue. So yesterday purchase was close to 1750 crores, 16,000 long contracts added, about 13,000 shorts covered. So if you look at the table, that comes up for you, on June 14th, the FIIs were net short to the tune of 53%, and now they become net long to the tune of 57%. So the net contracts, which were lower by almost 24,000 in the negative, have now come to 72,000 in the positive. So in the last 4 sessions itself, you've had a swing of nearly 1 lakh contracts on the long side. Now with this market moving higher, and as we prep for the expiry week, the street is bracing for some sort of consolidation, and that's visible in the 23,600 call writing that we've seen. And if we were to break out of this consolidation, then maybe some punt buying at the 24,000 call. Not to say that the market will go there, but there is some punt buying out there. 23,500 put is equally active. So the option writers are placed for that range of 23,400 to 23,750. What would break this range out? Nifty Bank and Nifty IT. Let's see what that do. And we have a bunch of stocks on our radar as well. BSoft and GNFC are entering F&O ban. We pointed this possibility out yesterday. And out of band are India Cement, SAIL and Chambal Fertilizers.
Mangalam, thanks a lot for that F&O setup for the day. But moving on from the markets now, the finance minister held a pre-budget meeting with various industry bodies to understand the needs and demands of different sectors. ASSOCHAM President Sanjay Nair told CNBC-TV18 that the issues ranging from employment creation to fiscal consolidation were discussed in the meeting. Samir Somaya, the president of the IMC Chamber of Commerce and Industry, said that the meeting focused on putting more money in the hands of low and middle income class and promote small and medium enterprises. Subrakant Panda of FICCI also said that the industry urged the government to continue with its capex thrust.
I think putting a little bit more money in the middle income and lower income hand was clearly one area, because people have lost a significant amount of their stock or wealth in the pandemic. Whole area of focus was to promote MSMEs and SMEs, and again, easy to talk about it, but in practicality, it was about ease of doing business for them.
For taxation, the topics were much more, that it was more about, make it simpler, make it easier, make the ease of doing business. But the conversation with the government was also much more on a much more broader space, as we said, about how do we look at making the innovation fund work better? How is it that we make the transition better? How do we generate employment? How do we create Indian manufacturing? It was done on 2 levels.
So broadly, even as private sector capex is picking up and the numbers are very encouraging in this regard, the government has done stupendous work in terms of handholding the economy through a difficult phase with a significant capex thrust, and we requested for that to be continued.
Some industry expectations there ahead of the budget, the dates for which are yet to be released. But now then we go across to Prime Minister Modi, who is at the International Yoga Day in Srinagar. Let's listen in.
यूनाइटेड नेशंस में इंटरनेशनल योगा डे का प्रस्ताव रखा था। भारत के इस प्रस्ताव का 177 देशों ने 177 समर्थन किया था, और ये अपने आप में एक रिकॉर्ड था। तब से योग दिवस लगातार नए रिकॉर्ड बनाता जा रहा है। 2015 में दिल्ली में कर्तव्य पथ पर 35,000 लोगों ने एक साथ योग किया। ये भी एक विश्व रिकॉर्ड था। पिछले साल मुझे अमेरिका में यूएन हेडक्वार्टर्स में योग दिवस के आयोजन का नेतृत्व करने का अवसर मिला था। इसमें भी 130 से ज्यादा देशों के लोगों ने भाग लिया था। योग की ये यात्रा अनवरत जारी है। भारत में आयुष विभाग ने योग प्रैक्टिशनर्स के लिए योगा सर्टिफिकेशन बोर्ड बनाया है।
Prime Minister Modi there addressing the audience on the International Yoga Day. Time for a short break here on Power Breakfast. Up next, we get you cues from the commodities market. Stay tuned. Back on the other side.
The world. For most of us, the big breakthrough moment as far as generative AI was the ChatGPT moment. But for you and for the folks at NVIDIA, I mean, when did you start to think that this was on the verge of an explosion?
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, you know, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So in no overnight success, which is what people sort of suddenly, like where did NVIDIA come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years.
Welcome back. And now in the latest on the UGC NET exam row, the CBI has registered a case against unknown persons for compromising the integrity of the examination. Over 9 lakh candidates across 317 Indian cities had appeared for the exam on Tuesday. The National Test Agency, which is in charge of conducting the exam, is already facing the heat for alleged irregularities with relations to the NEET, which is a single-window entrance test to all MBBS programs in India. Addressing the press, Union Education Minister Dharmendra Pradhan said that the question paper got leaked on the dark web and admitted that the paper leak was an institutional failure by the NTA. He has also asked the issue should not be politicized. His comments came after the Congress leader Rahul Gandhi attacked the government and the Prime Minister over the issue. Now, the Delhi court granted bail to Delhi Chief Minister Arvind Kejriwal in the money laundering case linked to the alleged liquor policy scam. The trial court rejected the Enforcement Directorate's plea for a stay on the bail order for 48 hours to approach the High Court. The court, however, imposed conditions on the bail, including prohibiting him from hampering the investigation or influencing the witnesses. He's also been asked to appear before the court whenever required and to cooperate with the investigation. Arvind Kejriwal is expected to be released today from Tihar jail. The Enforcement Directorate is also likely to move the Delhi High Court to seek a stay on the bail order. And Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Well, I'm looking at stronger gains coming back in case of the commodity prices, Hormuz. I'll start with gold because we've seen 1.5% of jump there. Silver prices gained up by more than 3% overnight, and it's a 2-week highs for gold and silver, both of these prices. It is about the weaker than expected U.S. economic data, and also the ECB and the Bank of Canada have cut interest rates, and the markets do believe that Bank of England and Swiss National Bank could be the next ones before other banks also follow suit. So this is what seems to be supporting prices right now. It also is stronger gains that have continued for the crude oil prices, holding around that 7-week highs, almost inching towards that 86 mark. Here as well, there has been a strong decline in inventories of crude, gasoline, and distillate stocks in U.S. that has been supporting the markets. We're looking at stronger gains come in for copper as well, which gained 1.5% overnight. Zinc was up a percentage point as well. The coal prices are trading in the positive also. So after almost all of the week trading quite mixed, the last 24 to 48 hours in commodities have been good.
Manisha, thanks a lot for that update. And as we just highlighted, Prime Minister Narendra Modi flagged off celebrations at the Dal Lake in Srinagar on the occasion of the 10th International Yoga Day, where he was joined by over 7,000 participants. The theme for this year's celebration is Yoga for Self and Society, focusing on yoga's impact on personal well-being and community health. Across India, leaders including JP Nadda, Yogi Adityanath, Nayab Singh Saini also joined in the proceedings. Since its inception in 2014, the Prime Minister has led celebrations for yoga at various iconic sites across the country and abroad as well. And with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward.
The work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and, major ISVs. It takes a long time to build a market.
Steel, we are one of the best prime location of steel asset, which is in Jharkhand, near Bokaro, is in the Bokaro. We have a proximity of all the raw material, iron ore and the coal. We are proximity of all the railways. We are proximity of all the gas. We have put this asset on the basis that if we get 1.2 billion per million ton, we have a 3.5 million ton of plant, which at the moment we are producing close to 2 million. 3.5 will be by end of this year. We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Yoga se hi hoga, right? That is the common line. But it's International Yoga Day today. Happy Yoga Day to everyone who practices. And of course, Prime Minister Modi is heading to Srinagar for the Yoga Day celebration. So it's going to be an interesting day. But hello and welcome to Bazaar Morning Call. You're watching us live from the CNBC-TV18 Motilal Oswal studio. I'm Sonia Shenoy. Today joining me is Mangalam Malu and Surbhi Upadhyay. Folks, good tidings for the market. It's Friday and it's been a week where the market has flip-flopped, but largely a week of consolidation.
Oh, absolutely. And happy Yoga Day, guys. Happy Yoga Day to all our viewers as well. I can just tell you that, apart from the physical fitness aspect of it, mental fitness, whether you incorporate one asana or two or just a couple of stretches, get something going. Yeah. Forget the body. It really helps your mind. And yes, I mean, considering we live in very high-paced markets and a very high-paced environment and a market that has been a literal roller coaster, I think some mind balance really is just what the doctor orders.
Right?
Yeah, that's true.
I think it's the ultimate, right? Because what is it that the world's best software developers or IT companies aim for? They aim for hardware-software integration. That's exactly what yoga does, right? Fixes the mind, body and soul, aligns all of that together. And the best part about this is when we talk about financial freedom, when we talk about, enlightenment and all of that, the biggest goal to pursue is fitness, no other goal. Why is that? Because you can't, get it genetically, you can't inherit it from people, and if you've gotten it once, you still have to keep working at it. So humility, fitness, and, having a good body is not only an important asset for yourself, but for your family.
If there is no health, then the wealth doesn't really count.
It doesn't. It doesn't. And I've been practicing yoga for a couple of years, and I believe it's more for my sanity than vanity, right? So that's something we're going to celebrate through the day, and glad to see that Prime Minister Modi and the government, of course, has brought yoga to the world map. So it's International Yoga Day today, the 10th International Yoga Day. But let's get back to the markets now. The market has also been not too bad, actually. It's been in consolidation mode. Yesterday, we sort of held on to the key levels on the Nifty. But the one thing that's working in our favor is that global cues have been quite stable. So overnight as well, you had the S&P 500 that briefly crossed the 5,500 mark for the first time ever. The Nasdaq has also, it crossed the 5,500 mark and then it cooled off a little bit from there. The Nasdaq also hit an all-time high and then cooled off from there. So largely you'd have to say that, it's not such bad tidings for the global markets, and that's been buttressing our own market as well. The Nifty has been consolidating around those record highs, around 23,560 or so. Flows have thinned out a tad bit, so there was selling by DIIs yesterday. There was buying, a tad bit of buying by FIIs in the cash markets, about 415 odd crores. In terms of sectors, I'm watching out for IT stocks because, globally, Nvidia fell a bit. It was down about 3.5%, so IT stocks were under pressure. Back home, Accenture's numbers, according to me, it's been a bit of a mixed bag because the management did say that discretionary spending is constrained, especially in some of the smaller projects. So I don't know how that's going to shape up. But most brokerages believe that perhaps the worst is over for the IT space. So Morgan Stanley put out a note where they said that Accenture's results and the commentary pointed out to a few positive data points, such as strategy, consulting, returning to growth, and a pickup in smaller deals. So yes, discretionary spending is lower, but there is a pickup in smaller deals. So let's see how the IT companies, react to that. Q3, the numbers were a miss. That is the one thing to look at. Okay, by the way, those are some live images of Prime Minister Narendra Modi at the International Yoga Day celebrations. So we'll, of course, keep getting you that through the course of the day. That's in beautiful Srinagar. Just looking at that site is making me calm today. But yes, Yoga Day celebrations have been flagged off, and markets are going to be flagged off as well.
Oh, absolutely. And like you're saying, it's been actually a week of consolidation, and perhaps that's not a bad thing at all. And yes, let's face it, when you rally so much, there is a little bit of a fear of heights, and that's what seems to be gripping markets in the US for sure. And what we saw overnight, the sell-off in not just in Nvidia, a couple of other chip stocks as well, Micron, etc., they were all down 4-5%. So cool-off coming through. What we have is actually slightly weak data on Wall Street as well. So let me run you 3 data points, and all of them were on the weaker side. Now, jobless claims, they came in higher than expected for the week gone by at about 238,000. They fell from the prior week, but not as much as what the market would have hoped for. Housing starts are actually at a 4-year low. The number has come down. there's a decline of about 5.5% in the month of May. So the housing market data was weak. The Philly Fed manufacturing index number came in, and that number has declined from about 4.5% in the prior print to about 1.3% in June. So that's the third week data point. And all of this coupled with the fact that retail sales in the US were subpar as well, the last number that we got. So, you know, again, some of those macro cues perhaps giving traders an excuse to book some profits and get a little light in terms of positioning. Though, of course, the S&P 500 did cross the 5,500 mark. So it hit that high and then the cool-off happened, very similar to what we saw in our markets last week. So let's see how this is playing out. Now, for the dollar, this means that there is a bit of an increase in demand, and the dollar index, by the way, is now inching towards the 106 handle. So watch for that. And there's a pickup in yields as well. So the US 10-year yield is on your screen, 4.26. Let's get the DXY as well, because it's now above 105.5. So the dollar is continuing to, trend higher, and crude remains a watch point for us. Nothing's changed there. I mean, Brent crude is still very much closer to 86 than it is to 85. That's the dollar index. Not the best of cues for us. And again, crude, there's been absolutely no fall throughout this week. Crude has held in this range of 85 to 86. So global cues, short point, are not the best. Coming back here at home, Sonia mentioned IT, so absolutely I'll be watching out for those stocks as well. Remember, the guidance itself has narrowed. Depends on how you want to read it. From 1 to 3%, now it's 1.5 to 2.5. So the upside has also been lowered. So let's see how our street interprets it. Of course, not a strict apple-to-apple comparisons. The Accenture's consulting business started picking up, so that was something good. And they were sounding very positive about Gen AI, continuing to get more business over there. The market, well, for us, again, consolidation week with the Nifty and the mid-cap index. Actually, both these indices are just about 0.5% in the week gone by. It's been the week of the banks, because that's the big trade that started off 3.5% higher. That's actually kept the Nifty away from a broader decline. So let's see if we'll get more of that or not. The sentiment perhaps is going to be, as they say, the cliche goes, cautiously optimistic. A lot of the pre-budget consultations have begun. You heard from the capital market guys yesterday. There's a GST meeting coming up over the weekend. So any further deliberations on what they might do. We've seen what the fertilizer move, for instance, has been like, right? With the hopes of some sort of a rate cut perhaps coming in there. So the GST meeting, in general, a lot of tax-related anticipation ahead of the budget probably is going to capture the market's imagination today. Manglam.
Well, it's been a good week so far for bulls, because major indices, irrespective of the consolidation, have hit record highs. The Nifty Bank has broken out, and the kind of supply that was absorbed this week, full of block deals, large paper being there. So all of that said and done, it's been good. But now that it's moving towards that 23,600, 23,650, there is some supply on the Nifty. And that's something that we've seen in the last couple of trading sessions as well. June 19, the Nifty was, the high was 23,664. From there, it closed about 150 points lower. We had June 20th, which was yesterday, the high 23,624. The Nifty closed about 60 points lower from there as well. And there are reasons for supply at higher levels because of this overbought nature of the market. Where do we see that? Well, one, we have the put-call ratio, which has moved to around 1.3. Typically tops out at around 1.4, telling you when the market is overheating a little bit. And secondly, the consistent purchase from FIIs in index futures. Yesterday as well, close to around 1740 crores, adding 16,000 longs, covering about 13,000 shorts, telling you that there's not much scope for further short covering, because they started the series with 13% long exposure. Now that has inched all the way higher to 57%. And if you take a look at the net contracts in the last 4 sessions itself, it's moved from a negative 24,000 to a positive 72,000. So swing of almost 1 lakh contracts built on the long side itself. We are preparing ourselves for next week, which is also the week for expiry for the June series. And out there, the call writers are active at 23,600. Put writers are active at 23,500. What does all of this imply from a range standpoint? Option writers for the next 1 week expect a range of 23,400 at the lower level to 23,750 for the higher level. What could be the factors that could either break out the market of this range or let it be lower than this range? We have the Nifty Bank, which has broken out this week, 3.5% higher for the week itself, led by HDFC Bank. IT stocks will obviously be in focus. They showed some signs of life. Yesterday ended at the high point of trade, mildly in the green. So today, Accenture results, like you all pointed out, would be important. And thirdly, we are seeing a fresh round of buying in a couple of these commodity names. So Nifty Metals is something that we'll be keeping an eye out on. Typically, metals rally lasts for beyond just 1 day. So whether that continues today or not is something we'll be watching out for. And then you have Birlasoft and GNFC, which have entered the F&O ban. India Cement, SAIL, Chambal Fertilizer, all of them have exited F&O ban. So individual stock moves will continue.
Okay, individual stock moves will continue. So let's kickstart the day then. On the equities front, you have Sanjeev Prasad of Kotak Institutional Equities, who says that big market corrections typically stem from 4 areas, which are macroeconomic challenges, leverage issues with banks, companies, government, households, political or social instability, and lastly, natural or man-made disasters such as the pandemic, war, etc. COVID-19 pandemic was the latest one. However, he says he does not see any issues on the first 3 points as imminent sources of risk for the Indian market, and the fourth is impossible to forecast anyway.
One more equity call. Vikas Jain of CLSA says bottom-up data shows that domestic mutual funds have continued buying HDFC Bank and taken up their ownership in the company by 80 basis points. He says it is reasonable to assume that some of this may have come via selling by FPIs, and this may create the required foreign room and take up the weight of HDFC Bank by 4 percentage points in the most popular FPI benchmark by the end of August, exactly the point we were discussing yesterday. Vikash says this would obviously drive $4 billion of passive buying in HDFC Bank. He adds that given attractive valuations, strong earnings growth, a favorable near-term macro with no imminent rate cut, we expect FPIs to buy more banks to bring themselves back to overweight. He says private banks remain the biggest overweight in our CLSA India focus portfolio.
Right, let's get you some money market views then. Lakshmanan V of Federal Bank says the Indian rupee traded at an all-time low of 83.67 per dollar due to increased dollar demand and declining Chinese yuan. Earlier in this week, he says the dollar paired gains following disappointing retail sales data but rebounded later on account of Swiss National Bank lowering interest rates to 1.25% and Bank of England holding interest rates at its June meeting. He also says inflation figures for the Eurozone and United Kingdom were consistent with expectations. In the coming sessions, he expects the USD-INR pair to trade in a range of 83.4 to 83.80.
Okay, and on the bonds, Lakshmanan says government bond yields ended flat for the last 3 consecutive sessions amidst lack of significant cues as the market awaits minutes of RBI's latest policy meeting. He says market also remains focused on foreign inflows with just a week to go before India's bonds are included in JP Morgan's emerging market debt index. He adds coming sessions could see the 10-year benchmark bond yield trade in a range of 6.9 to 7.05%.
All right, well, let's get the market conversation going. Our first guest on the show this morning is Fu Keen Yap, Senior Investment Strategist at Standard Chartered Bank. Fu, great to have you with us on the show. Happy Friday to you. So what do you make of, the market setup here in India? Let me start with your view on the home market here, because it's had a dream run. It's digested all the election-related volatility. And now bank stocks in India have finally started performing, though, of course, the overall index itself is at an all-time high. Do you think the Indian market is good for more, or do you expect some consolidation?
No, we do like it over the 12-month outlook. I mean, within Asia, I got to say, India is our preferred market at the moment. As you said, the election news has been well digested. We're really looking for the earnings growth to be driving the market. We think that's going to be continuing, and it's positive. So, I mean, India is our preferred market at the moment. Look, in the short term, when markets make all-time highs, it's natural to assume some consolidation. But we've looked at it in the past, particularly in the US, when the market makes all-time highs, more often than not, the next 6 and 12 months average and median returns are actually positive. So it's nothing to be fearful about. When market makes all-time highs, the momentum tends to continue. And India, as I said, is our preferred market in Asia at the moment, driven by solid earnings growth we expect to continue.
Okay, so India is your preferred market in the Asia setup, driven by solid earnings growth. Got that. But do you think that India can replicate the kind of gains that it saw last year? Because, it seems like now we're settling into some sort of consolidatory phase. There's not too many cues. I mean, the market already has sort of priced in the government coming into power for the 3rd time. There is, of course, a budget, but not too many people are expecting any major changes this time around. So your thoughts on whether we can replicate the gains that we saw in the last 1 year?
Yeah, look, I mean, I'm not going to quantify it. I mean, our view is that India can outperform. But if you look at the earnings growth, if you're looking at mid-teens growth, right, if your multiples and your valuations stay the same, the earnings growth is just going to drive the market higher. And we're looking at a mid-teens kind of earnings growth. So even if valuation stays there, and we think that globally, we're not so worried about valuation now, given that we've moved into a rate cutting cycle. With more major central banks cutting rates. And as that happens, we get less worried about valuation because we think it can sustain. So even if valuation stays the same, the earnings growth will propel it. And I say mid-teens kind of earnings growth, is very positive. For India, markets like US as well is another one that we do like for the same reason. Not so worried about valuation, but because of the earnings growth that's going to be driving the returns.
Right. I remember you speaking about a barbell approach to investing in India, which is on the one hand, you look at industrials and cyclicals. On the other, you look at defensives and then deploy money in the large caps itself. How has that strategy evolved over the last couple of months? And what are you looking at now?
Yeah, that's right. Thanks for that. I mean, we are still looking at a barbell view. I think on the more cyclical side, we still like industrial. We think the expansion in terms of the capacity will continue. We do like discretionary as well, consumer discretionary, and this to tie with the very long-term trend of the improving income for the middle, for the market in India, and that's going to be helping the consumer discretionary. And then on the barbell side, being more defensive, we have healthcare. So these are our three preferred sectors within India. From a size or style kind of perspective, we do like large caps, given that they have a bit more of a buffer and a bit more solid. So we do prefer large caps within India.
Yeah, large caps haven't run up as much as the smaller stocks. So let's see if that trade plays out. Fook, what's the risk to your overall call? Positive on India, positive on the US. What is the biggest risk?
Yeah, no, thanks for that. I think the risk really is inflation does not come down as we expect. We think there are signs that it's been coming down, and the last two prints in this US CPI have been coming down. We're going to watch the PCE next week. But we expect that to be on a downward trajectory, which really paves the way for the major central banks to be lowering interest rates. So that's one. And the second one really is the traditional indicators of a recession, like your inverted yield curve is still there. The leading economic indicators, things like the job openings data in the US, that's been softening a little bit. That is something that we are watching very, very closely. We still have about a 20% probability that we still get a recession. That is something that we have to watch out for because the risks are there. Like I said, the traditional indicators of the yield curve, it is still there, although it's been there for some time, but something that we continue to watch.
Okay, Fook, thanks a lot for joining in. Appreciate your time here on CNBC TV18. That's the word coming in from Standard Chartered Bank. They say India is their preferred emerging market within the basket. And they also talk about how they're not too worried about valuations at the moment globally because they believe earnings are picking up across the board and nothing to be fearful about despite the market being at record highs. Let's slip into a quick break. On the other side, our entire research team will be joining in to help you with the top 10 stocks that you need to watch out for. Stay tuned.
We are hoping to see the credit growth in the range of about 14 to 16%, and we expect to see very broad-based growth in credit, right from SME, agriculture, retail, and also in the corporate. As far as we are concerned, our domestic NIM last year was 3.43. So I expect our domestic NIM should be around the same number.
The shock and awe story of NVIDIA, Shankar. I mean, today the most valuable company in the world. For most of us, the big breakthrough moment as far as generative AI was the ChatGPT moment. But for you and for the folks at NVIDIA, I mean, when did you start to think that this was on the verge of an explosion?
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like where did NVIDIA come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and
Welcome back. So the global cues are slightly mixed. Let's now talk about stocks that you need to watch out for in today's trading action. Our research team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning and happy Friday to all of you. I guess IT is going to be hitting the headlines with those Accenture numbers. So, Hormaz, why don't you take it off?
As they say, no bad news is good news, and that might just happen for IT stocks today, because unlike the last time when there was a massive guidance cut from Accenture, it's just a narrowing of the range this time around. But I'll start off with the revenue number first, which is $16.5 billion. There's a down 1% in US dollar terms, but 1.4% higher when it comes to constant currency terms. And speaking of the guidance, they have raised the lower end of the guidance, but cut down the higher end. So it's a 1.5 to 2.5% guidance now compared to 1 to 3% earlier. But the new bookings was a big positive as well. $21.1 billion, up 26% in constant currency terms. So that's a positive as well. In the earnings call, the management also said that they are seeing strong demand for digital manufacturing and engineering services. But on the discretionary spending side, they said that it still remains constrained, particularly in the smaller projects. Now, the Indian IT stocks in the US reacted positively to these numbers. Accenture itself ended 7% higher, but the Infosys ADR ended 2% higher. The Wipro ADR also gained 2.5%. So a positive read-through expected on these stocks. Expect them to open in the green.
All right, and weaker rupee also helps the IDE pack, and we're seeing decent traction in the IT pack in yesterday's trading session. Expect that to continue. But it's the era, not the season of block deals. Let's go across to Vivek. He has something on Aster DM. Vivek.
Well, that's right. Good morning. So, it's another day of another block deal that's in the offing. So today it's the turn of Aster DM Healthcare. So, as per the term sheet we saw for the block deal, Kotak Securities has gone ahead and launched a block deal where the seller is actually a private equity investor called Olympus Capital Asia Investment. They hold 10.1% stake in the company. They intend to completely exit their stake in Aster DM today. The base size of the block deal is 5%, but the upside option indicates that there could be a possibility that they could be completely exiting their stake via today's block deal. The size of the block, with the upsize option is 1,670 crore, and the floor price for today's block is 331 rupees a share, a little over 7% discount to yesterday's closing price. If in case, the entire block deal goes through, it will be a cleanup trade and the overhang will go by. But it will be important to see, what is the kind of demand going with the red at open as far as Aster DM is concerned.
Okay, thanks a lot for that. Well, let's go across to Vamakshi. She's standing by to talk about Cipla, GE Power, Time Technoplast and GIC. So she has her hands pretty full this morning. Vamakshi, hi, good morning.
Well, good morning, Sonia. Let me first start off with Cipla. The company has signed a non-exclusive patent license agreement with Takeda for drug vonoprazan. Agreement has been signed for the Indian market, and the deal is meant to commercialize the drug in India under Cipla's own trademark brands. So, bode well for Cipla. Expect the stock to open higher today. GE Power is the next stock that I'm focusing on. The company has received a LOI from NTPC GE Power Services worth 243 crores. Time Technoplast, watch out for this counter as well, and that is because they've managed to receive the final approval from the Petroleum and Explosive Safety Organization. This is for manufacturing and supply of high pressure Type 4 composite cylinders for hydrogen, and in fact it is the first company in India to do the same. So expect the stock to open higher on the back of this news flow. And lastly, let's watch out for GIC Housing. A malware attack has affected some of the end user systems of the company. They said that they have immediately isolated the affected systems from the network to stop further impact, and the company, however, has not observed any operational disruption. But on account of this, expect the stock to open lower today.
Malware attack. Okay, doesn't sound too good. Vahamakshi, thank you so much for getting us the details on all of those stocks. Let's now go across to Upasna. She's got a couple of them on her radar as well. Upasna, good morning.
Thanks so much for that. Good morning. First up, let me start with JM Financial. SEBI passes order asking the company to not act as a lead manager for debt issues till March 2025. Well, SEBI's orders after the interim one, barring JM Financial from acting as a lead manager for debt issues. Well, in addition, JM Financial has voluntarily agreed to stop IPO financing business. Well, expect the stock to open in green as it points to resolution of regulatory issues. Next up is Welspun Specialty. The company has received orders from Gujarat Pollution Control Board directing the company to cease operations at Bharuch unit with effect from 5th of July 2024. Next up is Britannia Industries. Even that will be in focus as the permanent workers of Tara Kolkata-based factory have accepted voluntary retirement scheme offered by the company. And lastly, Shoppers Stop will also be in focus as company starts operations at 3 new stores located mainly in Vadodara, Gurgaon and Surat.
All right, Upasana, thank you so much for that. In case you missed the entire list, let's give you a quick roundup. Stocks with positive news flow today. We have IT stocks, Cipla, GE Power, Time Technoplast, JM Financial, Britannia Industries and Shoppers Stop. Stocks with negative news flow today, Aster DM on account of that large trade, GIC Housing and Welspun Specialty. All right, those were all the stocks that we will be watching out for in today's trading session. But all things commodities, Manisha Gupta joins in with a roundup of all the action. Manisha, crude spiking overnight for the second day running, metals in focus too.
Oh, yes, absolutely. I'll start with crude oil prices, where we are trading at a 7-week highs right now. We are holding above $85 a barrel, and there is support coming in from all sectors. The major thing is the drop in U.S. inventories, whether it has been crude, gasoline, distillate stocks, and that tells you that the demand on ground seems to be picking up, especially as there is the summer seasonal demand, driving demand as well, supporting prices. In the metals as a sector as well, weaker than expected U.S. economic data has led to a decline in U.S. dollar, and that had led to silver prices gaining by 3% overnight. Gold was up 1.5%. Copper and zinc prices gained up by a percentage point overnight as well. We already have had the ECB and the Bank of Canada cut rates, and the markets are anticipating that within the month itself, the Bank of England, Swiss National Bank would cut rates and the other banks would follow suit. And that's exactly what is supporting the metal prices as of now.
Okay, thanks a lot for that. Well, let's do one thing. Let's take a quick break. On the other side of the break, Amnish Agarwal of Prabhudas Lilladhar will be joining in for some fundamental stock analysis. Do stay tuned in for that.
Global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
Steel, we are one of the best prime location of a steel asset, which is in Jharkhand, near Bokaro, is in the Bokaro. We have a proximity of all the raw material, iron ore and the coal. We are proximity of all the railways. We are proximity of all the gas. We have put this asset on the basis that if we get 1.2 billion per million ton, we have a 3.5 million ton of plant, which at the moment we are producing close to 2 million. 3.5 will be by end of this year. We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
Welcome back. You're watching us here on Bazaar Morning Call. The GIFT Nifty indicating a positive start. A lot of stocks on our radar, but let's focus on the metal space. The metal stocks have been buzzing lately, with Hindalco, JSW and Tata Steel being among the top Nifty gainers. Yesterday, we had commentary coming in from Anil Agarwal of Vedanta as well. The metal index is up 25% this year so far. So what's the outlook on the sector? Amit Dixit, who's the analyst at ICICI Securities, joins us now. Amit, stocks have begun to do well. I was going through your note. While Tata Steel and JSW Steel are consensus buys, you believe that they can actually outperform what the street is factoring in as well. So if you could explain your rationale here and the upside risks.
Yeah, so rationale we have essentially on the domestic consumption growth. So see, for the first time ever perhaps in the sector, we are seeing that steel companies are adding capacity without adding any incremental debt. That is point number one. Point number two is that the domestic consumption growth is quite supportive. So if you look at last 3 years, FY22, 23, 24, we had a double-digit consumption growth. And despite it being the peak of election month in April, the growth in steel consumption was actually 9.5%. So clearly domestic growth is supportive. Number two, what we have seen that there is a slight disconnect between Indian prices and Chinese prices. And when I say disconnect, I mean the elasticity of prices. So therefore, we have seen that the domestic spreads actually have bottomed out in Q4 FY24. And Q1 FY25, as we look at it, coking coal prices have come off. So therefore, the spreads are likely to go up. Consumption is supportive, as I said. And there are companies who are adding volumes in FY25, starting with JSW Steel. So therefore, that makes us positive on the steel space as such.
Okay, so you're positive on the steel space. So JSW Steel and Tata Steel, Amit, what kind of upsides do you see on the stock? What kind of earnings upgrades are you looking at?
So in case of JSW Steel, so it is the company that is adding maximum incremental volume in FY25, which is around 2 million tons, and 6.5 million tons of incremental capacity is ready. So essentially, FY26 would be the year when you would see JSW going full throttle as far as the production stroke sales growth is concerned. So if you look at that parameter, I think the consensus numbers are still around 10 to 15% lower on EBITDA for JSW Steel. And therefore, from the current levels, we easily see an upside of around 25% in JSW Steel. Our target price is 1140 for the stock. As far as Tata Steel is concerned, quarter after quarter, you will see the positive earnings from the European operations, starting with Tata Steel Netherlands becoming EBITDA positive in Q1 FY25, and with the lower iron ore prices and coking coal prices supporting, UK operations would also become EBITDA positive possibly by Q3 FY25. Having said that, the restructuring of UK operations will also have a role to play, and we will see the concerns of the street that have been around the profitability of UK operations recede a bit, and that would be positive for the stock. Definitely domestic operations is as robust as ever.
What's your view on the non-ferrous space?
Yeah, so non-ferrous space, we are positive on Hindalco at this stage. We have a sell rating on Nalco. And the reason being that if you look at our overall picks or the kind of, the rationale behind the rating, we are positive on the stocks that have got incremental volumes or, the growth in terms of their sales volume. So to that extent, we see Nalco lagging, but Hindalco, we have a positive view. And the reason behind this is very simple, that Hindalco is adding downstream capacity in domestic operations. As far as the US operations go, we have seen EBITDA per ton hitting back at above $525, and it will continuously improve. Of course, a Bay Minute will come in FY27, but that is something for the later stage. And something that will also support aluminium prices in particular is the low inventory level. As far as the impending impending, tight market balance because of Chinese smelters not being able to ramp up production. So I think that is quite positive for the non-ferrous space. And I think we are quite positive on Hindalco in this particular gamut.
All right, and finally, before we let you go, do you track Vedanta? The stock did extremely well in yesterday's trading session, benefits from a whole host of commodities. We had the commentary coming in from Anil Agarwal as well, and he did speak about the impending demerger.
See, in case of Vedanta, what we see very clearly that the company is there are twin plans. One is that in aluminium operations, you would see continuous improvement in cost. As far as the zinc operation is concerned, you will see continuous improvement in volumes. So cost and volume in two discrete divisions will play a very important role. In fact, in case of oil and gas, after this ASP injection, we could see actually oil and gas production also ramping up. I think these are the positives for the stock. Operationally, we are quite positive on Vedanta as well.
Okay. Well, I just had one follow-up question. You said that one of the strongest stocks in terms of, adding capacity is JSW Steel. They're adding 2 million ton volumes in FY25, and you spoke about an upside of 25% on JSW Steel. I didn't get the upside on Tata Steel. What is the target price? What's the earnings upgrade that you're looking at over there?
Yeah, so in case of Tata Steel, our target price is 210 rupees. And in terms of earnings upgrade, again, we see that consensus has still not factored in the possible improvement in European operations. See, the proof of pudding is in eating. And therefore, we believe that a couple of quarters when, Tata Steel Europe will possibly show good result, we will find that the consensus also will upgrade its earnings as far as the Tata Steel is concerned. But on EBITDA front, I see an upside of around 12 to 15% on FY26 consensus estimates.
All right. Thank you so much for joining in, Amit, and giving us your view on the metal space. Definitely positive on a whole host of stocks out there, ferrous, non-ferrous, as well as Vedanta. Just keep an eye out on a couple of these fertilizer stocks. Yesterday, they were the big, gainers. In fact, all through this week. So names like FACT and RCF have gained nearly 30 to 40% this week itself. A big move is what we saw on Chambal Fertilizers as well in yesterday's trading session. For most part of this week, that stock was in F&O ban, is now out of F&O ban. That stock too is up 31% this week. And the biggest reason for these stocks to rally is the hope of a GST rate rationalization that may happen for the fertilizer space. And if that does come by, maybe the street is penciling in some hopes in terms of improved margins for these companies as well. The fact that monsoons in June are subpar, it's a little early to estimate. We had the management of insecticides join in yesterday as well. They said that demand at dealer level is still extremely strong because they're just awaiting for some rains. As that happens, the offtake is likely to improve. The big trigger with the GST, whether it comes by or not, is something that we will keep tracking. The other group of stocks that did well yesterday were the real estate pack as well. Case in point, something like in India Bulls Real Estate. That stock was up 13%, decent volumes as well. And, what the bulk deal data suggested was that there was purchase of a notable PMS player in this space as well. So India Bulls Real Estate was another stock that moved higher yesterday.
Okay, well, you also have Amnish Agarwal, Head of Research at Prabhudas Lilladher, who's joining in now to give us some cues for the day and what he's watching out for. Amnish, hi, good morning and good to see you in. I wanted your thoughts first on a name like Kotak Mahindra Bank because, I mean, not just Kotak Mahindra Bank, a lot of the banks have come back in a big way, especially private sector. And there are some brokerages like Macquarie who are very positive on these names. But what would your pecking order look like now in the private sector banking space?
Yeah, hi Sonia. We have been quite positive on private banks because if you look at the credit growth remains strong. The second thing is if you look at the valuations of private banks, most of these private banks are trading at, I would say, multi-year low price to book values. And if you look at the entire market context over the last, say, 6 to 12 months, almost all the sectors have got re-rated, and banking is one sector, and that to private banks, which are now trading at significant discount to their valuations, which makes them a fit case for re-rating from the current levels. So I think we continue to be very positive and constructive on private banks. Here, I think, as usually, the pecking order is usually the top 4 banks and your ICICI, HDFC, Axis, and Kotak. But I think in the current context, I think Kotak, which has corrected significantly and Kotak, I think the valuation it is trading at currently because of the, you can say, some restrictions on 811 and all. So I think these are all temporary, and I have not seen Kotak trading at these valuations in the last 5-10 years. I think Kotak seems to be slightly contra to some extent, but I think it seems to be a very good pick at the current moment.
All right, Kotak's a good pick at the current moment. Amnish, what about the fertilizer space? We were just talking about how these guys are, rallying anywhere between 30-40% in just the last 3 trading sessions. Hopes of a GST rate rationalization here coming in. Would you think that things would change fundamentally for these guys?
See, I see very little reason for any big exuberance in fertilizer stocks, because fertilizer, it's not a secular growth industry because your land mass is limited. And in some of these segments, particularly urea, we are using urea more than what it is required as per the land which is cultivated in India. The second thing. The third reason that, for example, urea prices are controlled by the government. Even if there is some rationalization of GST, it is not going to benefit the companies. The benefit may actually, you can say, go down to consumers to some extent, or to, you can say, it may be retained by the government because there is a big subsidy element in as far as urea is concerned. So I think it might be sentimentally positive, but I see no big reason that fertilizer stocks should rally the way they are.
Okay, no big reason that fertilizer stocks should rally the way they are. The other stock, I don't know if you track it or track this space, is CE Info Systems. It had a big move yesterday. It was up 20%. And these markets, automotive navigation, mapping devices, connected vehicles, is a very fast growing space. So Goldman Sachs had a target price of 2,800 on that stock. I don't know if you track this space or this stock, but any thoughts here?
We don't track this space per se, but we have looked at the company in the past. It's an interesting space, and the way your now connectivity is becoming important, the way you can say the maps are used and all that, I think the space has got a lot of potential in the long term. So don't have any idea about how the current financials are, how the valuations are.
In that space itself, there's Quick Heal as well. That stock was up about 9% in yesterday's trading session. In fact, in the last 1 year or so, it's tripled. We had the management join us saying that the shift that they've made from consumer to enterprise is something that will aid growth going forward. In fact, that will grow faster than the industry itself. Last couple of years, that's been the outperformer for them and has decent margins and, working capital sort of negotiations that they do with the enterprise players as well. Do you think this is a play right now? I mean, not showing in the numbers so far, but is there potential?
Yeah, you see, that's what I'm saying, that the segment sold a lot of potential. Because these are the, you can say, emerging segments where you can say a lot of investment is happening, a lot of, you can say, the current devices and all, they are linked to all these things. So the growth is definitely going to be there, valuations and all. I think that is something which one needs to take a call.
Okay, the stocks, some of the stocks in focus today could be the IT names, right? Because of what Accenture has come out with. Accenture's actually narrowed its guidance, so that is a bit of a concerning factor. They've also spoken about how discretionary spending has gone down for certain projects. Do you think IT will come back in a big way, Amish, or do you think there's some time for that?
See, IT is currently being looked at again like a directional trade, because the way markets have rallied, IT is another sector like banking where the valuations today, they are not cheap, but at the same time, they are not as expensive as some of the other sectors are. And so people have started looking at IT, that if your interest rates in US are cut, or if there is little bit of more pressure, then ultimately the stocks can give some returns incrementally from here on. But my sense is that before you start witnessing any recovery on the ground in terms of demand, before that, there might be a little bit of more, I would say, deterioration, because the interest rate cut in US is also related to the slowdown in the economy over there. So I think over the next 3 to 6 months, I see very little probability of any change in the commentary as far as your IT companies are concerned. The stocks may, you can say, give you directional returns or may give trade in between, depending upon the hopes, purely on the interest rates and consequently the revival in US markets.
All right, then final question on the consumption space. For staples, do you think the rally has fizzled out, the one that started about 2 weeks ago? And what are your thoughts on Zomato? Because now there are reports that, they are in talks with Paytm to buy their entertainment business, a good use of 1,500 crore of their, 12,000 crore plus cash on their books. is what the street is expecting on Zomato and the consumer staple space. What are your thoughts?
Okay, so Mangalam, the main thing is that consumer staples, we are already witnessing some green shoots, and this is, I would say, quite broad based across segments in the consumption space. But having said that, the valuations, they had not softened significantly, even if you look at, say, the situation which was there last month. Now, from there, as the market got a little bit of hint that the demand is reviving, volume growths are coming up, many of these stocks have actually rallied by even anywhere between 10 to 20, even some bit have gone by, say, 30-40%. So whatever, you can say, little juice was created, that has got absorbed too quickly. Now, incrementally, the growth rates are going to improve. The margins might remain healthy. But having said that, the stocks at the current moment, they don't offer anything which is very substantial on the plate. So I think the returns here on will come incrementally at a lower pace. That is one. Secondly, one will have to be very, very stock specific and stock picker in the consumption space to make money. Just thinking that some stock or some company is into the consumption space and it is going to give returns, I think that phase is definitely over as we stand today. Now, the question on Zomato, you see, Zomato is having a lot of cash. If you look at the way the stock has rallied in the last year or so, year and a half, it is not only because of their food delivery business, it is what they have been able to do with the Blinkit business. Now, the main thing is that today's valuations, they are quite rich. The visibility in the current businesses remains strong. And people are also looking at the Paytm, you can say that ticketing business, that might be little bit of, you can say, complementary from the viewpoint of channel, and it's more like a duopoly kind of market. So now it all depends upon if they acquire, what price they acquire, the way they go about. If you look at the overall online and internet space, I think that business may add value to Zomato in the long term. But then if you continuously, you can say, continue adding various businesses, then the entire structure of the, you can say, the company may change over a period of time. So it's more like a wait and watch that how, in what structure, in what form that business if they acquire, and what are the future prospects which pan out in that business.
Okay, well, let's do one thing. We will take a quick commercial break on that note. We have lots more to track in terms of individual stocks as well as the markets. Mitesh Thakkar and Shrikant Chauhan will join in for some technical trades in just a bit. Stay tuned.
After the NEET controversy, there's more bad news for students in India. I'm talking about 9 lakh students to be precise. The Education Ministry has cancelled the UGC NET exam, or the National...
Well, given the way the GIFT Nifty is going, it looks like it's going to be another day of consolidation, but which is not a bad thing. I mean, we're consolidating at record highs. So perhaps just taking some breather before the next leg up. Mitesh Thakkar and Shrikant Chauhan are joining us now to talk more about that. Gentlemen, morning to both of you. Mitesh, let me start with you. If this is the assumption, right, that the market is just buying some time, taking a breather before the next leg up, what's the way to approach it now, and what are the individual stocks you're looking at?
Good morning, Sonia. I think that looks like to the high probability case that the market is taking a breather and we should be preparing for more up moves. My understanding is that, the breadth is very positive. So since there's no fear or there's no immediate signal of a downtrend or a decline or a correction or a pullback, even if you don't want to trade the index, I think the opportunities will arise in individual stocks and you will have to identify which sectors. We have seen fertilizers do very well in the last 2-3 days. Sugar has caught up post that. So maybe the theme is slightly broadening as the market kind of finds its feet at higher levels. You can add, private sector banks to that and even a couple of IT names. So I think that's the way we'll approach the market. We are focusing more on stock specific trades.
All right.
Mitesh, hi, morning. So, okay. What are those stock-specific trades? And then I'll come to Shrikant as well for his view.
Morning, Surbi. I have 2 banking names, which is Kotak Bank, which was a buy earlier as well. Now can be bought afresh with a stop at 1724 for targets of 1790. Some breakout took place on the short-term charts of Bandhan Bank. So that's a buy with a stop at 203 for a first target of 220. That apart, Aarti Industries is a buy with a stop at 700. Look for a target of 745 here. And Berger Pace, after a long time, is showing signs of some kind of a pullback or a stronger reversal on the upside. So buy here with a stop at 502 for a target of 535.
Okay, so a couple of banks and Berger Paints. Got it, Mitesh. Thanks for that. Shrikant, hi, good morning. How are you reading the charts? Index, stocks, what's on your mind this Friday?
Good morning, Surbi. Good morning, everyone. I think Nifty is forming rising running correction, which is like, I can say, very interesting because if there is a minor positive news flow, we could see a major breakout in the market. So on the dismissal of 23,600 or 23,700, specifically 23,700, we are expecting market to move towards 24,000 on immediate basis. And if there is any correction, then close to 23,450, 400, we should look for adding positions. So broadly, we are bullish, but on the dismissal of 23,700, we could see a massive rally in the market. For the Bank Nifty, there also 52,000 is going to act as major resistance, but above that, the chances of hitting 52,500 or 750 would turn bright. So broadly, buy on dips should be the strategy.
Okay, buy on dip should be the strategy. Any individual stocks that you're looking at, Shrikant? What would your list look like today?
Yeah, Sonia, as we are expecting some breakout sort of activity either today or in next 1 or 2 days of time, we are of the view that we should look for adding a few index heavyweight stocks to our positional portfolio. In that, we like Reliance Industries. It is around 2950, 2945 levels. We saw some rally from the levels of 2800 to 2950, 3000 levels. Now it is consolidating, but on the dismissal of the range, we could see the levels of 3050 or 3070. So close to this 2950 levels, we should look for taking some long positions with a stop loss at 2900 with a target of 3000, 3050. And the other stock which we like is from the metal and mining space. And in that, Jindal Steel and Power is showing a lot of strength. There we are expecting 1100, 1125 in the near term. We can keep stop loss somewhere close to 1010.
All right, gentlemen, hang in there. We'll come to you in about 20 minutes. We take a short break now. Come back. On the other side, we'll have the pre-opening rate. And also with us will be Premchand Devarakonda of Electronic Smart India to talk about their business outlook going forward. Stay tuned.
is conducted for the post of assistant professors in universities and colleges. The reason is that the government feels that the integrity of the examination may have been compromised, and the CBI will now probe the matter. The shocking part is that the exam was cancelled within 24 hours of it being conducted on the 18th of June. It was conducted by the National Testing Agency in 317 cities across the country. Now, why was the exam cancelled? According to the Education Ministry, the National Cyber Crime Threat Analytics Unit of the Indian Cyber Crime Coordination Center received some inputs indicating potential compromises in the exam's integrity. It could be paper leak, it could be anything. The details of this have not been revealed as yet. The UGC NET exam is conducted by the NTA twice a year in June and December. Now, what happens next is the big question. Now, exams will be held again with the dates to be announced soon. There's no clarity on that yet. There have been reports of the examination paper being leaked, but the government has not confirmed this as yet. Remember, this comes in the wake of the massive NEET controversy, when nearly 24 lakh students appeared for the UG 2024 medical courses entrance test, which is also conducted by the NTA or the National Testing Agency. It happened on May 5th. The results were announced on June 10th, 10 days before schedule. But allegations of a question paper leak, grace marks to over 1,500 students and copying, mass copying, these allegations triggered protests across the country. Cases were also filed in various courts, including the Supreme Court, which has come down heavily on the NTA. Why are we talking about exam paper leaks and exam cancellations and such scams in states like UP, Rajasthan, Madhya Pradesh, Bihar, Telangana, among other states? It's because it's been a key concern for young voters in the age group of 18 to 25. An investigation by the Indian Express revealed that 41 paper leaks over the last 5 years in 15 states affected 1.4 crore job seekers who had applied for over 1 lakh jobs. Now, exams continued to get cancelled and recruitment for state-level government jobs got postponed. In UP itself, 3 major competitive exams.
Welcome back. So just about 15 minutes to go before we start getting the rates this morning. We've still got Amnish with us. Amnish, one sector that has seen a fair amount of profit taking, a little bit of a cool off this week, is actually the auto space. But I mean, who's to complain, because these stocks have done really well, the likes of Bajaj Auto, Mahindra and Mahindra. Would you buy anything in auto on the dip? And of course, going forward, there's going to be a lot of chatter around the Hyundai IPO. So just help us navigate this. Autos for the rest of this year, what would your picks be?
You see, auto OEMs have done particularly well over the last 6 months. If you look at, say, the rally which stocks like, say, Maruti, M&M, or all the two-wheelers led by, say, Hero or Bajaj, I think the returns have been very strong. Now, incrementally, for example, whether you look at Hero or some of these names, a lot of them depend upon the rural demand, which seems to be reviving to some extent. Now, incrementally, I think the money will be made in autos, but it will now come at a much more calibrated pace than what we have seen recently. Having said that, if you look at the numbers of companies, I think particularly the companies which are on the PV side, there will be definitely some impact of the Hyundai IPO also, because that is going to be a large cap stock, and the investors will get one more choice as far as your PVs are concerned. So I think incrementally, I think still there might be some juice left in M&M, because the commentary seems to be pretty strong. Tractors should see positive volumes this year. Their PV business is expected to grow in the, I would say, something like mid-teens in terms of volume growth. So M&M, even at the current juncture, continues to look good. As far as the two-wheeler stocks are concerned, I think post the kind of rally we have seen, there might be little bit of I would say sideways movement in them for quite some time. But if the monsoon plays out well and the rural demand revives more, then I think there could be something more. But now it will be at a much more slower pace than what we have seen earlier.
Okay, thanks for that. Well, just stay on. It's 9 a.m. and we're going to go across to Sneha Seth, who's the derivatives research analyst at Angel One, who's joining in now to help us with some cues for the day. Sneha, hi, good morning. What are you looking at on the index? It's been largely, a couple of days of consolidation. Do you think we can build on to our gains? And in the F&O market, what are the stocks to look at?
Very good morning. If you look at market, yes, we are seeing overall strength. FIs have been buying. At this moment, in fact, if we see, we are seeing some sectors doing quite well, which is helping Nifty to stay strong. Apart from private sector banks, now I believe metals yesterday has shown decent strength. The metal index was up nearly 2%. So I have a 2 buy call on metal space itself. The first one is Vedanta. This counter was up nearly 5% yesterday. We have seen volume-based buying here. I believe we have also seen writing in 470 put strike. So that is interesting. So I believe we may see an up move towards 504. So we'll recommend buying this counter with a strict stop loss of around 454, and the target expected will be 504. Apart from this, NMDC, this counter again was up nearly 4% yesterday. We have seen out of the money calls attracting decent positions. So I have a buy on this counter as well with a strict stop loss of 267, and we can head towards the record highs. So the target would be around 286.
All right. Thanks a lot, Sneha, for joining in and giving us your views. As we speak, in pre-open itself, we have seen continued traction in fertilizer stocks. So FACT, for instance, is up around 9% in pre-open. Devyani International, some traction building up in the QSR space as well. That's the other one, which is up around 5%. And we're seeing some purchase in GMR Power and Purvankara as well. There's a note which has come in on Bikaji from, I think, Nuvama. That stock up around 4% as well. So we'll just keep an eye. Early days in pre-open as well. So whether this sustains into the opening and beyond that as well is something that we will track. But Electronic Marts India is the stock on our radar. Seen a stellar run since listing. In fact, surged nearly 200% in the last 1 year. And they're the largest consumer durables retailer in South India with almost 141 stores in Andhra Pradesh and Telangana under Bajaj Electricals and Electronics Mart as brands. So what are the expansion plans? How's business shaping up? How's the first quarter been? We have with us Premchand Devarakonda, who's the CFO of the company, joining in to detail all of that. Thanks a lot, Premchand, for joining in today. The last 1 week or so, if I look at all the exchange notices that you've given, you opened 3 stores, one in Srikakulam, Andhra Pradesh, another in Tanaku, Andhra Pradesh, and the third one in Nizamabad, Telangana as well. The first quarter is seasonally the strongest quarter for you, and this also coincided with the election results that came by in Andhra Pradesh. So how has demand been so far? Basis the first quarter, what can you project for this year?
Very good morning to you. See, this first quarter, during the months of April and May, there has been a significant spike in the demand for cooling products. And of course, unfortunately or unfortunately, the monsoon started early this year as compared to last year. In fact, last year we had an extended summer till the 3rd week of June, whereas this year in the first week of June itself, the monsoon started. So in spite of that, we have seen a decent growth and on month-on-month comparison. And this year we are between the quarter, first quarter, year-on-year, there is going to be at least 15 to 20% growth in the top line.
15 to 20% growth in the top line by the end of the full year, is it? Or in the first quarter?
First quarter.
In the first quarter. And what about the full year? What are you targeting in terms of both top line growth as well as margins?
There is going to be, our target for the year has been 15% year on year. So, and the bottom line also will be in the same proportion.
Okay. So can you give us some sense on, I'm talking about the full year picture now, in terms of the product mix. What are you aiming for? Will it be more mobiles? I mean, if you look at the pie between small appliances, large appliances, mobiles, what are you aiming for by the end of this year? And, how could that impact the margin profile, your product mix?
See, our product mix has been more or less same for the last 3-4 years. So I think 1/3 of our sale would be coming from mobiles, and about 50% will be from the large appliances and televisions, and the balance will be from the others. So that is going to remain more or less.
And which of these categories is fetching you the highest margin right now?
See, large appliances obviously will have the better margin compared to the other products.
Okay. All right. One of the big triggers that everyone is eyeing is your expansion beyond just the south. You've about 21 stores in NCR right now. It's just about broken even. at peak, with the stores that you have right now, you could do about 450 crores of revenue. Last year, you did about 281 crores. So just wanted to know, what's the target revenue from NCR this year? How many stores are you likely to open? And what kind of margins are you factoring in?
Yeah. This year, we're targeting about, 100% growth in the top line. That is coming from the North Cluster. So last year, we closed at 280 closely. I think this will be double this year. That is our target. And that will definitely improve the EBITDA margins of NCR cluster.
So what would they improve to? Last year, it was just about 0.1%. So with revenues increasing, operating leverage coming by, how much can they be?
It will be around 5%.
Around 5%. So what does that do to your overall margins? Because large appliances are doing well. Last year, you did close to around 7%, 6.7, 6.8% on an overall basis. With this margin improving and large appliances improving, can we see your margins at around 7.5 to 8% for the company at large for this year?
See, our expansion plans are on. So as long as we keep on expanding year on year, I think improving on the company level EBITDA margin is little challenging, but it will be somewhere between 7 and 7.5.
7 and 7.5. Okay. You were talking about how your expansion plans are on. Before we let you go, can you tell us what exactly are the expansion plans? What's the store addition that we can expect in the next 12 to 18 months?
This year, we're planning to add at least 30 stores, out of which 10 will be coming from the North Cluster and 20 will be from the South Cluster. And for the next, for the year, for FY26, we'll be adding 25 more stores, out of which again 10 from the North Cluster and 15 from the South Cluster.
Sir, just a word on Andhra in specific before we wind up the conversation. I mean, after the elections, there's a lot of buzz around, infrastructure spends over there and how Amravati will shape up. What is your Andhra specific exposure right now? How many stores do you have in the state? And ground level, when it comes to business, do you see any impact? Or is this more headline stuff? I mean, will you be putting more money to work in Andhra? How many stores will you open there? Does anything change because of the election outcome is what I'm asking.
And it's too early to predict anything coming out of these, what are the plans of the new government. But our plans, our expansion plans for AP were already firmed up 2 years back. So we'll be adding at least 10 stores this year, 10 stores next year. And that expansion plan will be on, irrespective of the government policies.
Okay, we'll leave it at that. Thanks a lot for joining in. That's Electronics Mart with, their way forward, the expansion plans, etc. But we have a market to trade as well. So let's get straight to it. Mitesh is joining in to give us his 9-10 call for the day. Mitesh, over to you.
I'll go with a buy on Bandhan Bank for targets of 220.
Okay, Bandhan Bank is a buy. Well, Vivek, my colleague, is with us to talk about Aster DM and why you should be watching that name. Vivek, over to you.
Well, good morning. Just as we flagged off earlier, large block is expected in Aster DM. Almost 10% of equity is expected to change hands. Now, the seller is a private equity player, Olympus Capital Asia Investment. Kotak Securities is the broker to this particular deal. The base size of the block is 5.05% of the total equity, which works to 835 crore as the total size of the equity, going with the base price of 331 rupees a share. But there is an upside option where Olympus could be a clean out trader, given the fact that there would be no, stock or stake that would be left with Olympus after the entire 10% of equity changes hands. It will be interesting to see at what price this particular block happens at and what is the kind of demand that we're seeing. Going with the red at open, but it will be interesting to see if the entire stake does go through, then whether the stock can recover.
All right, Vivek, thanks a lot for that. So that is something we'll keep an eye out on. In pre-open, the stock is down about 4%. Just watch out for the consumer space. And the reason why I'm watching that is because Macquarie has written a note. They've said that the government has announced an increase in MSP, or the minimum support price for Kharif crops for this season, which starts from October 2024 to about September 2025. And the key crop for this season is paddy, which witnessed a 5% increase in MSP over the last, the last announcement that came by. And as a result of which, there is expectation for some boost coming in for the rural consumption itself. But also additionally, there is potential for budgetary support for consumption sector. And were that to happen, it may boost consumption even for urban masses. So if that were to happen, there would be an upside risk to same-store sales growth for the QSR space, and as a result of which, Jubilant Food, which was in their marquee sell list, is now taken out of that sell list. And the stock itself has been doing well. Last week, they opened their 2,000th Domino's store. We did speak with the management out there, Samir Khetarpal, who did believe that, the first quarter has done well, and this year looks a lot better than last year. And they also like Hindustan Unilever, Titan, and Asian Paints in the consumption space. So those will be a couple of stocks which will be on our radar too.
Okay, well, Hormuz is joining in to tell us about First Source Solutions and why you should be watching that one. Hormuz, over to you.
Well, Sonia, First Source had an analyst day and they have some key takeaways that they have shared. Nomura has shared some of those, and they're mentioning the fact that there has been significant progress made on their One First Source strategy, where they're aspiring for $1 billion revenue run rate by Q4 of FY26, which is the end of the next financial year, and 15% EBIT margins in the medium term. So this is the target that the company has set. Although First Source does not have a stated dividend policy, but they've been paying around 45 to 50% of their profit back to shareholders as dividend, is what Nomura has said. Now, what they also say is that the senior leadership has both time and performance-based stock incentives. Not very often that you hear for an IT company, but First Source has some net debt, and that is around 600 crore rupees in FY24, which according to them is largely for working capital requirements. And what they say is that while M&A, they haven't shared any specific details about that, but they said that this will mainly be for capability building and not for revenue accretion. So as a result of which, Nomura remains neutral on First Source Solutions with a price target of 200 rupees. There are 10 analysts have coverage on the stock, 8 of them have a buy recommendation, 2 of them have a hold rating. So Nomura still remains neutral, but the stock likely to open in positive territory.
Okay, got it, Hormuz. Thank you very much for that. Let's just look at the pre-open, the rates that we are finally getting. It looks like IT is going to be off to a good start. For what it's worth, the market seems to have read Accenture's commentary a little more optimistically, though they're not really singling out any major pickup in discretionary spends or demand, but nonetheless, IT stocks on the upside. By the way, watch out for, on the mid-cap screen, watch out for Time Techno. Wherever there's mention of green hydrogen, I mean, the market just completely shoots through the roof. And here is the company where I think they're doing some specific high-tech cylinders that are used in the manufacture of green hydrogen. They've got the government approval, so watch out for this stock. Let's see how this performs on the mid-cap screen. Otherwise, looks like, we'll be off to a positive start at least, with maybe about a 90-point pop on the Nifty.
Just a word on Time Techno, they've always been at the forefront of bringing out newer cylinders. So right now it's green hydrogen, where they're an industry first. If you look at the stock of the last 12 months or so, you would see a big pop, over 100% in the last 12 months itself. One of the big themes for them would be the acrylic cylinders that they had made. So all those metallic gas cylinders that we have for LPG, that will move into acrylic. And that's the other theme on Time Technoplast as well. So if that were to happen, then again, that's a big potential target, total addressable market. Add to that green hydrogen, the street likes all of this.
Okay, well, that's a big move there on Time Technoplast, 10.5% higher. But you know what, today it promises to be a decent opening for the market. So let's just wait for that. The pre-opening rates are suggesting a mild, okay, that's a big start actually, about 90-point start. The market, remember, last few days has been in consolidation mode, but with a positive bias. Yes, there's been a lot of intraday volatility, but by the end of it, the market has been holding on to a lot of those milestones. Global cues have also been stable. Yesterday, a lot of milestones were hit in the US markets. The S&P 500 briefly crossed the 5,500 mark. The Nasdaq hit an all-time high and then cooled off quite a bit. So global cues are solid. Our own markets flows have thinned out a little bit, but lots of specific stocks in focus. IT is one space that will be in focus after Accenture's numbers and the guidance. They've narrowed their revenue guidance, but some brokerages believe that the results and the commentary pointed to a few positive data points like strategy and consulting returning to growth. So let's see how that space shapes up. Here's the first take on the index. The Sensex is up 100 points. The Nifty is up 35 points. So looking good. The Nifty holding on to 23,600 now. And, the market breadth as well in favor of the advances. 1,400 stocks on the advancing side. The IT index is the one actually that's playing catch up now. 1.5% higher on the Nifty IT index, led by TCS, Infosys, Tech Mahindra, HCL Tech, Wipro. All these stocks trending in the green. You can see on your screen, a lot of the IT stocks are now, on the top, followed by names like Maruti, Cipla, Bharti, NTPC, SBI Life, etc. What's not doing well is the banking names. I mean, not doing well, just flat with a bit of a negative bias. So names like SBI trending a tad bit in the red. A couple of these auto names like Hero MotoCorp, Tata Motors, also a tad bit in the red right now. Nothing alarming there. Dr. Reddy's, Kotak, Reliance, ONGC are also a little bit in the red at the moment. But otherwise, it's not a bad opening. It's a decent opening, you'd have to say. The Nifty holding on to gains of around 50 odd points. And it's the IT index led by Accenture perhaps and the commentary. Morgan Stanley put out a positive note on Accenture as well. They say that some of these segments like strategy and consulting are returning to growth and there's a pickup in smaller deals. So perhaps the street likes that. And a lot of these IT stocks. I mean, it's interesting, right? Between banks and IT, something always performs, making sure that the market stays at these record highs.
Absolutely. I mean, today it's a little quiet for banks, but IT is really picking up that slack. Big moves. LTI, Mindtree, Tech Mahindra, HCL Tech, TCS, Infosys, Wipro. It is just a long list of movers. Let's look at some stocks on the mid-cap screen. The mid-cap index right now is outperforming the large caps. That's something we take. Some of the PSUs are coming back after taking a two-day break. RailTel, for instance, 2.5% higher. NBCC. These are early movers coming in. Lemon Tree is showing some price and volume traction. There's Granules on the upside. Not too much moving right now. Some of the, by the way, the fertilizer stocks, some of them are still excited. CE Info Systems, it was a pick by Goldman yesterday, and it rallied, I think, 20% the stock yesterday. And now it's putting on another 7.5%. So big move coming in over there. What else? Time Techno, we just discussed the stock. It is up about 10% straight away. Some buying on Shakti Pumps continuing from yesterday. So some interesting names. But I have to say that, it's not exactly bursting off the charts. It's select in the mid-cap space and the Nifty trying to build on the gains now.
Not too bad, actually, because, it appears like that of a relay race where one sector tires out or maybe runs its course and thereafter passes the baton to the other one. And that's exactly what's happening between bank and the IT space, keeping the Nifty afloat around 23,630. Remember, there's also the zone where the Nifty has seen a bit of supply for the last couple of trading sessions. So whether it sustains here or not is something that we'll have to keep an eye out on. The broader market's doing extremely well. We have nearly 4 stocks advancing for every stock which is declining. So on the NSE, 1,600 stocks in the green, 400 stocks in the red. Among the stocks in the green are the mid-cap IT stocks, and they're surging. Look at something like a Happiest Mind, which is up around 6%. First Source is up as well. Hormaz did tell us about that. We're seeing traction in Persistent and Coforge, along with L&T Tech and Emphasis too. The ones which are not doing particularly well, we have seen some profit taking in Chambal Fertilizers. Opened higher, and from there itself, it's corrected about 6% from the highs. Now it's exited F&O ban, and maybe the street is looking at booking some profits ahead of the GST meet event tomorrow in names which have run up. So RCF, for instance, is off highs of 5% from the highs, and we're seeing the same fate for something like a Fact as well, which is off about 5-6% from the highs after rallying about 30-40% in this week so far. Among the broader market stocks which are doing well, we have IIFL Securities right off the blocks, up around 9%. So that stock's continuing to surge. And we're also seeing some traction in the real estate pack, which continues. So Purvankara, for instance, we have India Bulls Real Estate, second day running, seeing some traction. And in the snacking space in particular, we have Bikaji, which is higher. Edelweiss, Nuvama has initiated coverage with a target price of almost 885 rupees on that counter. And looking at Bikaji, we have another snacking stock, which is Gopal Snacks, which is gaining traction as well. So both Bhujia and Gatia are doing well this Friday morning, if you were.
Getting very hungry, getting really hungry now, talking about Bhujia, Gatia and all of that. Haven't even had breakfast here, but yeah, big moves coming in on so many of these names. By the way, big moves in IT. Just look at that. I think it's really the star of the show right now. TCS, I think, is up almost 2.5%. HCL Tech is up 2%. And, we've been ad nauseum harping on the fact that IT has underperformed so much. At some point in time, it's going to come back into action. And lo and behold, Tech Mahindra is up 3% right now. So big moves coming into the IT names, especially perhaps after what Accenture said. There was no bad news this time around. There was no major negative commentary. If anything, the commentary has improved from Accenture's front. And I think just clinging on to those, straws are the IT companies, and big moves. Of course, it's also a valuation game, right? There's perhaps a valuation catch-up as well that some of these underperformers are doing at the moment.
Absolutely. So technology indeed is the spot. You picked anything else, Pankaj?
Just a word on Aster DM. The 9% equity which was supposed to change hands has happened. The block deal has happened. the stock actually opened much lower. The deal was done at a discount of about 4%, but the selling is done has made the stock recover a fair bit from the lows and now was virtually into the green, just about flattening out. So Vivek had told us that, once the supply gets absorbed, maybe we can see a bit of an up move, especially given the valuation discount that it trades to as compared to all the other hospital stocks.
Absolutely. So that's Aster DM, another big deal done out of the way. By the way, HPCL and BPCL, they are ex-bonus today. So watch out for both of those stocks as well, which is why the price could look a little different. That's corporate action that's playing out on both HP and BP, which is why you're seeing that big downtick on the price. Let's get some perspective then on this market with Pankaj Tibrewal, co-founder and CIO at Ikigai Asset Manager. Thanks very much, Pankaj. Always a pleasure to have you on our shows. So yeah, I think this market has defied all odds. It's been defying gravity. It's charging higher. But I think the question that most people are now grappling with, how do you put fresh money to work? Whatever's already invested, people are enjoying and, going ahead with the ride. But buying a fresh one wonders if you should wait for that dip, what to do, what not to do. And the dips rarely come. Your thoughts on how one should be approaching things from here on?
Good morning, Surbi. Yes, absolutely, you are right. Post the election day fall, we have seen markets make a very strong comeback and cross the all-time highs. However, at this stage, I think it's very important for all of us not to get carried away because mistakes are made at the top of the market. And we believe that there is froth in many pockets. We were just looking at some of the delivery data of some of the best performing stocks across the board. And it's startling to see that in many stocks, the last 6 months cash delivery volumes exceed the free float market cap. And this time, the entire rally is driven by non-institutional investors. And whichever pockets and institutional investors I speak to, global or local, I think everybody agrees to the fact that there are many pockets where you can't justify valuations. And it's basically moving because of non-institutional investors. And I think markets are at a big high. I think today we should take this opportunity to talk about looking into the history, what could be the risk at this stage in the market. And at this stage, I think it's very important for every investor to have a clear view on the risk in the portfolio, as well as in the stocks they are carrying. Otherwise, mistakes are made at the top. I think a few things which you need to understand that today the contribution of mid and small caps as a percentage to overall market capitalization stands at about 36%. And their profit contribution is about 25%. So the divergence is clearly there between the profit as well as the market capitalization contribution. The second point we need to understand, Sophie, is that today the investors are expecting a very strong earnings growth. When we do a reverse DCF for a lot of companies, we believe that market is expecting unreasonable earnings CAGR for the next 15, 20 years, which looks difficult from our side. Third, when we look at and dissect the fourth quarter earnings, summary of NSE 500 companies, there are 87 companies which are banking and financial companies. There are 413 non-banking and financial companies. And the entire growth last quarter was carried away, was done by banking and financial services, which grew at 24%. And the non-banking and financial services, which is largely the larger part of India, grew just at 7.5%, 8%. So we believe that the earnings growth after a long time is starting to slow down. Last year, NSE 500 companies grew at 30% from a FY23 base. I think this number could be about 14-15% this year. So I think we need to take cognizance that earnings has started to slow down in the broader markets. And I think valuations are not factoring in that. Going into the history, there are 4 kinds of risks which generally comes through. The first is through macroeconomic instability, which we saw in the Asian crisis, which we saw in tapering tantrum. The second is the leverage part on the households, government, corporates. The third is the political and economic instability. And the fourth is the man-made or natural disasters, which we saw in COVID. The first three obviously are looking good for India. There's no problem. Fourth, nobody can call out. So I think risk today, nobody can foresee today. But from a valuation perspective, government policies, taxation, the murmurs which are going around on capital gains, I think something could disrupt, and valuations are something which we should not ignore at the current juncture today.
Okay, so we shouldn't ignore valuations at the current juncture. Got that. Pankaj, hi, good morning, and good to see you in after a while. We have a big event upon us, which is the union budget, right? Do you think there's anything in the budget that can be market moving? What is your ask from the finance minister this time around? Because considering that they've come back to power now for the third time in a row, I'm sure there's some aces up their sleeve. But from a market standpoint, what are you expecting?
Good morning, Sonia. I think just in a month's time, budget will be around the corner. Look at the data. In the last 4 to 5 years, the spend on rural has been absolutely flat, which is about 4 lakh crores. The direct expenditure of central government on rural schemes has been flat at about 4 lakh crores. Looking into the election verdict which came, and we analyzed the data very carefully, the government lost about 60 seats in the rural areas. And that's a large number. Our sense is that probably a part of that expenditure, which has been flat for the last 4 or 5 years, will see an uptick. And on the same breath, the capex expenditure, which was at about 3.5 lakh crores, is expected to be 11 lakh crores. So I'm not saying that the capex expenditure would see a dip, but it could see a moderation. And a part of that capex expenditure could be shifted to rural. And I think on that side, consumption could see a comeback. Our channel checks across last 1 to 2 months have been suggesting that there's an uptick in the rural consumption space already. And though companies are not very confident whether it will be sustainable, but our channel checks across the board is suggesting there has been an uptick on the rural side. And I think that's going to continue. Also, we believe that the consumer durable space probably can make a comeback. We have seen very strong summer, and that's likely to sustain going forward as well.
Okay, so you're positive on both rural names as well as urban discretionary consumer durables names as well. You did allude to valuations being stretched in a lot of parts of the market. What are your thoughts on relative valuations in the consumer space right now? Is there a lot of upside? How do you play this? Do you play this via the staples, or do you play it by some new age themes? How do you go about this?
So obviously valuations on a relative basis, are looking not so great across the sectors, except banking, maybe pharma, maybe some of the consumer rural discretionary names, and so on and so forth. But one thing which is a very interesting data point, over the last decade, the consumption in India has gone through a massive change. The composition of consumption today, which includes smartphones, wearables, OTT, mobile data, is now about 6.5 lakh crores spent, which was not there a decade back. So when we talk about consumption, we also need to take into account these categories which were non-existent, a decade back. And mind you, this is not a small number. It's twice the size of the car market in India and 6 times the size of the two-wheeler market in India. And hence, we need to see consumption on a holistic basis. I believe that there has been a rise, and there will be some shift from these categories to the main staples and some of the urban discretionary names, especially the consumer discretionary names. We believe that the non-linearity in margins could be very high. For example, in consumer durables, the profit pool is at a decadal low. And I think that will limit competition going forward. And many players, we would see non-linearity in margins. Margins are at rock bottom today. And once top line starts growing, margins will automatically see a comeback.
Okay, I wanted to come back to the first point that you were making about how you're a bit bearish on the market. You think earnings could slow down a bit. So how are you positioning yourself? Which are the sectors that you would be avoiding now because of steep valuations? And which are the sectors that you like? I mean, you spoke about how consumer durables may make a comeback. But overall, how are you positioning yourself?
So, Sonia, I think there are 3-4 sectors where we believe that there's a lot of margin of safety. The first one is private sector financials. we believe that they have been continuously growing, delivering good numbers. And there is reasonable margin of safety when we look at their franchise and when we look at the growth potential ahead. The second is pharma. I believe that pharma, both from domestic and US generic side, is offering decent margin of safety in terms of valuation, and on a PEG basis, which is for the growth per unit of growth, what price you are paying, seems to be reasonable. The third is the entire consumer pack. I think we need to be careful on that side in terms of many names still at punchy valuations, but there seems to be growth returning back into that sector. And that's where incremental, opportunity lies. And last but not the least, I think some of the industrial names which are linked to private capex. Having said that, what to avoid? I think clearly the list is loud and clear. Some names where there's low free float, names where there's business to government businesses, but factoring in huge expectations and small change in policy can derail them in terms of overall growth trajectory. And making sure that we understand what we are paying for the next 10, 15 years for our stock in terms of valuation. So the no-go list is very, very clear, and we need to avoid them and make sure that over the next 12 to 18 months, we navigate this market carefully. I think the important point today is not to focus too much on upside immediately. I think the focus should be preservation of capital over the next 12 to 18 months as we move ahead.
All right, preservation of capital over the next 12 to 18 months by being in places that offer margin of safety. Pankaj, in light of all of this, there are always some new themes that are playing out in the market. Is there anything that you found which you think is interesting and this is a theme that could maybe generate some alpha over the near future?
Absolutely. The consumption basket, which has been new completely, the 6.5 lakh crores, which includes so many other new categories, probably will see itself getting listed over the next few years. And I think that will be an interesting space because consumer preferences have been changing in terms of spend. And any company riding that will be an important portion. Second is the most important is the premiumization, which has been growing in India. And I think companies offering on that side may come for listing over the next 18, 24 months. And I think what is interesting in this market is that good quality companies are getting listed with good business models. And I think that will increase the market breadth as you move forward. And the third is on the tech side. Many of the companies are non-listed today, and some have got very strong business models. We are eagerly waiting for some of them to get listed as you move ahead.
We have the Stanley IPO listing today. I don't know what you think of it. Then there's Hyundai, some of the bigger ones that we are talking about. There's Ola Electric, a lot of the others. Could you name some of the IPOs that you are eyeing this in the next 12 to 18 months?
I won't go stock specific, but generally this will be the focus where we would deploy incremental capital on the new listing. Also, I think that there are many names in the listed space also, which are offering a decent opportunity if you take a 5-year, 10-year view on them, especially on the premiumization theme.
Okay, Pankaj, thanks a lot for joining in and have a great day, have a good weekend. Well, that's the word coming in on the markets, which, by the way, are holding okay. I mean, holding well, actually. The Nifty is up almost 70 points. It's picked up in the last 10-15 minutes. And it is pretty strong. I mean, look at the moves in the IT space and you'll notice that's really the space to be right now. Let's slip into a quick break. On the other side, we'll connect with Anil Gupta, the chairman and MD at KEI Industries, to talk about the worker strike at 2 of their plants and their business outlook. Stay tuned. Well, as promised, we have the management of KEI Industries now with us. The company announced that its plants at Rakholi and Chinchpada were partially affected because of a production stoppage, because of a labour strike. To talk more on this issue, Anil Gupta, the chairman and MD at KEI Industries, joins us now to talk about that. Mr. Gupta, thanks for joining in. Can you tell us how is the situation right now as far as the labour strike is concerned? When will the situation normalize? And is there any kind of financial impact that you've seen on business because of this?
Good morning for inviting me to the show. The partial strike which has been affected to two of our plants is now withdrawn. Our production is fully restored since yesterday evening, and actually the production started since yesterday afternoon itself, and everything went normal and it is normal. We have already communicated to the stock exchanges about the normalcy of the production and restoration of the production. And it has a very little impact. Close to around 10 crore worth of production is lost in 1 day and 3-4 hours, and we'll make it up.
All right, so just about 10 crore worth production lost because of this strike, so not much in your overall scheme of things. In any case, if you could, reiterate your guidance for this year for the viewers, what kind of volumes are you gunning for? Is there any price hike that you're looking at in the cables and wires business? At the same time, the first quarter, how was that for you? And how is that in line with your guidance that you've given for the full year?
The first quarter, is it in line with whatever guidance we have given in the beginning of this year? And I think everything is going normal. The demand is strong. We have a very strong order book position from domestic markets as well as export markets. And I think that demand traction will continue, considering the capex push and investments coming in the industrial projects, real estate, etc. Similarly, very strong demand from our export customers as well, our export markets.
Okay, that's interesting. So, can you tell us this B2C business, you were aiming to increase the B2C business share to 50%. Currently, it's about 45-46%. What is the kind of growth that you've seen there? What's the kind of demand? You just spoke about how real estate, etc., is picking up in a big way. But tell us, what would the contribution be, not just in the next 1 year, but over the next couple of years from B2C? And will that lead to better margins?
See, we aim to, reach to 50% level by end of this financial year. In fact, since all our export business is, growing, and that we classify into B2B. So, and B2C we classify only for our domestic business. So, in fact, the domestic business through B2C should exceed 50% by end of this financial year, according to our estimation. And as far as margins are concerned, I think we have already given a guidance of close to 11%. We will try to improve upon that, but I don't want to, change the guidance.
All right. You, for the top line, had given around 15 to 16% guidance for the year. You believe that that is also, likely to be unchanged for the now?
Yes.
All right. What about, your EPC business? You said that you are looking to bid in projects worth about 500 crores, or you haven't bid much. You've looked at constraining that business to just about 500 crores. Can you tell us why exactly is that, and what's the outlook for this business going forward?
You see, this business can be grown to any size because, there are ample opportunities and ample tenders in this space. We can try to improve it by a few, 10-20%, but we don't want to ramp it too much because of the, normally the cash flow issues in this EPC business from the utilities. So that is the main reason that we contained it, and we are trying to limit it to this level.
And what about exports? What are they as a proportion of your sales? You are gunning for what, 50% growth this year in exports?
Yeah, so I expect that we should get around 15% of our total sales from exports this year, which means that we have to grow by 50% in exports this year.
Okay, you're also expecting a overall 50% growth in exports in FY25, is it?
Yes, exactly.
Okay, that's interesting. And what about your working capital cycle? Where are we at right now? And is there scope to improve the working capital cycle?
It is continuously improving for last many years. And every year we are reducing the working capital days by approximately 8 to 10 days. The reason is, one is growing exports, growing B2C business where we get the money through channel finance from the dealers, and also reducing the EPC business. All these measures has been taken to improve the cash flows. And I think if we are able to maintain around 2 months of the working capital cycle in the overall business, we will remain a debt-free company.
Right. Since you're looking to increase your B2C, exposure and your presence out there, just wanted to understand who exactly would be your competitors, what would differentiate your propositions from them, and once competition increases in the B2C space with you coming in, could there be any impact on margins? What's your strategy here?
I mean, normally our competitors in B2C space is Havells, Polycab, and Finolex. But I mean, ultimately they are also operating in the similar range of margins. So I mean, nobody would like to reduce their margins by just increasing the top line. So and we are operating at a very reasonable level of EBITDA. So with the very high level of production efficiency and production economics, I think we will be able to improve our margins year after year in spite of having competition.
Do you have market share targets here? What does it currently stand at, and what do you aspire for it to go to?
Our market share in cables should be around, and I don't have the firm data, but maybe around 12%, and in the houseware business around 6%. So overall market share may be around 10%.
Okay, overall market share is around 10%. Got it. Mr. Gupta, thanks a lot for joining in and speaking to us on CNBC TV18. That's KEI Industries talking about the issues that they were facing at their plant, but also the way forward for the business. They say that there is a big capex push that they're looking at, and demand traction will continue on the back of that. The stock is actually doing pretty well. In the last 1 month, it's gained about 10%. Today, the stock is up 2.5%, and the B2C business is picking up in a big way because of very good traction coming in for wires and cables, especially in spaces like real estate and infrastructure. So that's KEI Industries. Been a big play over the last many weeks and months. And I think if you pull up a 1-year chart, you'll see there's been significant growth over there. But overall for the markets, yeah.
I was just saying that the markets have actually slipped, and that slip has been led largely by the Nifty Bank. The Nifty Bank is down about 250 odd points right now, 0.5%, and as a result of which the Sensex has slipped into the red, and the Nifty just about holding in the green by the skin of its teeth. We have HDFC Bank, which is the top contributor on downside for the frontline index. Also not giving it any support are the FMCG stocks. So HUL at the low point of trade, Asian Paints not doing too well. Some other consumption names as well, like Maruti down, from the early levels, the opening levels. And we have the list of draggers as well as, contributors on the way up for the Nifty, up for you. Maruti Suzuki was open in the green, now has moved into the red. And we're seeing some of this decline play out in a couple of other names as well in the mid-cap end of things. So we have something like Chambal Fertilizers, which is down about 8-9% from the highs, down 6% now. GNFC down 5%. Delta Corp had seen a big rally over the last few trading sessions, down about 3% ahead of the GST meet event tomorrow. City Union Bank, Coromandel and Tata Chemicals. So a bunch of stocks actually now coming off the highs of this morning and moving towards the low point of today's trading session.
Okay, well, a lot of individual stocks. By the way, Kotak Mahindra Bank is now below the 200-day moving average. So there is some, technical levels that we're looking at over there. Time Technoplast continues to be on the in focus, so keep an eye out on that. And a couple of other names. Lupin is in focus as well. Antique has put out a note where they've maintained a buy. They have a target price of 1958 on the stock. they remain quite optimistic on the US generic opportunities with limited competition launches. So Lupin up almost about 0.6%. But let's talk about the Accenture numbers as well as the way forward for the IT companies. Kumar Rakesh, the India analyst at BNP Paribas, joins in. We also have Abhishek Kumar, the equity research analyst at JM Financial. Gentlemen, morning to both of you, and thank you for joining us on the show. Kumar Rakesh, I want to start with you first. Your thoughts on Accenture's numbers and what would the read-through be for companies in the IT sector back home?
Hi, good morning, Sonia. Thanks for inviting me on the show. So last quarter, when the company had reported their results, that actually started the underperformance of the entire Indian IT services sector. And that time, the concern had started that possibly the IT services demand is going to take longer to recover, given the guidance cut by the global peer. And since then, as we have seen, most of the Indian IT services companies underperforming. Last night, with the results which they have reported and the commentary, it appears that possibly the demand bottoming out has already happened and some recovery is already visible in the numbers which are reported. And that should ease investors' concern that possibly the worst is behind and we should start looking at the recovery in the coming quarters. For Indian IT services companies, as we have been noting, that the cyclical bottoming out likely happened in the December quarter itself. March quarter numbers, if you would see, for most of the companies on a YOY basis, they had started seeing improvement on the growth. Even if it was a decline, it was a lower decline. And as the cyclical recovery already got underway, obviously a larger global peer, if they continue to see a weakness, it was not really getting appreciated here for Indian IT services companies. But as we move into the coming quarters and exit FY25, we would expect that this YOY improvement in the revenue growth should continue to play out. And given how investors are highly bearishly positioned for the sector, this implies that there should be a reasonable upside in the sector.
All right, reasonable upside. We'll come back to you, Kumar. Let's talk to Abhishek Kumar, who's the equity research analyst at JM Financial as well. Abhishek, what are the overlaps from Accenture into Indian IT? What sectors are, direct correlations out there? And in that, how was the performance? How would you read that for the Indian stocks?
Yeah, hi, good morning. Thanks for having me here. In terms of overlap, look, Accenture is a very large company, probably works in all the verticals where Indian IT is present. Specifically calling out a couple of segments. One, I think if we look at their managed services bookings, that was up 42% on a YOY basis. Even if we look at the trailing 12-month, the book-to-bill in managed services, which is more similar to what Indian IT does, was up to 1.3x, which is highest since pandemic. So there are signs that those large deals, etc., that momentum continues. The pipeline also is good. Second, one sector which was particularly stressed was communication. That has been declining for past 7 quarters sequentially for Accenture as well. This quarter, it moved up. It showed 4% sequential growth, which, again, gives us some signs that there's some bottom formation happening. So that's a large sector for Tech Mahindra, and therefore, we can just have some positive read-through for Tech Mahindra from communications vertical performance.
Okay, positive read-through for Tech Mahindra. Any other stocks that you would be bullish on where valuations still look attractive and there is some growth potential as well, Abhishek?
Yeah, so we like Infosys and Wipro. Consulting coming back to growth next quarter as per Accenture after 5 quarters of decline, kind of validates the view that Wipro had, where they were seeing green shoots in their consulting business. So that kind of validates that view. So positive for Wipro. And Infosys generally, given where their guidance is and where the expectations are, I think there's very limited downside as far as the earnings are concerned. So we are positive on these 3 stocks.
Okay. Got it. All right. So Infosys and Wipro is what you like. I also wanted to go back to Kumar Rakesh. Kumar, your thoughts on what are the stocks where there could be still some earnings upside as well as a valuation, legroom now?
So Sonia, if you look at the broader sector, first of all, I think the entire sector is heavily underweight across both foreign institutional holders as well as domestic holders. Their portfolio allocation to IT sector is now close to about 8.5%, 8.2% of their overall portfolio, which is significant underweight. And this level of bearishness last time we had seen was in 2016-17. So there is a significant underweight position, which we expect should start normalizing and should start moving towards equal weight. And that itself should drive positivity and positive stock reaction across all the sectors. And the first leg would be reflecting in the valuation expansion. So that is the first thing which we would expect, that across most of the companies who are going to either even meeting expectations would be good enough in the coming quarters with neutral to positive margin commentary. And that should result into the kind of stock reaction which we are seeing today. So the first leg should be driven by significant underweight position moving closer to the equal weight position, driving the valuation of the sector. The second leg will start coming up from the earnings upgrade potential. And if you look at the consensus expectation, what consensus is building this financial year's exit YOY revenue growth and the next year's YOY revenue growth, both of them are largely similar actually. So what it is implying that the consensus numbers are not building any further recovery in revenue growth going into FY26. And that is something which can potentially start seeing an upgrade across the companies where the expectations already are sitting pretty low. And hence that creates the second leg of drive into the earnings upgrade potential. And that is where Infosys definitely stands out, where the expectations already are quite beaten down, and hence much higher possibility of earnings upgrade as well happening. And hence Infosys also is our top pick.
All right, Infosys a top pick across BNP Paribas and JM Financial. Finally, let's wrap it up. Abhishek, with the mid-cap end of things, what are your top picks in mid-cap IT, if at all you track them?
So I'll not be able to talk about mid cap in this call, but generally we prefer large caps over mid caps. Given as Rakesh was also mentioning the positioning of the investors, and also I think they have the large caps have already taken a brunt of hit on their margins given the large deals coming in. And as these deals get into the maturity phase and discretionary comes back, come FY26. There is a margin expansion possible in large cap. So we would stick to large cap at this stage.
All right. Thanks a lot, gentlemen, for joining in and putting focus on the IT space right now. That definitely is, helping the market stay afloat in the Nifty in the green right now post Accenture's numbers. And you say risk reward in favor of the IT stocks. Potential re-rating may be likely if things improve from here on, given the underperformance. In the market, a couple of themes are doing well this morning. We have the telecom space, which is now a buzz. So Bharti Airtel has moved to the high point of trade. We're seeing some traction in Vodafone Idea as well, opened in the red and now has moved to the high point of trade once again. And that's because maybe now the street hopes with the telecom data out of the way, with all the elections related issues out of the way, there could be a round of price hikes. So that's the forever hope right now for the last couple of months for the telecom space. And now with all these triggers away, let's see whether that actually pans out or not. And in the broader markets, we have Raymond, which is up 10%. Railtel, which is up another 8% today. Cera Sanitary, we're up 6.5%. So there are specific stocks which continue to do well. And in that, Gravita also is one of them, which is up around 12%. Remember, the management joined us here on CNBC-TV18 a couple of days ago, saying that some of their new geographies would do well for them in terms of growth, and the lithium-ion vertical will also aid growth. So that's about Gravita. But let's talk about CAMS. CAMS Insurance Repository Services has launched Bima Central for insurance portfolio management. To discuss more on this and the growth outlook, we have Anuj Kumar, who's the MD of CAMS, joining us. Thanks a lot, Mr. Anuj Kumar, for joining in. Always a pleasure speaking with you. Let's talk about this, e-insurance platform itself. With the IRDAI's push on e-insurance, what do you think is the growth potential? What are the number of customers that you plan to onboard on this? And I believe you were looking at break-even in this quarter itself. Will that happen?
Hi, good morning. Thanks for having me over on the show. So overall on e-insurance, I think when you look at the market broadly, the outlook is bullish. Of the total insurance policies available in the country, under 5% are under e-insurance right now, because it is effectively not mandatory yet. It's more an individual consumer choice. as we launch platforms and as the overall the push from regulatory and market perspective increases on this, you can expect that this 5% penetration will continue to grow. So this market could scale several times. And we've been holding share in the range of about 35% in the market. So we're very bullish on this construct. And we believe that this market is set to expand.
You believe that the market is set to expand. So can you help us with some numbers when you talk about the expansion? I mean, what is the kind of growth that you're looking at? I mean, what are the customers that you're expecting to onboard? Because IRDAI has been pushing on e-insurance quite a bit. So, overall, what can we expect over the next 1 to 2 years?
So broadly, when this was launched several years back, it was expected that e-insurance holding would become mandatory. It is not in that state yet. The recent announcement means that insurance policies could be held in the insurance account, could also be held in DigiLocker, or could be held in a PDF format. So it is yet not mandatory. But from a market perspective, from about a mass of 55 crore plus policies, just about 3 crore are held in the DMAT form. So that's about 5%, a 20x compounding of this entire construct can happen if ever this goes into mandatory DMAT, for which there is no announcement right now. However, individual consumers are preferring to hold their policies in the e-insurance format. So you can expect a high double-digit growth going here forwards. Also, in terms of being able to manage your data at a single level, at an e-insurance policy level, to do potentially digital lien marking, which will happen over a period of time. You could, monitor your maturity values in a single screen view. You could pay insurance premiums, lodge your claims. There are a lot of things possible in the e-insurance construct. It's very insurer-friendly, so to say. And as we've launched Bima Central, of course, we'll have to integrate all the 50 insurers. Today, there are just a few which have got fully integrated, but that process continues. And we believe this is the kind of benefit that has not been offered in the marketplace. It's a very unique platform right now. We're already beginning to see offtake in terms of transactions building up. So we are very bullish on this.
Yeah, but if you could put numbers on their bullishness, what do you think is the TAM for this? Since you said only 5% right now are e-insurance, there is a 95% upside in terms of market moving forward. What are the kind of customer numbers that you expect to onboard? And at what level does Bima Central start contributing meaningfully to your earnings?
Bima Central will contribute to earnings maybe in 3 or 4 years. Today, we're just spending money promoting it and making sure that the consumers get a unique digital experience from that. So from a financial perspective, it will take several years for it to break even and start making money. At the base level, today, think of it as about 7.5 million policies, 75 lakh policies being held by us in the DMAT format. We're expecting that to grow by over 25 lakhs, so almost about a 35% growth this year. Also remember that in the base, a lot of consumers may not be converting their policies. There's a lot of new sale which is coming into this. That trend will continue. For base policies to get converted, I think it just needs a strong nudge either from the industry or the regulatory side. On the new sales, which is between 2 to 3 crore policies every year, you will see that a lot of those will get sold in, under the insurance format.
Okay, got it. The non-MF business is also picking up traction. What is the kind of growth that you're looking at there, and what's the headroom in terms of margin improvement?
So last year, we grew non-MF by 52%. If I counted on a constant base, which is without the Think Analytics portion, we grew about 38%. We are hoping to grow non-MF close to 30% this year. We're seeing all the tailwinds. Our KRA business had grown 90% last year. We're expecting that to scale beyond 30%. Our accent to sell to depository participants and brokerages has succeeded. We were a pure mutual funds player and we've broadened out, so that's a good play happening. Our payments business grew 26% last year. We're expecting that to grow about 30% this year. So strong tailwinds in both of them. And on account aggregator, we continue to put out newer formats of consumption, both on the wealth management, which is the personal finance management side, also on the digital lending, flow-based lending side. So those consumption patterns are quite evident in the marketplace, our daily consumption of bank and other statements has crossed a lakh daily, which is a significant milestone, and we're expecting it to scale at least 2 to 3x within this year. So non-MF broadly this year should grow in the vicinity of about 30%. From a profitability perspective, we've been investing in the platforms for the last 3 years. Some of them will return to break even this year. So overall, our target is that at company level, we should drive non-MF to a 30% EBITDA line. That should happen over the next 4 to 6 quarters.
What about, since we're speaking about the insurance space itself, I remember you last time said that you are scanning the market for inorganic opportunities, mainly in the insurance and payment space. How far have discussions moved? Are there any at the advanced stages, something that we can hear in the near future?
I think you should hear something this year. I will not time it accurately, but you should hear something this year. I think there are very exciting opportunities in both the spaces. And with our accent on building non-MF and scaling it to 20% revenue contribution, we believe that the next step is to onboard a strong franchise from the market. So you'll hear something this year in terms of our next moves.
Guys, just before we let you go, just roughly, because you have about 600 crores of cash on your books.
Yeah, so I don't think we're going to make a big bang acquisition. It will not be a big bang acquisition where I have to go and borrow monies, etc. We will just fund what we have on the books to buy this. So it could be, in the range of, I would say, a few hundred crore in terms of capital outlay. And we will talk more about this as we get closer to the event.
Okay, thanks a lot for that, Mr. Kumar. Pleasure having you on the channel here. That scam's up almost 2.5% right now. But let's get back to the market. If we can get the Nifty chart up on the screen, you'll see that it's pretty decent in terms of the morning move. Just that it's come off a little bit, but still holding with gains of 50 points. Mitesh Thakkar is back with us. Mitesh, what are the stocks that you're looking at this hour? And do you expect some volatility to kick in for the rest of the day?
See, I think, the Nifty is doing pretty okay. And, we've made another high by getting past 23,600 on the spot. And the overall breadth is good. But what is in focus is the Nifty IT. I think very strong continuation pattern being seen over there. And that is the index which is propelling the Nifty. So I think maybe from a trading point of view, you should look at Nifty IT. And on the Nifty, as I said, I think keep trailing your stop losses. The latest level would be around 23,445 on the spot, which is about 180 points lower.
So what would be the pick here in terms of stocks, Mitesh?
So, Mangalam, as I said, I think it should be the IT pack. So I have a buy on Wipro. Wipro, I think, hasn't moved as much, so it could see some catch up, and therefore recommending a buy with a stop at about 489 for targets of 510. And Infi is showing good traction after opening gap up, so Infi can be bought with a stop at about 1529 for targets of 1580.
Okay, thanks for that. Let's slip into a quick break. On the other side, we'll put focus on the commodity space with Manisha Gupta. Stay tuned.
I'm joined in by 3 individuals who have inspired all of us. Usha Somant, her son Milind Somant, his wife Ankita Kuwar.
When you're talking about fitness, is mobility. If you can't move, how will you get fit? If your mind doesn't move, how does it get fit? If your body doesn't move, how does it get fit? So mobility is the most important thing.
Oh, why do I have some fat around here? That's maybe because the body needs it. Why do I like this certain kind of food? Maybe because my body wants that. So just accept yourself for who you are, what you are. At this moment, this is the best version of yourself that you'll ever be.
What is next goal, challenge that you've set up for yourself?
One thing in my bucket list is bungee jumping.
Bungee jumping! Oh my God!
And skydiving.
And skydiving.
Hit by question paper leaks in 2024. In India, getting a government job is a safe bet for many aspirants. And in the event of a paper leak or exam cancellation, millions of students get affected. It's a waste of their time, money and effort. Not to mention, it's also a waste of public money. The future of millions of students is at stake. After NEET, NET is in the headlines. The question is, will India's education system pass the credibility test?
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done when you think about the content of testing.
Shifting focus to the commodity markets, Manisha Gupta joins in. Manisha, what's the one commodity you're tracking today?
Thank you for that, Sonia. Well, I'm looking at metals, precious and industrial, and there is a lot of buying in both of these sectors there. So weaker than economic US data is what has led to a decline in US dollar and expectation that you could be looking at a Fed rate cut going forward in the month of September. The possibility of that is now 67%, and that has led some buying coming in for many of these metals there. Also, it has to do with the geopolitical concerns because, when it comes to metals, when it comes to precious metals especially, we are hearing more news and reports coming in from the Red Sea now. What we do understand that until now there have been more than 70 attacks there. One vessel has been seized, 2 ships sunk. The second one was sunk yesterday. So that is what has led to some geopolitical premium also coming in for the prices there. And then, as I said, a couple of central banks already have cut rates, and the markets do anticipate that the Swiss National Bank, and you could be getting it coming in from China and the US Fed in the month of September. So by the third quarter, there could be more banks joining the bandwagon when it comes to rate cuts, and that clearly has been supportive. In any case, the metals have been consolidating for the last couple of weeks, and we've seen buying opportunities come in on the lower side. So within the precious metals, silver prices gained 3.5%, gold was up 1%, and both the precious metals are now trading at a 2-week highs into the markets. Copper prices also gained up by more than a percentage point, and we are looking at prices inching closer to $10,000 a ton mark. The low in this week itself has been $9,550. So we're looking at considerable gain from its lows, and that has been supportive. I also want to talk about zinc because that has been a bit of an underperformer, but we've seen stronger gains come in for this one as well, and that is because the surplus that the zinc has been carrying for the last couple of years now seems to be going down. So if you look at those numbers there, we've seen prices gain up by 3.5% in this week itself, and that is because the surplus that the markets did see earlier have been continuing to decline. So last year, between Jan to March, the surplus that zinc had was 282,000 tons. This year, at the same period, it fell to almost half at 182,000. In the month of March, we were carrying a surplus of 70,000. Now it has fallen down to 22,000. So a very sharp decline, as you can see, over the past months that the zinc surplus has come down, and that clearly seems to be very supportive.
All right, Manisha, thanks a lot for that. So that's the commodities arena, but let's talk about First Source Solutions. We've been speaking about the IT pack. Hormaz told us earlier why First Source Solutions would be in focus, and now that the stock's moving, let's recap that. Hormaz.
All of IT has been buzzing because of Accenture's results, but FirstSource on its own had an analyst day and they've shared some targets for the near to medium term. Now, Nomura is saying that they have made significant progress on their One FirstSource strategy, and they are now aspiring for $1 billion revenue run rate by the fourth quarter of FY26 and to have an EBIT margin of 15% in the medium term. So these are the targets that FirstSource has laid out. And while they have no stated dividend policy, but they have been paying out close to 45 to 50% of their profits as dividend back to shareholders. Now, the senior leadership of the company has both time and performance-based stock incentives, according to Nomura. And what they also believe is that the net debt that FirstSource has, which is close to 600 crores in FY24, that is largely for working capital requirements. They also laid out some M&A strategies where they did not say whether there is an acquisition or a merger in the pipeline, but they mentioned that if they do something like this, it would focus on capability building and not on revenue accretion. So as a result of which, Nomura remains neutral on FirstSource Solutions with a price target of 200 rupees. The 10 analysts have coverage on FirstSource. 8 of them have a buy recommendation, 2 have a hold rating as well. So all in all, the entire IT space is buzzing, and FirstSource is no stranger to that as well.
Okay, thanks a lot for that. Well, Upasna is tracking time, Technoplast. Upasna, over to you.
Thanks so much for that. Well, Time Technoplast will remain in focus as the company has received final approval from Petroleum and Explosive Safety Organization. This approval is mainly for the manufacturing and supply of high-pressure composite cylinders for hydrogen. It is the first Indian company to receive this approval, and it believes that the move is in line with company's efforts towards sustainable green energy. With this approval, company says it is poised to capitalize on rapidly growing market driven by global shift towards sustainable green energy. It believes that this technology will certainly have a positive impact on both, that is industry, as well as on the environment.
All right, Upasna, thanks a lot for that. With that, what we'll do is take a short break with the news that the Nifty is holding mildly in the green. The Nifty banged down by about 0.5%. The mid-caps outperforming 1,400 stocks in the green for about 862 in the red. So the advanced decline chart comes up for you. We've seen some narrowing of the band, but still a fair distance between both the green and the red lines. So what we do is take a short break. On the other side, we have the India Economics segment where Lata joins in with a lot of power sector experts to discuss about power shortage and how policy and investors must look at this space. Stay tuned.
Something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that, the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person, either owning a team or at least supporting a friend's team.
And so it's a passion, and I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. So you had passionate fans.
Hello and welcome to a hot steaming Indianomics. I say that because 2023 is, I believe, the hottest year in India's history, and 2024 threatens to be worse. Today we discuss what this means for India's power sector. Should we expect power generating companies to become more profitable? And what else becomes more profitable? Should one invest more in, say, power equipment companies, power contractors, capital goods makers? And also, what about the downside? Can we expect intermittent power outages that mar production and productivity across the economy before capacity catches up? Joining me to discuss all these are Mohit Bhargava, the former Executive Director, NTPC Renewables and former CEO of NTPC Green Energy, Girish Kumar Kadam, the Senior VP and Group Head of Corporate Ratings at ICRA, and Nikhil Nigania, Director and Senior Analyst at Bernstein. Gentlemen, thank you very much. This is a power-packed panel in more ways than one. Mr. Bhargava, if I may start with you, the Indian Express just reported that power utility heads in Punjab and even in central utilities have warned that there is a chance of a grid collapse because peak demand is absolutely racing up. I mean, 89 gigawatts or something at one particular hour. Do you think we are in danger of power outages?
First and foremost, good afternoon and thanks for having me here. No, I'll not be that scary in my outlook because over the past 1 year, NTPC included and the government as a whole have been quite focused on ensuring that there is enough capacity. While I agree totally that, if I remember correctly, on the 30th of May,
yes,
India had recorded the highest demand of 250 gigawatts. And over the whole of June, we have been looking at about 233, 235 kind of gigawatt kind of demand. But we have been able to meet that. The challenge is not in not having capacity. That capacity is there. And thankfully, this time, even the thermal plants are quite comfortable on the coal sides. And we have had a lot of solar coming online. So from that angle, we are in a decent position to meet the demand. But yes, as the demand keeps increasing, if you look at last year, the demand growth was over 7-8%. Same looks the case this year also. And with the economy growth projected at 7% for this year and maybe at the same levels in the years going forward. So power capacity has to keep on catching up and ensuring that there's enough demand.
Okay. Nikhil, you have a note on how the power intensity of GDP is actually set to rise. So do you see more shortages before capacity catches up?
Sure, Lata. So our view, one is the demand side, second is the supply side. So power demand, actually, not just India, globally, it's been surprising on the upside. Reason for that, weather. So as you said, India, very warm weather we are seeing the last couple of years. And as per government, the global forecast, World Meteorological Organization forecast, likely to be warm for the next 5 years as well. Second driver of power demand then is new use cases of power. In India, not so much right now, but incrementally going forward through data centers, EVs, and possibly hydrogen in the future. So those are the stuff which are driving power demand faster than many anticipated globally. Now, coming to the supply side of things, the challenge we see is not per se the afternoon times of the day, the challenge we see the evening time of the day, where we feel government has thrown everything possible at the problem in the month of May, which was election month. And still we were just neck to neck. I mean, the peak demand afternoon was 250, evening was 236, and we barely met it. And if it keeps going at 6-7% per annum, the planned thermal addition of 8 gigawatts a year might not suffice unless battery and pump storage really picks up.
Okay.
So combination of these two things, evening shortage and strong.
So Nikhil, which part of the power universe is best placed to take advantage of an imminent, seller's market?
For sure. So if you look at the power value chain, we break it into 3 buckets. We break it into the utility companies, where we continue to like NTPC Power Grid as key beneficiaries with higher than expected capex, leading to strong profit growth over a long duration. The second bucket, which gains where at least we see strong institutional investor interest, is the capital good names. Because a strong capex, especially on pockets like transmission and distribution, is likely to lead to good order book and margin expansion for transmission equipment suppliers. The third pocket are the lenders, where you have power-specific NBFCs in India. And the same thing then trickles down, right? I mean, if you're going to do so much capex, then you need a good amount of debt funding for them as well. And even the bad debts which are there are likely to be reversed. If the demand-supply situation is tight, the thermal assets could get sold.
The unfortunate part in India
so all three pockets gain per se are coverage.
Okay, I get that. Thanks for that. But just power financiers, a word more on that, Girish. Since your look at debt and that's of more imminent interest to you, do you foresee once again people reneging on bills? Even now, the DISCOM outstandings are not falling. They have been on the rise. Do you foresee that? I mean, the demand may be there, but it is not backed by the ability or at least the inclination to pay.
Yeah, so Lata, in fact, thanks to this late payment surcharge scheme, which was notified 18 months back, we have seen a very encouraging trend so far. As far as the correction of the overdues are concerned, they are getting paid out, to the, Gencos, more or less in a timely manner through EMI route, thanks to debt funding availability from PFC, REC to the, the DISCOMs, whoever has participated in the LPS scheme. And again, as far as the the regular bills are concerned, the DISCOMs are more or less paying in a timely manner, within 70 to 75 days. In few instances, with some more higher days, but it's broadly more or less in a timely manner, thanks to the provisions of the LPS scheme, which are pretty stringent. Because if the DISCOMs do not honor in a timely manner, there is going to be a curtailment in the open access scenario for availing the power through short-term, medium-term, and long-term, route. So that is working out. But fundamentally speaking, many of these state-owned DISCOMs, they continue to, have, structural issues in terms of higher cost overheads, still inadequate tariffs. The tariff hikes are pretty modest. In fact, less than 1 or 2%, consistently seen over the last 2 years. And while the subsidy flows have certainly improved, but the fundamental issues in terms of the higher AT&C loss levels and the higher operational cost overheads, and the fact that the debt burden is now higher because of the LPS scheme implementation. So these issues continue to persist, for the state-owned DISCOMs. So we see that the cash gap number for the DISCOMs to still remain elevated, again, because of, the higher dependency on the short-term power, because short-term power mix has also gone up. Almost 15% of the generation is now through short-term power route, which is a bit costly, almost 5 to 5.5 rupees a unit. And on top of that, the coal import dependency is also relatively in the range of 7 to 7.5%. So which is why the fundamental issues, they require a significant correction for the DISCOMs going ahead.
Yes, we were running your cash gap, the difference between the cost and what is recovered by as revenue is still 45 pice per unit. I mean, that's something that should be alarming and can accumulate and hit at some point. Time permitting, I'll come back to the financing aspect. I'm missing a policymaker here, but Mr. Bhargava, you'll have to fill in that position. There was talk that IEX rates are actually at, 5 rupees 30 paise, 5 rupees 29 for quite some time. And there was talk that maybe Grid India should take over the demand supply and, marketing of short-term power requirements. Is there any such policy being mooted?
Honestly, I wouldn't be able to comment on that, Ms. Venkatesh. But the fact is that IEX and the short-term power market is definitely doing well. There's of course also talk of market coupling and all that. So the idea is that while the DISCOMs do not actually want to get into a long-term liability, and you might also see that through a lot of bids coming for short-term power procurement, say few months or 12 months or a couple of years, not like 25 years. But there's also a very high demand, and which is what NTPC has also seen, that many states are actually looking at tying up long-term coal-based power, because the intermittency of renewables is something which everyone is trying to get over, and which is why everyone wants to actually shore up their bucket by tying up long-term baseline or baseline load capability also, which is why all this new coal-based capacity which is coming. And from that perspective, I see that like NTPC has already recently ordered about close to 6 gigawatts. And I believe a couple of other companies are also looking at ordering a few more capacities. So the overall demand supply requirement and the gap will be met, one definitely through coal in the near future, and also on a longer term basis through renewables and round the clock power, storage solutions, and all these things will happen. So that's how it will keep on happening.
Okay. Now, I want to touch base with all of you on where do you see policy tweaks or longer term policy changes. But Mr. Bhargava, you are a neutral party. There's one man who's rating debt and another man who is assessing equity. You tell me which part of the entire ecosystem looks promising to you.
You're putting me on the spot because both these guys track the sector from specific areas and perspective. But you see, power sector is, if I may say, power sector is one where growth is happening and accelerated growth is happening. So whether it's the renewable sector, whether it's the thermal sector, I would also add, for example, nuclear on a longer term basis. So that will grow. And definitely the GenCos, the equipment suppliers, these are the people. And at some point I see that storage companies, for example, battery storage, or people who are also doing pump storage solutions, although that's a longer term solution that happens over a 4-5 year period. So these are the companies which will keep on doing well. Equipment space, definitely, because I don't have all the details, but for example, the 50 gigawatt bids happening on the renewable side. So there's a huge, and anyway, we see, we listen to you and other panelists also, the way the renewables people are, hand over fist, their prices are going up. I really don't know where that's headed.
Okay. Thanks for pointing out so many sectors which are still investable. Gentlemen, I have to take a quick break. Bazaar viewers, you will get to see Chartbusters. I will continue my conversation with my experts and you will get to see the whole show after market hours.
Passionate fans in cricket, but the question is, how do you encourage that farm system? And so, whether it's Satya or me, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League cricket here, and I'm part of the San Francisco Unicorn team, and so it's fun.
So the Hyderabad mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, rather than, in this case, the mafia. This is all about a passion, and cricket's a global sport. And actually the funny thing about sport just brings together people like no other activity. And, just the amount of excitement, but now we have to go win it all, right? We've just got to the, Super 8s, and unfortunately the India-Australia match, I have a board meeting on that day. So it's going to be...
Big conflict.
No, the board meeting is going to take priority, but, I'm going to perhaps sneak a look now and then at what's happening.
I would imagine.
Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity, and low self-esteem.
In India, you see a lot of gum disease, which is also promoted by things like tobacco and supari.
Poor oral health is linked to serious systemic issues like heart disease, Alzheimer's, digestive problems, bacterial pneumonia, preterm delivery, and cancer.
If your teeth, the way they meet, what we call occlusion, is not proper, it can lead to other damage to the joints, to the gums. We have bone loss around the teeth.
Use a soft brush, destroy your brush, don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers.
IT stocks, TCS, Wipro, HCL Tech, Infosys all gain on the back of Accenture's third quarter results. Constant currency revenue growth climbs 1.5%. The company says they continue to see strong demand for digital manufacturing and engineering services.
Aster DM climbs after 9.3% equity changes hands in a block deal window. Sources tell CNBC-TV18 that Olympus Capital Asia investment is the likely seller.
CE Info Systems, or MapMind as we know it, continues to gain for the second day after brokerage firm Goldman Sachs initiated coverage on the stock with a buy rating, raised the target price to 2,800 rupees a share.
GM Financial falls over 4% after it was directed by SEBI to refrain from accepting new mandates as a lead manager in public issue of debt securities until further notice.
Fertilizer stocks like Chambal Fertilizer, RCF, GNFC see profit booking after the recent run-up. Chambal Fertilizers also comes out of the F&O ban. Recent run-up was on account of expectations of a GST rate rationalization. So maybe ahead of the event, some bit of profit taking.
Hello and welcome to Chartbusters here on CNBC-TV18. I'm Horbis Fatakia, with me is Mangalam Balu, and the final trading day of the week, that's the bigger takeaway, I guess, because the market remains in a range. The Nifty at 23,600 as we speak. The Nifty Bank, though, is seeing a bit of profit booking after the run-up that it has seen. Actually, the Nifty Bank is the star of the week, to be very honest. And after it's staying above those levels of 51,000 as well. So the Nifty remains in the range. 23,600 is where it is. What's doing well in today's session, of course, is IT. The top 5 gainers on the Nifty are IT names: Infosys, TCS, Wipro, Tech Mahindra, all of them doing well in today's trading session. What is also doing well is pharma, metals, and there are some underperformers as well, which is Realty and FMCG. Mangalam, hi.
Hi, a lot of individual stocks actually are spiking as we speak. We have telecom stocks which are doing extremely well. Bharti Airtel has now moved towards the high point of today's trading session, and in fact, it's among the top Nifty gainers today, up around 3%. And also in the last few minutes, we've seen some pickup in the auto pack. So pick up something like Maruti, which is recovered from the lows, currently at the high point. We're also seeing some traction in Hero MotoCorp and Bajaj Auto. So both these stocks, in fact, what you do is if you just pull up the Nifty Auto Index, you would see that the Auto Index has picked up in trade and is at the high point. And also in the broader markets, a couple of themes doing extremely well. Railway continues to surge. We have RailTel, which is up around 11%. We're seeing RVNL up around 6.5%. Texmaco Rail about 6.5% higher as well. So that train, as you call it, continues to rally. But let's talk about some ideas for profit in a market like this, where we get you our colleagues from Money Control Pro to share those ideas. Sachin Pal is the one who's joining us today with a stock that he's been tracking.
Kajaria Ceramics, which is a leading tile manufacturer in the country, posted a modest revenue growth, almost 4.5% in the last fiscal year, FY24. The margins of the business continue to remain firm, around 14 to 15%. The business has outlined a strategic roadmap for the next 3 years, over which it aspires to reach a turnover of almost 6,500 crores by FY27. The tile business, which is the core business of the company, is anticipated to grow in the range of 10 to 12%, and the company will primarily focusing on the expanding its presence deeper into the tier 3, tier 4 markets to grow the business volumes. The bathware business, as well as the plywood business, is expected to grow in the range of 20 to 25% in the next 3 years. The adhesive business, which is an extension of the tile business, is expected to witness a 3-fold jump in revenues from a favorable base, almost 50 crores in FY24. Overall business continues to remain on a very solid footing, and the balance sheet is also in a very fine shape. And overall, the capex of the company, which is estimated to be in the range of 200 to 250 crores, is likely to be met through internal accruals. Well, Kajaria remains a very quality play on the overall domestic market, and investors can therefore look forward to optimal the stock during corrections.
Right, some ideas for profit there from Money Control Pro. But time for a short break here on Chartbusters. Up next, we'll be joined by Vineet Agarwal, the MD of Transport Corporation of India, to discuss the company's future growth strategies. Stay tuned, back on the other side.
Significantly become much more expensive than they were 2 decades ago.
discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence.
Welcome back. You're watching us here on Chartbusters. Let's talk about the primary market action. The IPO for luxury furniture firm Stanley Lifestyle opens to subscription today, scheduled to close on the 25th of June. The company targets about 537 crore of fundraise, of which 200 crore would be the fresh issue at a price band which is up for you on the screen. They've also raised about 160 plus crores coming in from anchor investors. To know more about the future plans of the company and growth prospects, we are joined by Sunil Suresh, who's the MD, and Pradeep Kumar Mishra, who is the group CFO. Thanks a lot, gentlemen, for joining in. And you know, that really is the first thing that the street wants to know. 200 crore is the fresh issue that you guys are raising. How will that be deployed into the business? How much of that would be directed towards store expansion? And as a result of which, what would be the sustainable revenue growth trajectory?
Yeah, thank you very much for having us here today. Most of the funds would go for store expansion. What we've actually done is in the last 5 years, we have done a cluster expansion in Bangalore and have 3 different segments in which we are playing. And then we have done the what you call as proof of concept. And we have almost a 40 to 50% market share in Bangalore. So hence we plan to kind of deploy the funds in other cities and grow more in those clusters. So we have been a pan-India brand present for more than 15 odd years in the furniture business. And we have stores, a few stores in all the major metros, but now we want to expand in those metros.
Gentlemen, good morning. Thank you for joining in. Sunil, my question is to you. You mentioned that you would increase your presence in cities beyond Bangalore and grow in those clusters as well. Can you elaborate on which clusters are you targeting?
Okay, so we are a fairly what you call as data-driven company. We are able to understand where the premium housing is happening, in which are the major cities. It's happening in Delhi, Mumbai, Hyderabad, Pune, and Calcutta. So we plan to start expanding in these cities because our business thrives in the tailwind of the luxury housing industry. And now we see a lot of opportunity because premium housing is doing quite well in major metros, and we want to expand in these cities.
Right. So that would be one of the things that we will keep an eye out on. Also, just wanted, Pradeep to come in. Pradeep, the money that will be deployed for store opening, if you could give us a sense, you currently operate stores under 3 brands. There's Stanley Level Next, Stanley Boutique, Sofas and more. What is the average revenue each per brand of these stores? And how many stores will you open over the next 18 to 24 months and in what brands?
Yes, broadly, we have been adding on an average 10 to 12 stores per annum for the last 3-4 years. And, what we believe is that's a good growth rate in store expansion, that we see for the next 3-4 years as well. And store expansion would happen, evenly across all the 3 formats of Stanley Level Next, Stanley Boutique and Sofas and More. Right now, the revenue is equally split between them, and with a very healthy store economics, and each brand themselves are in a positive generating P&L. And I think with more store expansion across the year, we will want to continue that same momentum.
Right. So I'm just going back to the first question that I asked, which was with regards to sustainable revenue growth. I'm looking at your revenues and the number of stores that you currently have. On an average, the revenue per store is anywhere between 7 to 8 crores. If you add about 10 to 12 stores every year, that means an additional revenue of about 80 to 90 crores per year. Would that be a sustainable growth trajectory to look at in terms of store addition? And what else are you penciling in when it comes to same store? Yeah, go ahead.
Stores take about 4 to 4.5 years to fully mature. So currently we have almost 60% of our stores under 2 years, and they're still in maturity age. So technically, as we keep adding more stores, I think the revenues from the current stores which are maturing plus the new stores will also increase in terms of how we see the business.
Pradeep, I wanted to ask you about the store expansions. You were mentioning that you plan on expanding into cities like Delhi, Mumbai, and in markets like these, the rent is mostly shooting through the roof. And what is your rent expense as a percentage of your stores? And would that increased rent expense and real estate cost be a risk to your profitability as well going forward?
Yeah. So currently my rent expense, is somewhere between 9 to 11%. We typically, when we operate and when we identify location, that's a very, very important, driver for us. We operate out of very large showrooms. We need that much of space to display, our products and, to give the experience to the customers. I think that's a very important piece. And I think when we expand into new geographies, location and rent cost is a very important aspect. So we decide, the location is important here. And of course, getting the right location at the cost that we want is a very important, aspect of the overall retail business. Not only for us, but for the retail in general.
All right. So 9 to 11% is your cap on the rent that you're willing to pay as a percentage of sales every store. I'm looking at your margins over the last 2.5, 3 years. They've been anchored around that 18 to 20% mark. What are the triggers for margin expansion from here on? And, how are you likely to look at margins at a store level, at a company level, franchise versus own stores? Sunil, you can go for it.
Yeah, sure. So basically, when you really look at what we are doing is the 5 major metros, we have decided to have only company-owned, company-operated stores. There we are expanding on a cluster basis. In our entire B2C, we are a 100% cash and carry company. So including to the everything that we sell to the franchisee is completely sold out in terms of the model itself. So while we have a lot of inquiries for franchisees all over the country, we're very careful because in the segment where we are playing, it's very important to ensure the market is ready. Sometimes there are smaller towns and cities which are closer to major metros, and the catchment in the segment where we play, the customers normally travel to the major cities and do the purchase there. So very carefully we are growing in terms of COCO as well as FOFO model. So from a margin expansion, what we have really done is we were originally known more as a living room or a sofa brand for almost 10, 12 years. But last 5, 6 years, we have invested in a manufacturing facility capable of manufacturing complete solution for the home. So we are able to provide furniture for every room of the home. That means kitchen, wardrobes, beds, mattress. So we are actually becoming a one-stop shop for a premium and luxury home. Thereby, the average ticket size of a customer who spent about 2 to 3 lakhs with us about 3-4 years ago is now becoming almost 5 to 7 times more. So that is the way we are expanding our business.
Right. Pradeep, I wanted to ask you about your working capital days. They are currently seem to be on the higher side, and they're stuck because largely in inventory. How do you plan, if you can share a number for that as well, and how do you plan on bringing that down?
See, my average inventory holding in absolute term is, pretty high. And then that number when you see, when I say it is very high, it is also to understand that these are the inventory which is logged in display inventory when I open a new showroom. So as we expand, for the in geographies, this number in absolute term will keep increasing. And I think, when we do a 15-20,000 square feet of showroom space, it requires a lot of product to be placed in the floor. And actually, that's a kind of an asset that we have where we are able to give a lot of customization offerings, wide variety of choices to the customer. I think what happens is when the store becomes fully matured in 3 to 4 years' time, then we see the real impact of inventory turnaround, really paying off. So we need the stores to get matured for these days to come down. Yeah.
We still haven't
carry some raw material inventory, yeah.
All right, we still haven't gotten a number from you, so I would just, you can say yes or no. Sunil, with the 25 stores that you're planning to add over the next couple of years, given your current store revenue run rate, is an additional 180 to 200 crore of top line possible because of these new stores in the next couple of years?
Like I mentioned, I think we are targeting 1,000 crores in the next 3.5 years. Like I also mentioned to you, most of the other stores which are not fully matured are going to come to maturity. So we believe that our business, about 80% of our business is B2C and 20 is B2B. That formula will continue, and we are targeting 1,000 crores in the next 3 to 4 years.
All right, 1,000 crores on the top line in the next 3 to 4 years. That's the headline coming in from the management of Stanley Lifestyles. The IPO opens for today. The company is seeking a post-listing market cap of close to 2,100 crores at the higher end of the issue price band. Thanks a lot, gentlemen, with a promise to speak once again when the stock lists, and then we get details and more numbers out of you. With that, we'll slip into a short break. On the other side, we have the management of Transport Corporation of India, Vineet Agarwal, the MD, waiting by.
Paralleled growth.
CNBC-TV18, embarking on a quarter century of excellence. This is India's election headquarters.
As the verdict emerges, the markets will react.
Bringing market movements into sharper focus with the most authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things are not looking very good for the ruling regime at this juncture.
Of course, things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startups.
Back with us here on Chartbusters, and on to another corporate conversation then is turning our attention to logistics solutions provider Transport Corporation of India. The company's managing director Vineet Agarwal joins in to discuss the future business outlook and a peek into demand expectations from the upcoming union budget as well. Vineet, good morning. Thanks a lot for joining in. And I'd want to ask you firstly about your outlook for FY25, because in FY24 you grew at around 6.4%, which was slightly lower than your range of around 8 to 10%. Do you see that reverting back to those levels in FY25? What's your view there?
Hi, always good to be here when we are not talking about earnings. Well, last year was expected to be a little slow because of the impending elections and just the global market will also slow down, which had some impact on India. And of course, consumer sentiments in India were slightly weaker as well. Our trajectory of about 10 to 15% on the top line should continue this year, as well as 10 to 15% on the bottom line as well. So yes, the margin was slightly compressed last year, but overall we still did reasonably well. And the businesses all grew, and we had a very strong position to take this forward.
All right, 10 to 15% growth on both the top line and the bottom line would imply margins around that 10 to 11%, which would sustain. Let's talk about the Seaways division, though. I mean, there has been a lot of international uncertainty. People are talking about geopolitics, etc. What routes do you operate, and was there any impact of crisis on your performance? How have freight rates panned out in the Seaways business?
See, our Seaways business operates domestically. We operate on the West Coast with ships operating from Kandla to Cochin, and on the East Coast from Vizag, Chennai to Port Blair. So the international rates don't really directly affect us, but indirectly they do. We know that the crisis that happened is happening right now in the Middle East. The Panama Canal recently had a crisis where they were actually struggling to have enough water for the ships to pass through, which is now resolved. But all of these have led to an increase in prices globally for ships as well, not just container rates. And that has an impact when we are trying to acquire ships. Clearly, the impact is also there indirectly on fuel, because fuel is a direct correlation of what is happening in the Middle East, for example. And that has an impact on India as well, where the bunker prices have gone up. Though the fuel prices on our pumps are not gone up, but on the bunker level, the prices have gone up as well. So there has been a slight increase in freight rates on the domestic sector, but not really that impactful. However, the acquisition of ships has been very difficult. We've been looking to buy ships for a long time now, and we've just not found the right ship or the right quality. We've also looked at buying new ships and giving orders, and we're in the process of discussing and trying to finalize some of that.
What could be the reason behind that, Vineet? The struggle behind the lack of ships for acquisitions? You've been placing new orders as well, but when do you expect that to fructify?
Actually, the new order that we had placed had got cancelled by the shipyard, actually, because they had some issues with their banks. However, we're in the process of looking at new orders, which should start happening and should deliver, if everything goes through, by the middle of 26. However, the second-hand ships, which is typically what we tend to buy, those are not available because they have been plying on several trade sectors, which are short trade sectors. We don't buy the very large ships. We buy little mid-size container vessels. So it's the international crisis that has really driven these prices up quite substantially.
So 26 to 27% margin in the shipping business likely this year?
That's right. I think that should continue. The business is stable. The capacity is, we don't have extra capacity, but the rates are also stable. So I think this margin structure should continue.
All right. I just wanted your thoughts on two verticals which you recently entered into, the potential, the rate at which they're growing, and the targets that you have for the next couple of years for this one. You did almost 90 crores in the cold chain business in FY24. That is a fast-growing business. What are your targets for this business over the next 2 to 3 years? And also chemical logistics. You entered that business last quarter as well. So what are your targets here in terms of revenue contribution?
The cold chain business is very exciting. I think in the next few years, we are going to see a dramatic shift of consumer trends towards more and more processed foods, as well as the fact that there is QSRs that are growing. Chemicals are themselves require certain kind of cold chain, as well as even semiconductors might require cold chain in the future. So the potential is massive, and we are looking to grow at about 20-25% CAGR for the next 2 to 3 years. We made a substantial investment last year by investing 75 new trucks in this space. We're adding cold storage capacity as well. And this augurs very well for the business in terms of the next 5-10 years. It's a high growth business. The second is chemical logistics. Again, chemicals in India has been very much fragmented in terms of the logistics. There have been more unorganized players that have been there. With the China Plus One strategy, we are seeing chemical companies also adding capacity in India, as well as Indian chemical companies growing and wanting world-class transportation and logistics best practices. We are providing those now. And we've been doing for some years, but now we've structured this into a more definitive entity to grow this business forward. And it is, again, an extremely exciting space as well.
Very quickly, we need, due to paucity of time, 10 to 11% margins is a reasonable target to achieve for FY25?
Yes, it is. That's the short answer. However, being here, I would definitely like to take the opportunity to tell you that the budget needs to have a lot more focus on infrastructure. The need for infrastructure for logistics is imperative. That's the only way we can actually reduce the logistics cost by moving towards more multimodal logistics, and hence infrastructure is very important.
All right. Thanks a lot for joining in, and we would have liked to speak with you a lot more, but due to paucity of time, we'll leave this conversation right now with the promise of more after the budget is announced. Hopefully, some softs coming in your way for the logistics sector as well. With that, what we'll do is we are out of time on this edition of Chartbusters. From Hormaz, me, the entire team, thank you so much for watching. In the while we were talking to the managements, the market has slipped a little further. The Nifty is in the red, as you would see at the top of your screen shortly, with the Nifty Bank lower by almost 0.75%. The mid-cap index is holding up, but not with as much gains as it was about an hour ago.
To becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
We are hoping to see the credit growth in the range of about 14 to 16%, and we expect to see very broad-based growth in credit, right from SME, agriculture, retail, and also in the corporate. As far as we are concerned, our domestic NIM last year was 3.43, so I expect our domestic NIM should be around the same number.
The shock and awe story of NVIDIA, Shankar. I mean, today the most valuable company in the world. For most of us, the big breakthrough moment as far as generative AI was the ChatGPT moment. But for you and for the folks at NVIDIA, I mean, when did you start to think that this was on the verge of an explosion?
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, you know, we've been doing deep learning since 2012. Jensen, you know, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight.
Hello and welcome to Trading Hour. I'm Sonal Bhutra and with me is Surbhi Upadhyay. Surbhi, good morning. And it is turning out to be a Friday, which was not something that the bulls would have liked. Nifty is down 150 points from the highs of the day. The mid caps, which have been doing well, they continue to do well, 180 points higher on that one. But IT index, that's the one which is in focus today after that commentary coming in from Accenture. They've maintained their guidance, and that is something that the street likes, because so far there was a worry that maybe demand won't continue, budgets won't continue the way they did, and that has come as a relief now.
Oh, absolutely, and if it wasn't for the IT part of the market, then the Nifty would have been looking very different, because banks have disappointed. Absolutely, take that point, Sonal. Bank Nifty, after having 2 or 3 good days, after having actually a good week, is seeing immediate profit taking right now. So the index was up about 3.5% before we started today's trading action. Now it's already shaving off some of that recent up move or upswing that we've had. But the counter is largely IT. There are some auto stocks which were cooling off in the earlier part of the week, but now the buyers are coming in. So, for instance, Hero Moto is seeing some traction. There are some names like Cipla and Dr. Reddy's from the pharma space that are also finding takers this morning. But other than that, I mean, apart from banks, a couple of other big boys are also dragging. Look at Reliance, look at L&T. These are not stocks that are really contributing. So I guess, Sonal, perhaps it's a bit of fear of heights, right? We've seen that in the US market as well with this non-stop rally. Yesterday was a cool-off day. And perhaps here as well, some consolidation setting in to digest the recent gains.
But you know, every time there's consolidation, there's a rally. It's followed by a rally. So we don't know which way things are going. But for now, for today at least, markets are consolidating. The Nifty lower by 40 points. But let's put these questions forth to our guest today. Gautam Baid from Complete Circle Stellar Wealth PMS is joining us now to discuss the market fundamentals and his stock sectoral picks as well. Gautam, good morning. Thank you so much for joining us. Always a pleasure speaking with you. You know, as Surbhi was just pointing out, maybe markets are afraid of the highs now. There's a fear now in terms of higher valuations. We are seeing the support only coming from Nifty IT today so far. But in the broader markets, what is your suggestion? You know, because most of the stocks have rallied. Do you think there is still some steam left, or now investors should be a little careful in that space?
Hi Sonal, hi Surbhi. Thank you for having me on your show. You're absolutely right that the valuations of the good quality growth stocks in the broader market have become very expensive. The markets have obviously rapidly factored in the continuity of the policy of the current dispensation. And from here on, one needs to be very selective and have a bottom-up approach and focus on those stocks which are having very strong earning visibility and enjoying sectoral tailwinds. Because if and when the market does experience a correction in the future, the stocks which are basically just going up on hope without really any strong earnings to back them will fall the hardest. So now is the time to actually make use of this rally to consolidate your portfolio into the stronger names and high quality stocks. That is the strategy from here on.
Okay, Gautam, hi. Always great to have you on our show. So we were looking at some of the picks that you have in mind, at least stocks that you are looking to own. And I want to start with ICICI Bank, and that's really interesting, right? So anyway, banks have seen some interest come back after a long, long time. But I'm wondering why you're going for, say, an ICICI Bank specifically and not with the other market favorite, which is HDFC Bank, because there's so much chatter around whether that FPI headroom sort of increases, and if they get added to the MSCI indices, if the weight goes up, then anyway, there's like billions of dollars waiting to flow in the stock. So just technically, the stock could rally. But despite that, on a fundamental basis, you're going with ICICI Bank. Why is that?
Well, so the time to buy a well-managed franchise is when the entire industry is out of favor with investors. And most of the private sector banks in India today are trading below their long-term price to book mean multiples. And there are 4 key reasons why this has happened. Why this entire pack of private sector banks in India have undergone a derating over the last 3 years. The first big reason is competition from public sector banks. So between 2010 and 2020, there was negligible competition from the public sector banks because they were beset with asset quality issues But once they became strongly recapitalized, then we have seen in the last 4 years that the private sector banks have faced increased competition from these public sector banks. The second reason for the derating of the private banking space has been net interest margin compression. As people have taken money out of bank fixed deposits and moved more into the capital market side, the banks are in an increased competition among themselves to increase deposit rates, and that in turn has pressured the net interest margins. The third factor which has led to the derating of the sector is regulatory action. So if you look at the RBI actions against Paytm Payments Bank or against Kotak Mahindra Bank, then those regulatory actions have further soured sentiment of investors in the financial space. And fourth and very important technical reason is that over the last 3 to 4 years, we have seen billions of dollars of FII selling. And as we know, financials and especially private sector banks were one of the largest weightages in foreign investor portfolios. So that intense selling also led to derating of the sector. However, you are getting a very well-managed bank with a negligible net NPA. The FY26 net NPA for ICICI Bank is expected to be below 0.5%. And you're getting this bank at a price to book multiple of less than 2 times on FY26 basis with return on asset above 2%. So I think the only key risk to monitor here would be any increased stress in the unsecured personal loans and credit card portfolio of the bank. But other than that, I think this is the time to actually go in for this particular franchise. And you also mentioned HDFC Bank a while ago. Here I would like to mention that ICICI Bank is far better placed compared to HDFC Bank when it comes to the credit to deposit ratio. The unsaid or implied mandate of the Reserve Bank of India is for these banks to bring their credit to deposit ratio below 80%. As of today, HDFC Bank has got a credit to deposit ratio of 110%, whereas ICICI Bank has got a credit to deposit ratio of just 85%. As a result, HDFC Bank will have to increase its number of branches to increase the deposits, and that will put pressure on its cost to income ratio. And they'll also have to increase their deposit rates as well. So that will lead to suppressed net income growth. So that way, ICICI Bank is much better placed.
Okay, got it. Thanks for the perspective. That really answers my question. I was wondering why not HDFC Bank, but it's that CD ratio that you have on your mind. So we'll keep it on our mind as well. Sonal.
Yeah, but Gautam, I just want to understand also now, from here on, do you think money will move completely or mostly from PSU banking space to private banking space? This is something the investors will focus on from here on?
Well, I don't think there'll be a wholesale shift from the public sector banks to private sector banks, but right now you're having many of these public sector banks trading at a premium to private sector banks. I think the corporate governance or the governance risks and the regulatory and the political risks still exist in the public sector banking space. So this discount which the private sector banks are now trading to their public counterparts, I think it's unjustified, and that gap should narrow. So that will lead to some extra alpha generation for investors in this private banking space, in my view.
Okay. Gautam, what else? I mean, so we've spoken about banks. Before we get to your next idea or the next company that you like, just a word on IT, because that's today's flavor. Everybody's trying to sort of read between the lines on Accenture's numbers and figure out if the turnaround is around the corner. You know, IT stocks are amazing because they've had fantastic trading bounces and trading rallies when none of the companies so far are going out there thumping the table and saying, hey, demand is coming back. But it's just, I think, interesting market positioning that we've got going. But what do you think, and what is your sense on IT?
Well, so we often see, like today, for instance, the Nifty is in the red. Whenever the markets go down, IT tends to do better. Also, yesterday, the Indian rupee touched an all-time low versus the US dollar. So it's more of a tactical move, in my view. It's more of a short-term trading bounce, and because a lot of traders and algos basically they just monitor the rupee dollar exchange rate, and then they make their short-term positions. So I think we are just having a tactical bounce, but there is no strong demand uptick as such in the IT services space right now. There are so many pockets in the market today which are promising you 20-25% or even higher growth rates. So why go for single-digit growth in such a raging bull market? You want to be in pockets where you get very, very high growth because you get rewarded very handsomely for backing high growth in a bull market.
Okay. So that's about IT. The other stock or the pick that you like is Ethos. It's a play on the luxury market as well. We've spoken about how post-COVID luxury market has seen a one-way move. Tell us first, why do you like this particular name in that segment, in the consumption segment? And what's your take on consumption in general? Do you think that could be the theme going forward?
Well, consumption has been an evergreen theme in India for the last few decades. But as of today, rural consumption, has been a bit slow and been struggling actually over the last 2 years. But there are clearly green shoots visible. If you look at the commentary in the conference calls of FMCG companies and consumer staple companies like Dabur, Britannia, HUL, it was very clear in the March quarter itself that rural India was beginning to heal. And now with this recent coalition government mandate, I think the government is going to put an increased emphasis on boosting rural consumption and boosting the incomes of the rural population. So you may see a further uptick in the two-wheeler auto ancillary names, as well as the domestic agrochemical companies. We are already seeing the market starting to factor in the improved prospects in those two areas. But one theme which has been in vogue for the last decade is premiumization, and especially the upper end consumption in the industry. So the luxury market in India is expected to expand 5-fold over the coming decade. And Ethos Limited, in our view, is one of the best premiumization plays in the listed space in India. The company has given a very strong store expansion guidance. As of May 2024, Ethos has 63 stores in 24 cities in India. And the company plans to add 25 new stores in FY25 with a total store count guidance of 150 in the next 5 years. Now, most notably, this company offers you scope for margin and ROC expansion along with revenue growth. And where will this margin and ROC expansion come from? It will come from 4 key factors. Number one, the company's entry into the high margin certified pre-owned watches segment. The working capital requirements in this particular segment is much more lower compared to its existing business of selling new watches. And that should give a boost to the return on capital employed of the company. The second factor which will boost the margins of this business is the increased share of the exclusive watch brands portfolio in its collection. So that will also boost margins. Number three, this company is basically diversifying into rapidly expanding lifestyle categories like luxury luggage through the Remova brand and luxury jewelry through the Messica and Bulgari brand. So that will give a further boost with margin. And fourth point is that under the Trade and Economic Partnership Agreement, which India signed with Switzerland recently, the current customs duty of 22% on Swiss watches will be gradually phased out over the next 7 years, starting with a 3% cut in FY25. So this will give a further fillip to Ethos Limited's margin. So when you get margin expansion along with ROC expansion and revenue growth, then you get valuation re-rating in a particular company. And in light of all these factors, the current valuation at 40 times FY26 multiple looks fair. The improved earnings visibility, the improved longevity earnings growth of this business, and the expanding terminal value provide scope for further re-rating from here.
Okay.
No. All right. Okay. So Ethos, that explains your stance and why you like that stock as well. Got it, Gautam. Good conversation as always. Thank you very much. You have a good weekend and we look forward to connecting again soon. Well, on that note, we do have to slip into a quick break. Come back on the other side and we'll get you the latest headlines from the commodity markets with Manisha Gupta. Welcome back. Let's now shift the focus to the commodity space. We have Manisha with us, and she is looking at precious metals today. So what's the latest on gold and silver, Manisha?
Well, we have seen both of these commodities surge. The last couple of weeks were not so great, but we've seen the prices come back in favor. So if you look at the overnight markets, we saw gold prices gain up by 1.5% and silver jumped up by 3.5%. And it's back at around that $30.5 per ounce mark. We did see silver prices hit an 11-year highs of 32, went down all the way back to 27 and below. And we've seen some opportunity buying come back in both of these precious metals right now. Well, one is you have the US economic data not come in so well, and that has led to the US dollar decline. That has been supportive. And we already have seen ECB and Bank of Canada cut interest rates, and the markets are anticipating that come third quarter, and you will have more central banks joining that bandwagon. And it also is about, various geopolitical tensions, especially in Red Sea, and the kind of statements that we are hearing from Houthis, also between Russia and Ukraine, where there have been more drone attacks. So all of that geopolitical premium also seems to be coming back. Even more interestingly, it is about the global central bank buying. It was a record global central bank buying in 2022 to the tune of 1,082 tons of gold. 2023 also was a second highest year in sense of global central buying at around 1,037 tons. Now, the first quarter of this year has seen almost 298 tons of buying, and the month of April has seen another 33 tons being added to it. The month of May also has been on the stronger side. Barring China, most of the other 14 global central banks actually bought gold. Even more interestingly, the World Gold Council recently reached out to 70 global central banks, and they've come back with a report suggesting that most of these banks are talking about adding further gold reserves within their kitty. So there's almost 29% of banks which said that they will be adding gold. You have 81% banks telling you that the reserves will grow going forward. No bank said that they would sell any gold going forward. And the next 5 years, many of these banks anticipate that the gold holding from global central banks would be much higher than what they hold in their reserves. Clearly talking about de-dollarization here. So gold clearly in favor because of that. And since the time this report has come in, you have had various banks and brokerages tell you or give you much dizzying higher highs in sense of forecast in case of gold.
Oh, wow. So that is what's happening with precious metals, and especially gold, and that has been the commodity. Everyone's been talking about the big surge that we've seen there. Thank you, Manisha, for joining us with those updates. As always, hope you have a sparkling weekend, and all of us here as well. With that, we'll do one thing. We'll slip into a short break. When we return, we'll discuss market technicals with Mitesh Thakkar and also discuss their top trading bets. Stay tuned.
After the NEET controversy, there's more bad news for students in India. I'm talking about 9 lakh students to be precise. The Education Ministry has cancelled the UGC NET exam, or the National Eligibility Test, which is conducted for the post of assistant professors in universities and colleges. The reason is that the government feels that the integrity of the examination may have been compromised, and the CBI will now probe the matter. The shocking part is that the exam was cancelled within 24 hours of it being conducted on the 18th of June. It was conducted by the National Testing Agency in 317 cities across the country. Now, why was the exam cancelled? According to the Education Ministry, the National Cybercrime Threat Analytics Unit of the Indian Cybercrime Coordination Center received some inputs indicating potential compromises in the exam's integrity. It could be paper leak, it could be anything. The details of this have not been revealed as yet. The UGC NET exam is conducted by the NTA twice a year in June and December. Now, what happens next is the big question. Now, exams will be held again with the dates to be announced soon. There's no clarity on that yet. There have been reports of the examination paper being leaked, but the government has not confirmed this as yet. Remember, this comes in the wake of the massive NEET controversy, where nearly 24 lakh students appeared for the UG 2024 medical courses entrance test, which is also conducted by the NTA, or the National Testing Agency. It happened on May 5th. The results were announced on June 10th, 10 days before schedule. But allegations of a question paper leak, grace marks to over 1,500 students, and copying, mass copying, these allegations triggered protests across the country. Cases were also filed in various courts, including the Supreme Court, which has come down heavily on the NTA. Why are we talking about exam paper leaks and exam cancellations and such scams in states like UP, Rajasthan, Madhya Pradesh, Bihar, Telangana, among other states? It's because it's been a key concern for young voters in the age group of 18 to 25. An investigation by the Indian Express revealed that 41 paper leaks over the last 5 years in 15 states affected 1.4 crore job seekers who had applied for over 1 lakh jobs. Now, exams continued to get cancelled and recruitment for state-level government jobs got postponed. In UP itself, 3 major competitive exams for government jobs were hit by question paper leaks in 2024. In India, getting a government job is a safe bet for many aspirants. And in the event of a paper leak or exam cancellation, millions of students get affected. It's a waste of their time, money and effort. Not to mention, it's also a waste of public money. The future of millions of students is at stake. After NEET, NET is in the headlines. The question
Welcome back. You're still tuned into Trading Hour. Well, one sector which is supporting the markets today has to be IT, and this is on the back of Accenture reporting its numbers. The constant currency revenue growth, it was up 1.4%, the revenue decline, but the Indian IT stocks, of course, in focus on the back of brokerage notes, the commentary coming in from Accenture as well. Hormaz is joining us now to sum that up for us. Hormaz.
Well, as they say, no bad news is good news, and that's what's rubbing off on the IT stocks as well. If you can see the top 5 gainers on the Nifty, all are IT stocks, be it Infosys, TCS, Wipro, Tech Mahindra, all of them are trading with healthy gains in today's session. That's on the back of Accenture reporting earnings last evening. And they reported a revenue of $16.5 billion, which was 1% lower in US dollar terms, but 1.5% higher when it comes to constant currency terms. When it comes to adjusted revenue, when they're adjusting it for the Forex impact, the revenue was well within the line of their guidance of $16.1 billion to $16.7 billion. The no bad news bit comes from the fact that they have not cut guidance. They have narrowed it down. They've narrowed the band because they have lowered up to the lower end, but lowered the upper end of the guidance. So now it's 1.5% to 2.5% compared to 1% to 3% earlier. Remember, in the previous quarter, they had cut it down from 2 to 5%. So that saw an impact on IT stocks. The bookings also at 21.1 billion, up 26% in constant currency terms. That was a positive as well. There has been a lot of emphasis on generative AI in this quarter because the new bookings were at $900 million. Year-to-date sales have crossed $2 billion within the generative AI segment, and the revenue within this segment has now reached $500 million compared to the $100 million that they had in all of FY23. Now, in the earnings call also, they have highlighted that they are seeing strong demand for digital manufacturing and engineering services. The discretionary spending is constrained, but clients are prioritizing large-scale transformation for revenue conversion, for which is pretty slow. Now, Morgan Stanley is saying that there are some positive data points from this, that there is strategy and consulting businesses returning to growth, and they are seeing this as another confirmation of growth rates bottoming out. But when it comes to discretionary spending, there are still no signs of a revival in that. Now, CLSA is also saying that the lack of decline, the fact that they have not cut guidance is a positive, but they are seeing no material change this quarter when it comes to earnings of these IT companies. They are expected to remain on similar lines compared to March, and they see further downside to the consensus EPS estimates. For on Nomura, they are cautious as the discretionary demand is still some time away, the revival. The Tech Mahindra is their top large cap pick. Coforge, Birlasoft and eClerx is their top mid cap recommendations, and they have a reduced rating on TCS, Wipro, LTI Mindtree, LTTS and Emphasis. So brokerages still remain on the cautious side, but the street is cheering the results from Accenture.
Oh yeah, absolutely. That coupled with the weakness in the rupee is spelling lots of green for IT stocks today. Hormaz, also tell us about FirstSource. That stock, or rather that company, seems to be giving out some pretty big numbers in terms of guidance. $1 billion in revenue. When is this buy?
Big numbers indeed, and they had their analyst day, and they're saying that this $1 billion revenue run rate, they aspire to achieve that by the fourth quarter of FY26. So which is by the end of the next financial year is where they want to achieve this revenue run rate. The other target that they've given out is they aspire a 15% EBIT margin by over the medium term is what they are saying. Now some other takeaways from their analyst day is the fact that they don't have any stated dividend policy, but they they have been paying out around 45 to 50% of their profit as dividend back to shareholders. The senior leadership both has time and performance-based stock incentives as well for FirstSource. Now, usually we don't hear IT companies having debt, but FirstSource does. It has a net debt of around 600 crore rupees in FY24, but that is largely for working capital purposes, is what Nomura is saying in its note. And they also laid out some M&A ideas. They said they did not say that they are under works, but they said that if at all they do plan to do some M&A activity, it should be for capability building and not for revenue accretion. So Nomura on FirstSource remains neutral. It has a price target of 200 rupees. 10 analysts have coverage on it. 8 of them have a buy rating, 2 of them have a hold rating. But some big targets laid out by FirstSource, and the street is appreciating that.
Okay, all right, definitely. And Rima always tells us it's not the numbers that the street looks at, but definitely the management commentary, and that's why the stock is reacting on the analyst day takeaways as well. Thank you, Ramas, for joining us for that. But a lot of movers in the broader markets. One of them is Time Technoplast. It surged by almost 15% now as the company has received final approval for the manufacturing and supply of high-pressure Type 4 composite cylinders for green hydrogen. Upasana is here with all those details. Upasana.
Thanks so much for that. Well, Time Technoplast will remain in focus as the company has received final approval from Petroleum and Explosive Safety Organization. This approval is mainly for the manufacturing and supply of high-pressure composite cylinders for hydrogen. It is the first Indian company to receive this approval, and it believes that the move is in line with company's efforts towards sustainable green energy. With this approval, company says it is poised to capitalize on rapidly growing market driven by global shift towards sustainable green energy. It believes that this technology will certainly have a positive impact on both, that is industry, as well as on the environment.
All right, got it, Upasana. Thank you very much for that. So that's Time Techno also in focus today. Well, with that, let's, that's a big move, almost 15% on the stock. With that, let's go across to Mitesh now and get some more trading ideas going. Mitesh, thanks for joining in. I don't know if you track Time Techno or not, but quite a few stocks in focus today. IT is doing very well. Just give us a general sense and then we'll come down to the specific trades.
So I think the IT did well with the Accenture numbers, and we've had a good gap up opening and good follow through over there. But this market still looks like more of consolidation. So I think trading should be stock specific. I think we maintain that approach that despite the fact that we are hitting new highs, any fresh breakout isn't bringing a fresh momentum. This movement which started from the post-election day results has been stretched. And I think on the hourly to 2 hourly charts, there is now signs of, tiring out. So maybe a pullback will happen, then we'll see some upside. But on the stock side, I have one buy and one sell. Havells is a buy with a stop at 1864 for targets of 1940. And Hindpetro or HPCL, that's a sell. Keep a stop at about 346 and look for targets of 325.
Okay. All right. Thank you so much, Mitesh, for joining us. HPCL, by the way, it has to be adjusted for that bonus. The ex-date is today. So HPCL is flat, absolutely flat today. That is not the rate we should be showing right now. But we'll slip into a short break. Up next, we'll focus on the stocks that are buzzing in trade on the back of fresh brokerage calls. Stay tuned for that.
Education system pass the credibility test.
The latest challenge that you're up against is the US government looking at whether again there is a violation of policy and whether there are sort of fees that are being collected without consent or explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. we offer customer choice and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around investing.
Well, there is a little bit of pressure. The fact that banks are reversing their up move through the week, that's telling on the Nifty a little bit. So that index is down about 50 points as we speak. Look at State Bank of India, look at Axis Bank, additional dip coming in on some of these banking stocks. So it's a bit of a profit-taking day. So SBI days low, Axis Bank days low. Plus, look at what's happening to some of the tech names, TCS, Infosys. They're losing a little bit of that, excitement of the morning. TCS is still up, so is Infosys, but slightly off the high. So let's watch how this goes. Right now, we are putting the spotlight on some more stocks in the broader market. Cummins and Kirloskar Oil have been moving higher on the back of a positive note that came in from Motilal Oswal. Motilal Oswal feels that these companies are going to see strong demand from pretty much all their segments. Vamakshi has more details. Vamakshi, fill us in. Why does Motilal like these two?
Well, absolutely, Surbhi. Motilal Oswal has come out with a report on both of these counters, and this report is with regards to the channel checks that they conducted on the genset segment. They have highlighted that the demand so far in the first quarter of this financial year looks very strong. The overall genset market stands at nearly 10,000 crores, and the domestic demand is strong across low to mid kVA ranges, and this is mainly on account of pre-buying ahead of the CP-CB4 Plus implementation, and there is very strong demand coming in from all segments. Demand, however, could moderate in July to September of this year is what they expect. But on the other hand, data centers, which is a key growth driver for the high horsepower genset segment, that is growing faster in low to mid-range, and that is growing faster as compared to low to mid-range gensets. The competition is also is rising in the smaller nodes. Kirloskar Oil and Mahindra Powerol are more dominant in this particular market, but Cummins India is itself ramping up in the lower nodes, and as a result, the competition is expected to rise. The pricing for these new gensets are expected to be higher by almost 30 to 40% across most nodes, and in fact, however, the pricing is expected to moderate over the next 2 to 3 quarters as most players may achieve their desired market volumes and may pass on some bit of cost savings to their customers. The export markets, however, still remain weak, but nevertheless, the companies are taking initiatives to export new products, and this could likely reflect in the next few quarters. As far as company-specific growth strategies are concerned, Cummins is expanding presence across all nodes. It is also expected to benefit from strong demand for high horsepower from data centers. Kirloskar Oil, on the other hand, is focusing on improving overall product mix in the domestic market. They're targeting to grow exports too, and this in turn will drive the overall margin improvement for the company. As of now, Motilal Oswal has a buy rating on both of these counters. For Cummins, the target price is 4,300, while for Kirloskar Oil, it is at 1,500 per share.
Okay, thank you, Vamakshi, for joining us with all those details. Gensets becoming that big talking point about all these companies with the new CPCB norms kicking in very soon. The other stock on our radar is BKG. It has gained as brokerage firm Nuvama has initiated coverage on the stock. It is a buy rating. Manglam is joining us with the details. Manglam, what is Nuvama saying?
Well, Nuvama is saying that the bhujia for BKG is pretty good. Why is that? That's largely because, it's expanding in the rapidly expanding Indian savory snacks market. They've initiated coverage with a buy rating and a target price of 885. They say that this is the third largest in organized ethnic snacks market. They have about 9% share. They're also the market leader in family packs, which is about 60% of their salience, or 60% of their business actually comes in from more than 5-10 rupee packs, the bigger packs itself. And they are leaders in their core states, which are Rajasthan, Assam and Bihar. And not just that, they are looking to expand their domination there and increase their market share by at least 1 or 2% going forward as well. Add to that, they've invested ahead of demand in their capacity, and increased capacity utilization will propel its return on capital employed to about 32% by FY27 earnings as well. So strong demand, good shift from unorganized to organized, and increasing market presence are the few key factors that, has Nuvama take that bite of BKG. But that's not the only snacks stock in focus in today's trading session. On the back of that note, we've seen a positive rub-off on some other players as well. Gopal Snacks, for instance, is buzzing around in today's trading session. They are Gatia makers, and you also have Yellow Diamond Chips makers, which is, Pratap Snacks. That's buzzing around in today's trading session as well. So if you're a snacker, good Friday for you.
It's a very weekend-friendly update. Mangalam, thank you very much. And I think we worked up quite an appetite on the back of that. Thanks for getting us the latest on some of those listed entities and stocks. Well, with that, we have to move forward and talk about, actually before we talk about the next segment, which is fertilizers, I think we have to take a break. So let's do that. Take a break and we'll come back on the other side. We'll have Himanshu Binani of Anand Rathi Institutional Equities, and we'll dive a little deeper into this absolutely phenomenal fertilizer rally that we've seen on the street over the last few days.
Me. And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that, the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person, either owning a team or at least supporting a friend's team.
And so it's a passion, and I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, whether it's Satya or me, we love cricket and we'll continue to champion and passionate it. We're coming up with our...
Welcome back. You're still tuned into Trading Hour, and last couple of days we saw those big moves on fertilizer names. Today some of them have come in for some profit booking, but the run has been really stellar. Sources told CNBC-TV18 that the Fitment Committee has called for the proposal to cut GST on fertilizers to be rethought by the Standing Committee. To discuss this and what's working for the fertilizer space in general, Himanshu Binani, research analyst in Anand Rathi Institutional, is joining us now to discuss more. Himanshu, good morning. Thank you so much for joining us. I just want to understand, is this possibility of a GST rate cut the only things that's working for fertilizers, or are there other triggers as well for the space overall? I know you don't cover all the stocks, but just in general, what's working for the sector?
Right. So good morning, and thank you for having me there on the show. So first of all, when we actually look into the fertilizer segment, so we have seen a very stellar sort of run up into the stock prices for the last few days. So, however, we are of the view that this sort of GST rate realignment basically, and number one, bringing the natural gas under the GST regime. So this has been going on for quite some time, and what I understand is that this in turn is not likely to have a meaningful impact basically on the overall earnings profile of the companies. However, there has been some talks in terms of the DBT regime, which is likely to get revised, and if at all the government comes up with a DBT 2.0, so which is currently into the pilot stages. So if that comes in, that in turn would result into a re-rating basically into the overall space.
So you're saying that this news around possible reduction in the GST rate from 5%, this is not particularly meaningful. And even if, you're saying even if natural gas gets it, anyway, it's not being discussed in tomorrow's meeting, but you're saying even if natural gas gets into GST, that will not have much impact on the feedstock prices for fertilizer companies, Anand?
Right. So basically, when you actually look into natural gas, and if at all we consider that natural gas coming in under the GST regime, so one has to understand that natural gas is like largely used by the urea players. From natural gas, we get ammonia, and from ammonia, we get urea. So in terms of like the natural gas, currently we are under that VAT regime. So however, if this so which is like considered as a cost basically for the urea players. So, and one has to understand that the entire cost is like fully passed through. So if at all the natural gas is coming under the GST regime also, I do not foresee any sort of like impact on the PNL. So PNL should be like largely neutral for the urea companies. Secondly, if you look into the non-urea side, non-urea, they do not like extensively use the natural gas. However, the discussion of bringing like the GST from 5% to 0, so that in turn would result that the MRPs are likely to get decreased in the final market, so which in turn would be like providing some sort of help to the farming community. So one has to see that how things play out on that side. Thirdly, when you actually look into the industrial segment side, so each and every fertilizer or moreover the urea players are having an industrial chemical segment also, where they have like excess ammonia which they have been like generating, and the ammonia and the byproducts they are using that in the industrial segment. So one has to see that how things play out on that side. So that in turn would be like beneficial for few of the companies like the fertilizer, Chambal, GSHC, to name a few. So we would be like awaiting for a final print from the government before like jumping to any sort of like conclusions.
Okay, all right. Take that point. And the stocks have been so excited ahead of the GST meets that clarification is very important as well. You briefly mentioned DBT as well. Possibility of that coming in that would put money in the hands of the farmers directly, and the companies will not be, a part of that particular transaction. But there are already no subsidy issues with the companies, right? Do you think the working capital and the balance sheet, they have become better in last couple of years and they're getting subsidy on time, and that is not a problem for fertilizer companies right now?
So currently, when you actually look into the subsidy receipts and the subsidy outstanding, that has been like phenomenal. So one can see one of the like best balance sheets basically, be it FY23 or FY24. So on the subsidy side, the subsidy disbursement from the government has been like very timely, number one. Secondly, in terms of the outstanding, that continues to remain at a very comfortable zone. Thirdly, this talks of subsidy and the DBT 2.0, which necessarily means that the subsidy gets directly credited to the consumer's account than that of the industry's account, basically. So what that means is that the working capital requirement would be less, and to that extent, the interest cost savings and the lower working capital, that would be the impact basically on the PNL as well as on the balance sheet side. So that would be like taken as a positive, and that would be something which the industry would be like celebrating on, and that would be a structural change basically in the sector.
Okay, all right. Other than that, I also wanted to understand the nano urea opportunity, because there's been a lot of chatter around that as well. We had Coromandel International talking about that new nano urea plant. Is it something that would be earnings accretive for some of these names? You have NFL as well, which has announced it. They have not, of course, commissioned it yet, because the ground demand has been lower than what was anticipated. Do you think that could be the additional kicker?
Right. So basically, one has to understand, or maybe like look at the nanotechnology this way, that due to the lower literacy rate basically in India. So what is happening is that the farmers are like not adapting to the newer technology, number one. So when you actually look into the nano urea side, so which is like more of a push product than that of a pull product, number one. Now, secondly, when you actually look into the other companies, be it Coromandel also, now they have also entered into the nanotechnology, and they have like recently launched the nano DAP with somewhere around the 200 million capacity, which is somewhere around the 500 ml bottles. So they had started initially with the Vizag plant, but however, they recently got an approval to manufacture this product in their Kakinada plant. So as of now, what we understand is that they have been like getting good response from the farming community, and this would be like the first full year of operations for them. So maybe like we need to wait and watch how things pan out in this current season before like jumping to any sort of like conclusions.
Just to go back to the point on subsidy and policy, in the February budget, I was just checking the numbers. The amount of subsidy was actually reduced. Total subsidy was 24,420, which was lower than the last fiscal. And then it's nutrient-based subsidy, right? I think they kept it for phosphorus-based fertilizers. It wasn't available for potassium and a bunch of others. I think for diammonium phosphate, etc. The subsidies were not, the levels were not increased. Now we're running into the full-fledged budget. So just tell us, in terms of the next triggers to watch, beyond the sentimental impact of monsoon and the GST rate cut, which as you explained is not really material, from a more material fundamental standpoint, what are the next important triggers to watch out for fertilizer companies, given that we are moving towards the budget now?
So from the current standpoint, if you see, so the recent rally has been like more of a pre-budget rally, and this was like fueled by this the incremental expectation of the normal monsoons, basically, which in turn has like fueled this rally. So one has to understand that from the current standpoint, if we see in terms of the valuations, etc. So the industry has been like growing at a low to mid single digit sort of CAGR in terms of volumes over the last 2 decades. And what I understand is that this sort of like run rate is likely to continue going forward as well. Secondly, in terms of the recent MSP increase also. So what we have seen is that they are when we actually look into the prices of the mandi prices of the key crops as well as the MSP. So most of the crops are like trading well above the MSP rates, and going by the better farm economics outlook for normal monsoons, and thirdly the subdued RM prices. So what I understand is that from the current standpoint, each and everything is like factored in, and there would be like no incremental excitement basically from the current.
Got it. So Himanshu, just very quickly, I mean, I take your point that the rally has factored in everything, but purely from an earnings growth perspective, margin improvement perspective, because you said that some of the raw material prices should be cooling off. So just from a pure earnings perspective, which are the stocks that you would watch out for where we could get at least decent earnings?
So from the current standpoint, we continue to like Sumitomo Chemicals, which is into the agrochemical space. So we continue to like Sumitomo Chemicals and UPL in the agrochemical spec, while we continue to prefer Coromandel International in the fertilizer space. So these are the structural plays, and one should like expect a stable sort of like earnings growth going forward also.
Okay, all right. Himanshu, thank you so much for joining us and making sense of what's happening in the fertilizer space. A lot of sentiment uptick is what's been seen in the fertilizer stocks lately. But as he points out that it would not make such a big difference in the earnings landscape. Time for a short break now. Prime Minister Narendra Modi flagged off the 10th International Yoga Day celebrations at Srinagar today. More on this when we return.
Major League, cricket here, and I'm part of the San Francisco Unicorn team, and so it's fun.
So the Hyderabad Mafia is not just taking over tech; it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward. I mean, rather than in this case the mafia, this is all about a passion. And cricket's a global sport, and actually the funny thing about sport just brings together people like no other activity. And just the amount of excitement, but now we have to go win it all, right? I mean, we've just got to the Super 8s, and unfortunately the India-Australia match, I have a board meeting on that day, so it's going to be
big conflict.
No, the board meeting is going to take priority, but I'm going to perhaps sneak a look now and then at what's happening.
I would imagine.
Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity, and low self-esteem.
In India, you see a lot of gum disease, which is also promoted by things like tobacco and supari.
Poor oral health is linked to serious systemic issues like heart disease, Alzheimer's, digestive problems, bacterial pneumonia, preterm delivery, and cancer.
If your teeth, the way they meet, what we call occlusion, is not proper, it can lead to other damage to the joints, to the gums. We have bone loss around the teeth.
Use a soft brush, destroy your brush, don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Well, it is the 10th International Yoga Day, and it was Prime Minister Narendra Modi who himself flagged off all the celebrations across the country and around the world, starting with the Dal Lake in Srinagar on the occasion of the 10th International Day for Yoga, where he was joined by over 7,000 participants. The theme for this year's celebration is Yoga for Self and Society, focusing on yoga's impact on personal well-being and community health. Across India, leaders including JP Nadda, Yogi Adityanath, Naib Singh Saini also joined in the celebrations and the proceedings. Since its inception in 2014, Prime Minister has led the celebration for yoga at various iconic sites across the country as well as overseas.
Okay, all right. CNN News 18's Ishan Bani brings us this.
Modi performed yoga along with at least 7,000 people who had come to become part of that International Yoga Day event being held in Kashmir. It was this beautiful location which was chosen as venue for the Prime Minister's visit and then also his yoga. There were huge security arrangements that were made. Marcos commandos were deployed in the Dal Lake, and also Srinagar. Some roads connecting towards the Dal Lake were also cut down. The Prime Minister yesterday had also mentioned the need for holding of assembly elections and said that very soon there will be elections that will be held in Jammu and Kashmir, and also promised that J&K will soon get statehood. But the messaging was that the Prime Minister coming to Kashmir and getting the scenic visuals from the banks of Dal Lake performing yoga is something which has cheered one and all. While there was excitement among youngsters who were part of this mega event, while others were keenly watching the Prime Minister from Kashmir, because this is a messaging that Kashmir is safe and it can hold international events like G20, International Yoga Day and other major events where a larger participation of people from across the globe have slowly started to be seen. He also said that even in the Gulf countries like Saudi, it has become an integral part of some people, and India's brand is being seen now globally when it comes to yoga. The rain in the morning played a spoil sport, but then there was brief drizzle while the yoga happened, and now even now the rains are taking place, but the event has now ended.
Okay, it's, if you need any inspiration, beautiful scenery of Srinagar, really just adding to the sentiment around World Yoga Day. But Sonal, I don't know, maybe I'll try tree pose for today. At least one pose, one asana I should do today.
You know what we should do? Breathe in all the happiness, breathe out all the stress. That's the best way to celebrate Yoga Day every day. But I think we'll take your leave on Trading Hour today. As we do that, let's listen into a special conversation CNBC-TV18's Shubhani Gharat had with model, actor and fitness enthusiast Milind Soman, his mother Usha Soman and wife Ankita Konwar. Shubhani began by asking Ankita about finding the balance while working out. Take a look.
I have 12 questions, 4 for each one of you. You have to answer them fast in split seconds. Okay? It can't be slow.
Is it a competition? We love
competition. Start your warm-up. Yeah. Start your warm-up. All right. So let's just start.
Is there a buzzer? No.
No, there is no buzzer, but I'm going to start with a tick, tick, 1, tick, tick, 2, short, slow and all. All right. So first question, Milind, favorite exercise to start the day?
Push-ups.
Push-ups. Ankita, quick fix for sore muscles.
Yog Nidra.
I best post-workout snack. Fast. Tick, tick 1, tick, tick 2, tick 3.
Anything that you like.
Anything that you like. Okay. Okay. Go to healthy breakfast, Milind.
Fruits.
Ankita, favorite yoga pose for stress relief.
Stress relief. I would say Titili Asana. The butterfly pose.
Favorite guilt pleasure eye.
A lot. Chocolate.
Yes,
chocolate.
Chocolate. Not chai and Mari?
No, that's not a guilt.
Pleasure. Favorite cheat meal, Milind?
Well, I don't cheat. I eat whenever I like, but I cheat her because she keeps saying not to eat these things. So the thing I think she frowns on most is chocolate mousse.
Yes. Chocolate mousse. Okay. Ankita, favorite indulgence?
Noodles.
Package noodles.
Noodles, really bad.
All the Maggies and everything.
But I allow myself 1 packet.
And the Korean ones.
1 packet a year.
1 packet a year.
1 packet a year. Yeah. I'm going to keep a tab on that.
Really? You know that? Really?
Really? She's got your lie.
No.
It's true.
Okay. Milind, most underrated exercise, according to you?
Push-ups.
Push-ups. Underrated?
Yeah.
Okay.
I mean, I meet so many people who can't do push-ups. It's actually a basic exercise. I would say push-ups, squats and pull-ups are the 3 basic exercises, and then variations of all these.
I can't do pull-ups.
It's pushing, pulling and squatting.
Yeah.
But these are the most underrated. I mean, people should start with that, but they start with bicep curls and...
isolated exercise.
Yeah, isolates. They don't start with all-round body exercise.
Yeah, anything that involves all body
Entire
muscles
body,
together. Ankita, best time of the day to work
One second, I want to
out?
interrupt. The best exercise underrated, Surya Namaskar.
Surya Namaskar. Yes, I think she would definitely agree to Surya Namaskar.
Absolutely.
As the most underrated exercise as well. But best time of the day to work out?
After you have woken up, 30 minutes after you have woken up.
So morning or evening, Milind?
For what?
For working out. What do you prefer?
Anytime.
Anytime.
Yeah.
Anytime. Okay, top tip for staying motivated for your exercises.
Just to feel fresh.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Way to celebrate our own 25th year. with new milestones being achieved on the large street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
This is India's election headquarters.
As the verdict emerges, the markets will react.
Bringing market movements into sharper focus with the most authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things are not looking very good for the ruling regime at this juncture.
Of course, things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup platform? It takes a journey of starting.
Stocks drift down after a strong open. IT and telecom are the big gainers, even as capital goods and financials drag.
Accenture narrows its guidance for FY24 from 1.5% to 2.5%, from 1 to 3% earlier, but strong growth in new bookings and increased adoption of AI raise hopes of bottoming out for the IT sector.
The quarterly revision of FTSE indices will lead to rejig trades today that could draw flows of nearly 680 million into Indian equities. A revision in BSE Sensex could also see Wipro being swapped for Adani Ports.
This will be the century of artificial intelligence. It will be the foundation to determine the economic growth in companies, says John Chambers, chairman of US-India Strategic Partnership Forum and former CEO of Cisco, in an exclusive chat with CNBC-TV18. Good afternoon. You're watching us here on Chartbuster, on Halftime Report. I'm Manglam Malu. With me is Ekta Batra. It's been that kind of a day, Ekta, right? Where, much hasn't changed for the market, be it Chartbusters or Halftime Report. But as we speak, the Nifty Bank seeing some profit taking, the Nifty consolidating in a bit of a range after seeing some supply at the level of upwards of 23,600. And you have the mid-caps which are outperforming marginally.
Hi, Manglam. Yes, absolutely. I think it's the marathon number of shows which you've been on, where you're completely confused about where you're at. But nonetheless, it is turning out to be a week as well, which is quite quiet on the indices. So at current reckoning, the Nifty is going to go home with a gain of around 0.3%. The Sensex also around 0.4%, along with the mid-cap index up around 0.8% on a week-to-date basis. So that's how the setup is at this point in time. Largely, you'd have to say it's more of a consolidatory kind of day. We have the Bank Nifty, which is down around 343 odd points. So that's the only big index which really stands out in terms of specific moves. We have a lot of ground to cover in the next 1 hour. So let's kick off the show with the big story. Accenture has reported their third quarter numbers. The constant currency revenue growth has climbed 1.4%, while the revenue has declined. Indian IT stocks have surged after Accenture posted its quarterly earnings on the back of positive notes from brokerages. Hormuz is here with all of the details on Accenture and the read-through for Indian IT.
they're lending some support to the market, are IT stocks. And if you can see, the top gainers on the index today are all IT, be it Infosys or TCS, Tech Mahindra, all of them. And that is because of Accenture's results. They were reported last evening. Revenue of $16.5 billion, down 1% in US dollar terms, but up 1.5% when it comes to constant currency. But the big takeaway from that is the guidance. And the guidance last time, if you remember, they had cut their guidance from 2 to 5%. They had cut it to 1 to 3%. This time around, they have increased the lower end, but they have reduced the upper end of the guidance. So now it's a 1.5 to 2.5% guidance for revenue growth in FY24 compared to 1 to 3% that they had cut it down to in the previous quarter. Now, what they also said that new bookings at 21.1 billion were up 26% in constant currency terms. There has been a lot of emphasis on generative AI this time around. Total bookings at 900 million in the quarter itself. YTD sales are now at $2 billion, and revenue from this segment has reached 500 million year to date compared to 100 million that they had in all of FY23. So that is another positive there. On the earnings call, the management also said that they continue to see strong demand for digital manufacturing and engineering services. Discretionary spending still remains constrained, but clients are prioritizing large-scale transformations which take a little longer to convert into revenue, is what the management has said. Now, Morgan Stanley is saying that there are some positive data points here as well, that strategy and consulting segments have returned to growth, and they are seeing this as another confirmation that the growth rates are bottoming out. But they said that discretionary spending, the signs of revival are still not visible. CLSA, they also alluded to the guidance, saying that the lack of guidance decline is a positive, but they are not seeing any material change for Indian IT companies this quarter. They expect it to remain similar compared to what was in the March quarter, and they see further downside to consensus EPS estimates going forward. Now, Nomura also remains cautious because discretionary revival is still some time away. Tech Mahindra is their top large cap pick. Coforge, Birlasoft and eClerx are their top mid cap recommendations, and they have a reduced rating on TCS, Wipro, LTI, Mindtree, LTTS and on Emphasis as well. So brokerages are still erring on the cautious side, but the street is appreciating the results for Accenture.
All right, the street is appreciating the results for Accenture. And as we speak, a lot of these mid-cap IT stocks are doing extremely well as well, Hormas. Stay on with us because First Source is among the top mid-cap IT gainers today.
Indeed, and that is because they have laid out some very ambitious targets in their analyst day. And Nomura had covered this, and they have shared some key takeaways from that. And what they said is that there is significant progress that they have made on the One First Source strategy. Among the targets, they aim to achieve a $1 billion revenue run rate by the end of the fourth quarter of FY26, which is the end of next fiscal, and a 15% EBIT margin guidance for the medium term is their aspiration. Now, they don't have any stated dividend policy as such, but they are still paying 45 to 50% of their profit as dividend back to their shareholders. Now, senior leadership of First Source has both time and performance-based stock incentives, is what Nomura is saying. Now, when it comes to debt, they're saying that they still have debt of around 600 crores in FY24, but that is mainly towards working capital. And they also shared some commentary on M&A, is that they haven't shared any plans as such, but they said that if they do end up doing any M&A, that will be for capability building and not for revenue accretion. As a result, Nomura is neutral on First Source with a 200 rupee price target. They have 10 analysts covering the stock. 8 of them have a buy rating, 2 of them have a hold rating. So the ambitious target shared by First Source, but the street likes that.
Okay, all right. Well, yes, let's see whether they manage to achieve it or not. But thanks, Hormuz, for that. So that's on First Source. Let's move on. Time Technoplast has surged over 6% as the company received final approval for the manufacturing and supply of high-pressure Type 4 composite cylinders for hydrogen. Upasna is here with the details on this particular story.
Thanks so much for that. Well, Time Technoplast will remain in focus as the company has received final approval from Petroleum and Explosive Safety Organization. This approval is mainly for the manufacturing and supply of high-pressure composite cylinders for hydrogen. It is the first Indian company to receive this approval, and it believes that the move is in line with company's efforts towards sustainable green energy. With this approval, company says it is poised to capitalize on rapidly growing market driven by global shift towards sustainable green energy. It believes that this technology will certainly have a positive impact on both, that is industry as well as on the environment.
Okay, all right, Upasna, thanks very much for that. Well, we need to take a short break, but a lot more in terms of the markets. And we'll get you an exclusive conversation with John Chambers, the chairman of US-India Strategic Partnership Forum and the former CEO of Cisco. Stay tuned for that. Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity, and low self-esteem.
In India, you see a lot of gum disease, which is also promoted by things like tobacco and supari.
Poor oral health is linked to serious systemic issues like heart disease, Alzheimer's, digestive problems, bacterial pneumonia, preterm delivery, and cancer.
If your teeth, the way they meet, what we call occlusion, is not proper, it can lead to other damage to the joints, to the gums. We have bone loss around the teeth.
Use a soft brush, destroy your brush, don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
Unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Welcome back. Even as the market's seeing some bit of profit taking from the Nifty bank end of things, a couple of financials are doing well. Shriram Finance is at the high point of the trade in today's trading session. In fact, the latest Nifty entrant doing extremely well. And then from the broader markets, a couple of these pharmaceutical names are doing quite well. We have Granules, which is up 5%. Biocon continues its march forward. And we have Wires stocks doing well too. We had the management of KEI Industries join us today, saying that they're targeting 15 to 16% growth in this year. And Havells is up 5%. Polycab is the other one, which is up about 3%. KEI itself is up around 3% as well. But this will be the century of artificial intelligence as it becomes the foundation to determine the economic growth in companies. These are not my words. These are words coming in from John Chambers, the chairman of US-India Strategic Partnership Forum, and also was the former CEO of Cisco. In an exclusive chat with Shireen Bhat, he says that India will be the largest economy in the world. Listen in.
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet, changing the way you work, live, learn, and play, when I said that in 93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now NVIDIA is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast NVIDIA is growing. And it is growing great. What is it, 540% in the last 2 years. What is also going through is the parallels. The parallels in terms of it changing our lives, changing the future of companies. If you weren't an internet company in the mid-90s, major players like Fidelity wouldn't even invest in your stock.
Yeah.
Today, if you're not into AI and if you haven't got a good AI strategy and well implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
So it's not just the age of AI, it's the age of AI and agility.
Exactly. And I used to hate the word agility because I thought it was a marketing term. But you've got to be agile and you've got to be able to adjust. And so if you watch a startup company today as an example, during the internet era, and even as quickly as 5 years ago, it would take you 2 years to build your product, a year to get 5 or 6 really good references, $1 million run rate, 2 more years to get to 5 million run rate. That was a unicorn in India or in the US coming. Today, you build the product in 1 to 3 months, you get your customer references, $1 million run rate the next quarter, and you're going to hit a $5 million run rate probably in 18 months, maybe 12. That speaks to change, but it isn't just going to be the startups that do this, not just your young Turks that you've been sponsoring. Congratulations for how many years now?
22.
22, wow. So it isn't just the young startups in India or the young startups here. Everybody can either disrupt or get disrupted, but the same thing's going to happen to big companies. People compare it to right before the dot-com bust. I think that is wrong. Now, don't misunderstand me. Are there going to be some spectacular train wrecks with AI and companies that just missed the mode, got overfunded, etc.? But I'd say, using an American term, I'm trying to learn cricket, as the Olympics hopefully will come to India in the mid-30s coming up. We'll see if we can win that one. But I would compare it to being, in baseball terms, the second inning. So where the internet growth, etc., clearly peaked and there was overinvestment in certain categories, Cisco came through it fine, but it was very painful. I think we're in the second inning in terms of what AI is going to represent. I think this will be the decade of AI, and it will be the century of AI, and it will be the foundation to determine economic growth of companies and directions. I'd parallel it, however, to India. I think this decade, and I said this, as you know, I'm the biggest bull optimist on India. You named me that. You named that 8 years ago. But I think this is the decade of India and the century for India. India will become the largest economy in the world. I was the first one to really say that very aggressively. And I will say today, India will probably be, by the end of the century, if we execute right, maybe 90% bigger than the Chinese economy and 30% bigger than the US. But if the US and India work together, that's the other thing that can change. So similarities, it's fun watching the leading tech company in each category. Jensen has done an amazing job at NVIDIA, but I think they're at the very early stage in what can happen. I really believe in that company.
And you still believe we're just scratching the surface as far as AI is concerned today, and the headroom and the potential for growth is explosive from here?
It's unlimited. And what you can do with companies and countries working together is also unlimited. So if you think about it in terms that your viewership will understand, while there's a lot of number crunching going on with AI and certain applications that are there, the average enterprise is not even in the first inning on using AI in a meaningful way across customer service, across coding, across sales and marketing, interfacing to their customers. It's just getting started in healthcare. AI will help us solve cancer and cure cancer, not in 30 years, but a large part of it in the next decade. So you're just beginning this cycle, and it's kind of like the internet when you first started just doing or entering orders online or doing a little bit of customer service online. That was just the beginning. It will peak many years from now, and then we'll see what's next.
All right, interesting conversation there. By the turn of this century, India could perhaps be the largest economy in the world. You can catch the full conversation on CNBC TV18 at 7:30 p.m. and 9:30 p.m. today. Take a short break now. On the other side, we'll get you trading strategies. Soni Patnaik of JM Financial Services joins in with what to buy, what to sell.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
We are hoping to see the credit growth in the range of about 14 to 16%, and we expect to see very broad-based growth in credit, right from SME, agriculture, retail, and also in the corporate. As far as we are concerned, our domestic NIM last year was 3.43. So I expect our domestic NIM should be around the same number.
The shock and awe story of NVIDIA, Shankar. I mean, today the most valuable company in the world. For most of us, the big breakthrough moment as far as generative AI was the ChatGPT moment. But for you and for the folks at NVIDIA, I mean, when did you start to think that this was on the verge of an explosion?
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, where did NVIDIA come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
Steel, we are one of the best prime location of a steel asset, which is in Jharkhand, near Bokaro, is in the Bokaro. We have a proximity of all the raw material, iron ore and the coal. We are proximity of all the railways.
Vodafone Idea, that's a stock which is up around 4% right now. The telecom stock's doing extremely well. Bharti Airtel 2 sitting with a gain of almost 2%. It's been a big mover, Vodafone Idea, ever since its FPO, up around 60% from those levels of around 11 as well, the price at which the FPO was made. But let's talk about the F&O space at the middle of today's trading session. The fact that there is supply at levels upwards of 23,600 for the Nifty is something that we witnessed for the third day in a row, today included. So if you just take a look at the highs on the Nifty, last 3 trading sessions, 23,664 was day before yesterday 23,624 and 23,667. The Nifty has been falling anywhere between 60 to 100 points from the day's high, and now as we speak, it's down close to around 130 points from today's high as well, sitting with a cut of 31 points. Led by the Nifty Bank, which has seen a profit booking after a rally this week. So the last couple of trading sessions were very strong for the Nifty Bank, led by HDFC Bank, and now that's seeing some bit of profit taking. It's actually been offset by a couple of these indices which are trying to bat for the bulls. We have the IT index and the metals pack as well. Both of them saw signs of recovery in yesterday's trading session. Metals did extremely well, and today as well, continuing to do well with a follow-on gain. As we prepare for the next week's expiry series, or June series expiry next week, the 23,600 call, those writers are still active. This is options that expire next Thursday. 110 rupees available for premium, telling you 23,700 would be a bit of a resistance for the market, just the way we've seen resistance supply as we approach that 23,700 mark. At the lower level though, 23,400 is an extremely strong support, witnessed in the 23,500 put writing that we've seen. Jumble Fertilizer, with the kind of profit taking that it's seen from the highs after a 30-40% move in the last few trading sessions, will re-enter F&O band, briefly exited F&O band this morning. And then we have Granules and AB Capital 2, which may enter F&O band. So those are a couple of stocks we'll watch out for.
Okay, Granules definitely making a move in today's trading session. That stock up around 5.5% odd. Thanks very much for that, Mangalam. Soni Patnaik joins in from JM Financial Services to talk about the technicals of the market. Soni, welcome to the show. Quiet day for the markets. What would your stocks on your radar be?
Hi, good afternoon. Thank you for having me on the show. Definitely, I think the stocks selection would go on a balanced approach, considering that Nifty is consolidating now. And this could be the first signs where the exhaustion of a bull run can be seen. So I think it's better to keep a balanced approach, stock specific wise, one buy, one sell idea is coming up. The buy idea comes in IEX. Which is given a good breakout above 180 today in option chain. So current levels, one can buy IEX, keeping a stop loss of 178 and a target of 195 can be seen on a positional basis. The sell idea would come in consumer space, Tata Consumer, which has given a fresh breakdown below 1100 level. And there is a strong call writing resistance happening at 1100, 1120 range. So that breakdown comes from the sell idea. So if one can sell in current levels, keeping a stop loss of 1130 and a target of 1050 can be seen in Tata Consumer.
What would your call on HUL be? I'm looking at HUL as well, and it's again fallen, and today's decline has taken it below the 200-day moving average as well. It's at the low point of trade, Soni.
Hi, good afternoon, Mangalam. So HUL, of course, we can see some selling pressure coming in. It is currently testing the 200 EMA support, which is 2430. But option chain is depicting that 2400 is a support which it can hold on to. There could be some pressure from these 30 points. I think one can just continue to hold with the 2400 support as long as it's not breaching. Now, if it breaks, we can see further profit booking. But as of now, 2400 support should hold. It can bounce back from those levels again. In the range of 2400 to 2500 can be seen for HUL consolidation for some time.
All right. Thank you for joining in and giving us your call on stocks and the indices, Soni. With that, we'll slip into a short break. On the other side, we have the analysts at CRISIL joining in to speak about their latest report on financials.
Of all the gas, we have put this asset on the basis that if we get 1.2 billion per million ton, we have a 3.5 million ton of plant, which at the moment we are producing close to 2 million. 3.5 will be by end of this year. We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand. Certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
Welcome back. Well, for the markets, it's quite quiet. So let's talk about specific stocks then. Bikaji is in focus as the brokerage firm Nuvama has initiated coverage on the stock with a buy rating. Mangalam, you're tracking this. Tell us more about the call by Nuvama on Bikaji.
Tracking Bikaji and eating a lot of their product as well, I have to tell you. Nuvama has initiated coverage on Bikaji and they have a buy rating, target price of 885, like you pointed out, because it's a heavyweight in the rapidly expanding Indian savory snacks market. In fact, they're the third largest player in the organized ethnic snacks market, for which they have 9% share. And they are actually the market leader when it comes to family packs, which is packs more than 5 rupee, 10 rupee, 20 rupee packs, the bigger ones, which account for nearly 60% of their sales. And that's a big positive as well. Their leadership is in their core states, which is Rajasthan, Assam and Bihar, where they believe that, they can go ahead and increase their market share further by about 1 to 2% every year. Additionally, the company has, invested ahead of demand in capacity. So increasing capacity utilization will actually propel the return on capital employed by about 32% by FY27E as well. So as a result of which, we are seeing an up move in the stock in today's trading session. Nuvama is bullish, but more than just this, the increased shift into from unorganized into organized ethnic snacking has the street excited. So Bikaji is gaining, but alongside that, we have seen Gopal Snacks as well track some gains up around 3% and we're seeing decent gains in names like Pratap Snacks as well. So Pratap Snacks is up 9%, trades at a bit of a discount to both Bikaji and Gopal Snacks, but all these pockets doing extremely well in today's trading session.
Okay, all right. So that's on the entire food space at this point. Optimum time to do the link as well.
Bhujia, Gatia and chips. That's what these three guys sell. There's Bikaji, Gopal Snacks and Pratap Snacks.
Yeah, well, that's on the opposite side of what I do, which is track the pharmaceutical and healthcare space and the diabetes, India being, you know, one of the diabetes capitals of the world.
Why would you kill the joy of a good chip? Anyway.
But in any case, maybe we can probably move to baked snacks eventually. We'll take a short break, but as promised on the other side, we'll put the spotlight on the banking sector with CRISIL ratings. Stay tuned.
I'm joined in by three individuals who have inspired all of us. Usha Somant, her son Milind Somant, his wife Ankita Kuwar.
When you're talking about fitness, is mobility. If you can't move, how will you get fit? If your mind doesn't move, how does it get fit? If your body doesn't move, how does it get fit? So mobility is the most important thing.
Oh, why do I have some fat around here? That's maybe because the body needs it. Why do I like this certain kind of food? Maybe because my body wants that. So just accept yourself for who you are, what you are. At this moment, this is the best version of yourself that you'll ever be.
What is next goal, challenge that you've set up for yourself?
One thing in my bucket list is bungee jumping.
Bungee jumping! Oh my God!
And skydiving.
And skydiving.
After the NEET controversy, there's more bad news for students in India. I'm talking about
Welcome back. Well, let's put the spotlight on the banking sector. CRISIL Ratings in their recent report states the return on assets for banks is projected to decline to 1.1 to 1.2% this fiscal, from a 20-year high of 1.3% in FY24. Yet, it will remain above the long-term average of 0.75%. Krishnan Sitaraman, who's the Senior Director and Chief Ratings Officer of CRISIL Ratings, joins in now to discuss this report. Krishnan, welcome to the show. Well, I just wanted to start by asking you, what is the reason for this return of assets to decline from this 20-year high in FY25?
A very good afternoon, everyone. Thank you for having me on the show. As you rightly pointed out, the ROA in our expectations, the return on assets for the banking system, will decline by around 10 to 20 basis points this fiscal. That said, it will still be well above the 10-year average or the 5-year average, whichever way you want to look at it. Now, the key reason here is the fact that deposits of the Indian banking system, they are gradually repricing themselves. Usually what happens is when interest rates change, either moving up or coming down, deposits reprice with a lag, which is because only the incremental deposits or the deposits which get renewed, those get repriced at the newer rates, while the older deposits continue to be contracted at the same rate till they mature. Whereas on the lending book, when interest rates go up, the floating rates go up almost instantaneously. So when interest rates go up, the lending book reprices upwards, deposit rates remains where it is. So when interest rates go up, the profitability of banks goes up. And now what we are seeing is the deposit rates are catching up. So deposit rates increases are building up into the cost of borrowings, which is meaning that the NIMs, net interest margins, they will come down by around 10 to 20 basis points, which will translate into the return on assets metric. The other angle that we need to keep in mind is the credit costs. Credit costs in the banking system have been coming down steadily from around 2.5% in FY18 to around 0.6, 0.5% in FY24. We don't believe there is much headroom for that to come down further. So credit costs coming down also benefits the profitability, and the credit costs have been coming down because the asset quality of the banks have been improving. GNPAs, gross NPAs, have come down from around 11.2% as of March 18 to around 2.7% March 24. We expect some more decline in NPA in the current fiscal. But credit costs, not much room to go down below. So not much offset to the impact on net interest margins coming down. Hence, profitability will come down a shade to around 1.1%. Still, it will be well above the historical average.
Right, we take your point that, there is downside risk to return on assets. Just to press that a little further, because you expect NIMs to contract by about 10 to 20 basis points, deposit cost to increase by about 25 to 30 basis points, and some increase in credit costs as well. So why is it that then your estimates of ROA decline are limited to just 10 to 20 basis points? Cases in this scenario, it could decline by well over 40, 50 basis points in some cases. Why is there an upside risk to the decline in ROAs?
No, so thanks for the query. Actually, credit cost is not going to go up. It will marginally come down, but not much headroom to come down materially. That's what I was saying. Maybe 5 bips it could come down this fiscal, as we believe NPAs will continue to come down. It's 2.7% as of March 24, may come down to around 2.5%. Not much headroom to come down further. So credit cost, marginal decline. The other thing that you pointed about is about the deposit costs going up. Deposit costs will go up. That said, we are expecting interest rates in the environment to actually come down from the second half of this fiscal. So some element of that impact would also get captured into the overall the net interest margin scenario. The other thing we need to keep in mind is the denominators of the deposits and the loan books are not similar. And while incremental deposit rates may we see those rates having been plateaued more or less. So what we talk about when we talk about deposit costs going up is the stock cost of deposits, whereas the incremental deposit rates may not go up much further from here. So it's an interplay of all these factors. It's not such a simple translation about NIMs into ROA. So when you build in all those factors, it's kind of a coincidence that the ROA decline will also be around the 10 to 20 bips mark.
Okay. So now we're talking about FY25, where you're not expecting that much of a further decline in terms of credit costs. You expect the gross NPAs to largely see some kind of stability to marginal reduction. What happens in FY26? Any kind of projections when it comes to credit costs as well as gross NPAs there? Will it be just a plateau after FY25, or are you expecting a move up or down?
Well, that's a very, very good question, and difficult to kind of predict with a great deal of accuracy going beyond 1 year in the financial system. But what I will talk about is the trend line that we have seen on the asset quality or NPAs. NPAs in the banking system have followed a cyclical path. There will be periods of time where it will go up, and then periods of time where it will come down. But one thing what we have seen is that the amplitude of the peaks of the NPAs, that has been coming down. What I mean to say is in the upcycle of NPAs in the mid-90s, in 1994 or so, the highest level of gross NPAs was close to 25%. Whereas if you see the last upcycle of NPAs, March 18 to 2018, there the high peak level of NPAs was 11.2%. So while the cycle of NPAs will come down and the NPAs will come down and go up, but the peaks of the NPAs are steadily coming down because of the structural improvements that we see in the banking system. Recently, we have the IBC coming on board, underwriting systems, risk assessment mechanisms have improved. So we do believe that in time, this coming down of NPAs will hit a trough, and then NPAs will start going up again. But the peak when it reaches, my firm belief is it will be below the 11.2% that we saw in March 18, while the cycle will continue. So one area where we need to watch out for is the retail segment, how the asset quality pans out. We are seeing some, I would say, monitorables as far as the unsecured loans, especially the low ticket, small ticket unsecured loans are concerned. But as of now, the proportion in the overall mix is still low. So we need to see how that pans out. On the corporate loan book, we do still expect some amount of decline in the NPAs because corporate India has largely deleveraged itself, with median gearing on the CRISIL rated portfolio coming down to around 0.45x as compared to around 1.1x around 8 years back. So there's more than halving of the leverage which has happened. So that means that corporate India's balance sheets are looking quite healthy. So not much of a probability of NPAs going up there. But on the retail side, we are monitoring the situation, especially on the unsecured front.
All right, final question then before we let you go, Krishnan. What is the credit growth that you're factoring in for the next fiscal? At the same time, if you could, give us what sectors are best placed to benefit from this? Is the private sector banks? Is the private sector smaller banks? Is the private sector larger banks, PSUs, etc.? If you could give us a nature of, the banks or financial institutions which are best placed to benefit.
Sure. So this fiscal overall banking sector credit growth, our prognosis is a 14% credit growth. It was close to around 16% last fiscal. So we are looking at a 14%. The base was higher last fiscal. And we expect the GDP growth, the macro projections also to be somewhat lower than the 8.2% that we looked at last fiscal. Our projection is 6.8% for this fiscal. So that will lead to some bit of a slower GDP bank credit growth as compared to last fiscal. But that 14% is still a very healthy trend. Overall, I would say that the banking system is reasonably well placed today in terms of their credit health. I look at three core parameters, which I call as the ACE, ACE, that is asset quality, capitalization, and earnings. On all those fronts, if I look at the past trend, we see that on all these parameters, banks are quite well placed. And if we look at the standalone profile in terms of either asset quality or capital adequacy or earnings, we see the private banks are somewhat better than the large private banks are looking better than the public sector banks. But the public sector banks are showing in terms of an improved improvement. The improvement trajectory is better in the public sector banks. So we see overall the large private banks, the credit growth should be higher than the systemic average. Public sector banks will be catching up there. One of the key monitorables we need to also look at is how the deposit growth will pan out. What we have been seeing in the last, say, 1.5 years or so is that the deposit growth has been lagging the credit growth. But there has been some pickup recently as interest rates have gone up. So deposit growth is an area which needs to keep up for the credit growth to kind of be at these levels.
All right. Okay. All right, Krishnan. We're going to leave it on that note. Pleasure speaking with you. Thanks very much for joining in and giving us that analysis on the banking space. We need to move now on to Cisco, which has announced the launch of the Meraki India region, a new cloud region which will be hosted locally within the country to comply with data localization norms. Speaking to our colleague Ritu Singh on the sidelines of the launch, Daisy Chitalpalli, president of Cisco India and SARC, said that the company is bullish on the opportunity the country presents and expects India to be among Cisco's top 5 markets in the next few years.
I think the Meraki's users in India have spanned from private schools, hospitals, retail chains, to very large conglomerates who use Meraki for their smaller branch offices. So it's democratically accepted up and down our customer segments. I think the conversation, but that being said, we've had regulated industries always being concerned by using a cloud. They've always wanted to adopt Meraki, but they've been concerned about, having a cloud outside India. What does it mean for India's evolving privacy and sovereignty data concerns? Yeah. So large parts of public sector, large parts of banking, many other regulated industries like critical infrastructure, like utilities, etc., is spaces where customers have always clamored for Meraki, but we've both been very cautious about, bringing Meraki to those markets and those customers. I think the launch of the India region takes away that constraint. And that's why when I talked about growth earlier and unlocking growth, there is, I have to admit, a part of the India market that has been sitting out of the Meraki journey. Yeah. And with the announcement of the Meraki India region today, that constraint and that sitting out ends. And that's very exciting for us, and I think also for our customers in those sectors and for our partners who do business in those sectors.
Well, just to step back and look at the business overall, for Cisco, of course, India is one of the top 10 markets. But you spoke earlier about how the ambition is to get to the top 5. How soon will it get there? How soon will it perhaps get to a higher position? What will drive this kind of growth for Cisco in India?
I think what will grow the drive for Cisco in India is India's growth. And we are very, very happy about the fact that the long-term forecast for growth in India continues to be robust. If you look at the next year, which is the here and now, it's again 6.5% to 7% is the forecasted growth of the IT market. And we intend to obviously be better than the average growth of the market. And that is, to your point, we still live in a world where the macro environment of growth is fairly muted. So India will be, for the foreseeable decade, one of the fastest growing economic hotspots in the world, IT growth spots in the world, and Cisco, having been here, commanding the trust and respect of many of our customers and our partners over the years, is also very well poised to monetize on that growth as well. So we expect, our ambition obviously, is to be in the top 5 for Cisco in the next few years.
Few years. All right, no number from you. But again, coming back to the India market, the facility that you're setting up in Chennai, if you could bring us up to speed as to if you're on track to open it in the second half of the year, how soon will we hear about it?
The good news is yes. So we announced our intent to manufacture from India in May of last year. And we had signaled the end of this year as being the time when the plant would go live. We are on track, and you should soon hear an announcement around the formal, you should hear an announcement around our plans to go live very soon in the second half of this year.
And what should we expect in terms of business generation opportunities, exports opportunities coming out of that facility?
So we have put a near-term target of $1 billion in throughput, as we have explained. That is, the factory is meant to be both, is meant to feed both domestic demand as well as exports. It is a true hub in our global supply chain. And therefore, the first target we have for it is $1 billion throughput.
Okay, all right. Time for a break now. But on the other side, Manisha Gupta will join in with the mystery of Adani Wilmar on our commodity segment. Stay tuned.
Precise. The Education Ministry has cancelled the UGC NET exam, or the National Eligibility Test, which is conducted for the post of assistant professors in universities and colleges. The reason is that the government feels that the integrity of the examination may have been compromised, and the CBI will now probe the matter. The shocking part is that the exam was cancelled within 24 hours of it being conducted on the 18th of June. It was conducted by the National Testing Agency in 317 cities across the country. Now, why was the exam cancelled? According to the Education Ministry, the National Cyber Crime Threat Analytics Unit of the Indian Cyber Crime Coordination Center received some inputs indicating potential compromises in the exam's integrity. It could be paper leak, it could be anything. The details of this have not been revealed as yet. The UGC NET exam is conducted by the NTA twice a year in June and December. Now, what happens next is the big question. Now, exams will be held again with the dates to be announced soon. There's no clarity on that yet. There have been reports of the examination paper being leaked, but the government has not confirmed this as yet. Remember, this comes in the wake of the massive NEET controversy, where nearly 24 lakh students appeared for the UG 2024 medical courses entrance test, which is also conducted by the NTA, or the National Testing Agency. It happened on May 5th. The results were announced on June 10th, 10 days before schedule. But allegations of a question paper leak, grace marks to over 1,500 students, and mass copying, these allegations triggered protests across the country. Cases were also filed in various courts, including the Supreme Court, which has come down heavily on the NTA. Why are we talking about exam paper leaks and exam cancellations and such scams in states like UP, Rajasthan, Madhya Pradesh, Bihar, Telangana, among other states? It's because
Welcome back, and joining us on the show now is Mr. Dhaurav Mistry, he's Independent Director, Adani Wilmar. Mr. Mistry, hi, thank you so much for joining us. First of all, since the new government has come in, the buzzword clearly has been agriculture, and today the Finance Minister is meeting a lot of people from agriculture as a sector, including agriculture associations, farmer associations, agri-economists as well. What's your sense on where India stands when it comes to agriculture and farmer welfare? And if you were to put out 3 things to the Finance Minister on where she should be looking at in priority, what would those be?
Well, good morning, Manisha. Always lovely to join you on CNBC. Like always, after every election, we are full of hope and optimism. But I'm afraid this hope and optimism is repetitive. Every agriculture minister, every finance minister brings hope and optimism. Let us see how much of that actually verifies. I am delighted, in fact, that we have, after a long time, a heavyweight agriculture minister who has been a very successful chief minister, Mr. Shivraj Singh Chauhan. He has a very good record of boosting agricultural production in his home state of Madhya Pradesh during his tenure. And so we are looking forward to his leadership and to what he can achieve. As far as my 3 suggestions to the Honorable Minister are concerned, my first suggestion is that he should embrace Project Mustard. Project Mustard is a project launched from the bottom upwards by farmers, farmers cooperatives, and the Solvent Extractors Association, the oilseed industry. And it is the right project for India, particularly for our clever, progressive farmers of Punjab and Haryana. And mustard should be used and incentivized to switch from wheat to mustard. Very important. We are already achieving some results, and the government can get behind it and turbocharge this move to increase our oilseed production of mustard seed. So that is my first suggestion.
Okay.
The second suggestion is to embrace unreservedly genetically modified seed. Our farmers are working with their hands tied behind their backs because they are not allowed to use the best seed in the world. And we keep blaming the farmers for low productivity. But the fastest way to boost productivity is to give them the right tools, the right seeds. So genetically modified seeds, particularly in oil seeds, must be embraced and must be taken up. So those are my first two suggestions. And my third suggestion is that if we want to make agriculture profitable, at least for the farmers who live close to urban areas, then we must encourage and push the cultivation of fruit and vegetables. These are very profitable. This is where inflation is highest. So it's a win-win situation if we can boost the production of vegetables and fruit for our farmers, what is called market gardening, and thereby boost their incomes and also boost production.
Fair point that. Also, Mr. Mistry, well, of course, those are the expectations from the agri sector there going forward. I also want to particularly talk about the edible oil industry itself, where we've seen prices gain a bit in the last 1 month or so. We've also seen soya and sunflower gain up and back to be in premium versus palm, which is in discount yet again. How are you looking at the prices moving forward? In the last few months, we've seen India's imports in edible oil increase. How are you looking at the numbers for the rest of this year?
India's imports of edible oil will remain high because it is easier to import oil than to procure it locally. Now, this situation can change if local supply increases, but that cannot be done overnight. It will take at least 12 to 18 months for that to happen. In the meantime, our imports will continue to be strong. As far as the makeup of imports is concerned, I expect palm volumes to gradually reduce because palm is not yet at a sufficient discount to soft oils like soybean oil and sunflower oil. It has finally moved to a slight discount. It was at a premium. It has moved to a slight discount, but the discount is not big enough to really create strong demand for palm. So I expect palm imports to be muted. And I also expect palm prices over the next 2 to 4 weeks to go down, to decline, and thereby make palm more competitive. We are moving into the high production season in palm. Stocks of palm oil in Malaysia, in my opinion, will very quickly touch 2 million tons and go way above 2 million tons, which should pressure the market. All these stocks will increase in August, September, October, but it will be discounted by the market in the next 2 to 4 weeks. So I expect a period of slightly lower prices from here. And then gradually, as demand picks up, as the world realizes that there is a lot of weather problem, there could be some weather problems in North America, then gradually palm prices will begin to improve. So down first and then slightly higher. But I don't expect any major changes in the market. Upside probably 4 or 5%, and before that downside of 1 or 2% expected.
Okay, all right, Ms. Mistry as well as Manisha, thanks very much for joining in and taking us through that conversation. Well, on that note, we need to wrap up on Halftime Report with the news that we are seeing a little more of profit booking coming in on the Bank Nifty, with the mid-cap index just about holding in the green by a whisker. Well, Business Lunch will take all the action ahead. Stay tuned.
Concern for young voters in the age group of 18 to 25. An investigation by the Indian Express revealed that 41 paper leaks over the last 5 years in 15 states affected 1.4 crore job seekers who had applied for over 1 lakh jobs. Now, exams continued to get cancelled and recruitment for state-level government jobs got postponed. In UP itself, 3 major competitive exams for government jobs were hit by question paper leaks in 2024. In India, getting a government job is a safe bet for many aspirants. And in the event of a paper leak or exam cancellation, millions of students get affected. It's a waste of their time, money and effort. Not to mention, it's also a waste of public money. The future of millions of students is at stake. After NEET, NET is in the headlines. The question is, will India's education system pass the credibility test?
the latest challenge that you're up against is the US government looking at whether again there is a violation of policy and whether there are sort of fees that are being collected without consent or explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice, and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that.
Indices slipped to the day's low after a strong open today. IT and pharma are the big gainers, even as FMCG and financials drag.
Accenture narrows its guidance for FY24 to 1.5% to 2.5% from 1% to 3% earlier, but strong growth in new bookings and increased adoption of AI raises hopes of bottoming out for the sector.
The quarterly revision of FTSE indices will lead to reject trades today that could draw flows of near $680 million into the Indian equities. A revision in BSE Sensex could also see Wipro being swapped for Adani Ports.
This will be the century of AI. It will be the foundation to determine the economic growth in companies, says John Chambers, chairman of the US-India Strategic Partnership Forum and former CEO of Cisco, in an exclusive interaction with CNBC-TV18.
Hello and welcome. You've tuned into Business Lunch on this Friday afternoon, and the market is also looking tired today. I'm Nisha, with me is Hormaz. So market really giving up on the final day. Of course, it has been not that eventful a week, really saying, because it has been showing some listless trends. But today, the market sentiment is clear. It is on the weaker side, and at lunch hour, it is closer to the low point of the trading session when we look at the key indices. Nifty 50 down 0.5%, more than 0.5% at the moment, 126 points down on Nifty 50 at 23,440 level. Remember, compare it to the high point of the trading session, it is over 200 points loss from the high point of this trading session at the moment. Sensex too is inching closer to about 500 points loss. So fair bit of weakness there, 0.6% down on Sensex. Bank Nifty, that is really taking the lead, is underperforming the key indices, 0.75% down at the moment. And mid caps, that is one space which is still much more stable than the rest of the market, is showing resilience, but with a negative bias, 0.1% down. Advance decline ratio, well, more declining stocks than advances. There are no surprises there. But on my screen, some of the counters which are still doing well in trade are Bharti Airtel, LTI Mindtree, as well as Hindalco, Infi, SBI Life. These are some of the key, gainers in terms of percentage on Nifty 50, but many on the downside, led by Ultratech, Tata Steel, Hindustan Unilever. From the PSU pack, BPCL is also down today.
It looks like the market wants to head into the weekend a little light on positions, and I just checked the Nifty level. The Nifty has slipped below 23,450, which means that it has turned negative for the week. It had to have a close above 23,467 to have a positive close. So it's round about those levels still. It'll be interesting to see. Now the FTSE flows will also come in towards the later half of trade. So it's pretty possible that most of these losses would be reversed towards the final 60 minutes of trade when the adjustments take place for both the Sensex as well as the FTSE. A segment that is doing well. IT at the start was leading the gains on the Nifty, but even those IT stocks are off the highs of the day. Be it Infosys, TCS, all of them were trading with gains of anywhere between 2%, 2.5%, but now they've come off. Infosys is up only 1%, TCS also now up only 0.6%. So IT stocks are the ones in focus. We'll talk about it in just a bit, but I wanted to highlight railways. That is a stock, that is a segment that has been doing well in today's session. RailTel is up almost 9%. RVNL, IRFC, all of these stocks are doing well in today's trading session. So good going for railway stocks. What is also not doing well is real estate. The realty index is down 1%, so seeing some profit booking there. And what is also, the metals are also have come off the day's high, as have the broader markets, both the mid cap and the small cap indices also witnessing some selling pressure. So going into the weekend, the Nifty witnessing some bit of profit booking, but the final 60 minutes might just see a change in this trend. But we were just talking about IT stocks, and they are the ones in focus. That is because of Accenture that reported its Q3 results last evening, and they were, well, pretty much mostly higher than expectations, because the revenue that they reported of $16.5 billion was 1% lower in US dollar terms, 1.5% higher when you see it in constant currency terms. But the big takeaway from this is the commentary, the guidance that the company has given. Now, as they say, no bad news is good news. So the good news here is that unlike the last quarter where they cut their guidance from 2 to 5% to 1 to 3%, this time around they have upped the lower end of the guidance but reduced the higher end of the guidance. So now it's 1.5 to 2.5% is what the FY24 revenue growth guidance from Accenture is. The other positive is bookings. They were at $21.1 billion, which are up 26% in constant currency terms. So that's another positive. But there was a lot of emphasis on AI in this quarter, because generative AI, they have had some $900 million in bookings this quarter. Sales are also at $500 million, where they had just $100 million in all of FY23. So that's another positive. The management in its earnings call also said that discretionary spending still remains constrained, and that's the view from most of the managements across the street as well. And in smaller projects, it's pretty visible there. Now, clients are also prioritizing large-scale transformations, and because of which it is taking slightly longer to get converted into revenue, is what Accenture's management is saying. Now, what Morgan Stanley said is that there are positive data points from this earnings set, that strategy and consulting as a division is returning to growth. But what they are seeing is they're seeing this as another sign that the growth rates in this sector are bottoming out, and that is a positive. But as most of the managements and Accenture also said, that signs of discretionary spending are still not visible. The CLSA is also saying that the fact that they have not cut guidance is positive, but they don't see any material change when it comes to Indian IT companies in this quarter. They expect this quarter to remain pretty similar to what the March quarter was. And in fact, they see even consensus downgrades to their EPS estimates for these IT companies. Nomura also is retaining their cautious stance here. They say that discretionary revival to some time away. Tech Mahindra is their large cap pick. Within the mid caps, they have Coforge, Birlasoft and eClerx, and they have a reduced rating on most of these large cap IT names. TCS, Wipro, LTI Mindtree and LTTS and Emphasis as well is where they have a reduced rating. So brokerages are still erring on the side of caution. The street was appreciating it at the start of the trade, but the stocks are slightly off the highs from now.
Right. Thanks so much, Hormaz, for giving us a detailed picture on Accenture results as well as the impact on the IT sector. But remember that the IT sector is one of the top performer in an otherwise weak market today. So keep that in mind. But of course, as Hormaz pointed out, it's off the day's highs. Now, moving on, the quarterly revision of FTSE indices will lead to reject trades today that could draw flows of nearly $680 million into the Indian equities. In fact, our colleague Vivek Iyer joins us to tell us more about the FTSE quarterly index review and its impact. Tell us, Vivek.
Well, good afternoon. So quite important, especially in terms of passive indices, given the fact that one thing to note, remember, most of the FTSE additions were already announced on May 24th. But today is when, in the last hour of the trading session, you will see the actual additions happen and the actual flows happen as far as the passive indices are concerned. Like you mentioned, this particular event is a net inflow event as far as Indian equity markets are concerned. IIFL estimates that there could be almost $680 million of inflows that could come into Indian equities in today's trading session. This includes weight increases across quite a few large caps as well. But this particular index review from FTSE across the all world and the all cap index largely focused on putting into the indices recent listings as well as spin-offs. So which are the stocks that have made the entry this time around? Tata Tech, expect to see flow of close to $35 million. JSW Infra, almost $39 million. IREDA, $57 million. Cello World, around 4, and Honasa, around $5 million each. Now, along with that, remember, today is also the day in which Sensex adjustments will happen. So Adani Ports comes into the Sensex, expect flows of close to 240 million there today, and Wipro will be going out, expect flows of close to $157 million. So come Monday, you'll see a new look Sensex with Adani Ports there and Wipro no longer there.
All right, Vivek, thanks a lot for that. And we are just mentioning that the flows might lead to a reversal in the market towards the later half of the trading day. But moving on from equities to commodities now, and precious metals are the commodities of the day. Both gold and silver prices are trading at 2-week highs. Manisha now joins in to explain the reasons supporting the up move in both of them.
Well, we have seen both of these commodities surge. The last couple of weeks were not so great, but we've seen the prices come back in favor. So if you look at the overnight markets, we saw gold prices gain up by 1.5% and silver jumped up by 3.5%. And it's back at around that $30.5 per ounce mark. We did see silver prices hit an 11-year highs of 32, went down all the way back to 27 and below. And we've seen some opportunity buying come back in both of these precious metals right now. Well, one is you have the US economic data not come in so well, and that has led to the US dollar decline. That has been supportive. And we already have seen ECB and Bank of Canada cut interest rates, and the markets are anticipating that come third quarter, and you will have more central banks joining that bandwagon. And it also is about, various geopolitical tensions, especially in Red Sea, and the kind of statements that we are hearing from Houthis, also between Russia and Ukraine, where there have been more drone attacks. So all of that geopolitical premium also seems to be coming back. Even more interestingly, it is about the global central bank buying. It was a record global central bank buying in 2022 to the tune of 1,082 tons of gold. 2023 also was a second highest year in sense of global central buying at around 1,037 tons. Now, the first quarter of this year has seen almost 298 tons of buying, and the month of April has seen another 33 tons being added to it. The month of May also has been on the stronger side. Barring China, most of the other 14 global central banks actually bought gold. Even more interestingly, the World Gold Council recently reached out to 70 global central banks, and they've come back with a report suggesting that most of these banks are talking about adding further gold reserves within their kitty. So there's almost 29% of banks which said that they will be adding gold. You have 81% banks telling you that the reserves will grow going forward. No bank said that they would sell any gold going forward. And the next 5 years, many of these banks anticipate that the gold holding from global central banks would be much higher than what they hold in their reserves. Clearly talking about de-dollarization here. So gold clearly in favor because of that. And since the time this report has come in, you have had various banks and brokerages tell you or give you much dizzying higher highs in sense of forecast in case of gold.
All right, Manisha, all that glitters is gold and silver today. Thanks so much for all those details. With that, we'll slip into a short breather on Business Lunch, but don't go anywhere because an important national development. The Delhi High Court stays Delhi Chief Minister Arvind Kejriwal's bail order. We'll get you all the details when we return. Stay tuned.
Perhaps in English we could have done a simpler job of clarifying it, so which we have, and so we've rolled it out. We are creator friendly.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. You know, the Warriors here in the Bay Area have won the NBA Finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, you know, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person, either owning a team or
Yeah.
at least supporting a friend's team.
And so it's a passion, and you know, I don't know that we have enough of a farm system here, Shireen. I mean, you know, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. Yeah. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, you know, whether it's Satya or me, you know, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League, you know, cricket here. And, you know, I'm part of the San Francisco Unicorn team. And so it's fun.
So the Hyderabad Mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, you know, I mean, rather than...
Back with us here on Business Lunch, and as we count down to the budget later next month, Finance Minister Nirmala Sitharaman has chaired her 4th pre-budget meeting this week. Economists from the Agriculture Department and farmer associations have met with officials at the North Block. The attendees included Agriculture economist Ashok Gulati, Union Minister of State for Finance Pankaj Chaudhary, and Chief Economic Advisor V. Ananth Nageswaran.
And in the latest on the UGC NET exam row, well, the CBI has registered a case against unknown persons for compromising the integrity of the examination following this. The Union Education Minister also addressed the media and took responsibility for the paper leak. Danish, our colleague, joins in to tell us more about what they had to say, what are the measures and the way forward. Tell us, Danish.
Well, the Union Education Minister, Dharmendra Pradhan, has taken full responsibility for the cancellation of the UGC NET exam and also informed that the decision to cancel the exam was taken only after the Indian Cybercrime Coordination Centre under the MHA informed Education Ministry about the question leak. The Indian Cybercrime Coordination Centre informed Education Ministry that many questions of the NET exam were available on the darknet and the same were also found on Telegram. He said that the government has a zero-tolerance policy for paper leaks and government cares about the future of students, hence this swift decision was taken. On NEET, the Education Minister said that the Bihar Police is investigating the matter and it has got many leads till now. Bihar Police is expected to submit a final report to the central government. Minister also made it clear that whoever is the culprit, he or she will not be spared even if they belong to the National Testing Agency or the NTA. CBI also registered a FIR in connection with the UGC NET 2024 exam on Thursday. Minister Pradhan also said that he does not want to politicize the matter and has even requested the opposition to not to do so. He also informed that the committee will soon be formed that will give suggestions around the betterment of NTA. The ministry will soon inform about the re-examination dates of the NET exam.
Danish, thanks a lot for that update. And sticking to the national capital, it's another setback for Delhi Chief Minister Arvind Kejriwal. The Delhi High Court has stayed the bail order just a day after the trial court granted it. Ashmit Kumar, who's been tracking this story closely, joins us with more details. Ashmit, what are you picking up?
Well, it was 4 minutes to 8 p.m. last evening when the trial court had granted bail to Arvind Kejriwal. Cut to a few hours ahead this morning, and we find that there's a setback that has come his way by way of the Delhi High Court. Now, what's important is that the ED has moved the Delhi High Court. They're seeking a stay. They were seeking a stay of that bail order, and importantly, they have acquired that stay. The Delhi High Court has stayed operation of the bail order. Now, what essentially the ED is arguing before the Delhi High Court is that the prosecutor, which is the ED in this case, were not allowed enough time, were not allowed full liberty to argue their case. There were shortcomings in the conduct of these proceedings, that bail proceedings cannot be done this way. And on the back of that, importantly, the Delhi High Court saying that, fine, we'll agree to grant you urgent hearing. And number two, till we are hearing this matter, there is no operation of that bail order that is to take effect. So effectively giving a stay of the bail order. Speaking of the Delhi High Court hearing itself, we understand that the hearing is currently underway. The ED is being represented by Additional Solicitor General Raju, who's representing his case, again making that same submission that the ED was not allowed enough time, was not allowed that liberty to make its full case, and that is the core concern based on which they will be pushing ahead for cancellation of bail. This is being rebutted by Kejriwal's counsels. They are too present in court. They're essentially arguing that Kejriwal has not been convicted, that he is not a threat to society, that these are observations that were made by the apex court itself at the time of grant of interim bail, and therefore that should be borne in mind while the Delhi High Court is hearing this. So clearly a big stumbling block as far as Kejriwal's release from Tihar jail is concerned. A setback as of this morning. The hearing is currently underway. We'll continue to get you the latest on the developments coming out of Delhi High Court on whether or not Kejriwal can step out of jail by this evening. Back to you.
All right, Ashmit, thanks so much. Indeed, it's important national development today on Kejriwal. With that, we'll slip into a short breather on Business Lunch. But remember, Prime Minister Narendra Modi flagged off the 10th International Yoga Day celebrations at Srinagar today. More on that when we return.
This case, the mafia, this is all about a passion, and cricket's a global sport. And actually the funny thing about sport just brings together people like no other activity. And, just the amount of excitement. But now we have to go win it all, right? I mean, we've just got to the, Super 8s. And unfortunately, the India-Australia match, I have a board meeting on that day. So it's going to be...
Big conflict.
No, the board meeting is going to take priority. But, I'm going to perhaps sneak a look now and then at what's happening.
I would imagine.
Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity, and low self-esteem.
In India, you see a lot of gum disease, which is also promoted by things like tobacco and supari.
Poor oral health is linked to serious systemic issues like heart disease, Alzheimer's, digestive problems, bacterial pneumonia, preterm delivery, and cancer.
If your teeth, the way they meet, what we call occlusion, is not proper, it can lead to other damage to the joints, to the gums. We have bone loss around the teeth.
Use a soft brush, destroy your brush, don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
Have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the
We are celebrating the 10th International Yoga Day today, and Prime Minister Narendra Modi flagged off the celebrations at Dal Lake in Srinagar on the occasion of this International Yoga Day, where he was, remember, joined by over 7,000 participants. The theme for this year's celebration is Yoga for Self and Society, focusing on yoga's impact on personal well-being and community health. Across India, leaders including JP Nadda, Yogi Adityanath, Nayab Singh Saini also joined in the proceedings. Since its inception in the year 2014, Prime Minister has led the celebrations for yoga at various iconic sites across the country and abroad as well.
And CNN News 18's Ishan Wani brings us this report from Srinagar's Dal Lake, where Prime Minister Narendra Modi performed yoga this morning.
On the banks of Dal Lake today, the Prime Minister Narendra Modi performed yoga along with at least 7,000 people who had come to become part of that International Yoga Day event being held in Kashmir. It was this beautiful location which was chosen as venue for the Prime Minister's visit and then also his yoga. There were huge security arrangements that were made. Marcos commandos were deployed in the Dal Lake, and also Srinagar, some roads connecting towards the Dal Lake were also cut down. The Prime Minister yesterday had also mentioned the need for holding of assembly elections and said that very soon there will be elections that will be held in Jammu and Kashmir, and also promised that J&K will soon get statehood. But the messaging was that the Prime Minister coming to Kashmir and getting the scenic visuals from the banks of Dal Lake performing yoga is something which has cheered one and all. While there was excitement among youngsters who were part of this mega event, while others were keenly watching the Prime Minister from Kashmir, because this is a messaging that Kashmir is safe and it can hold international events like G20, International Yoga Day and other major events where a larger participation of people from across the globe have slowly started to be seen. He also said that even in the Gulf countries like Saudi, it has become an integral part of some people, and India's brand is being seen now globally when it comes to yoga. The rain in the morning played a spoil sport, but then there was brief drizzle while the yoga happened, and now even now the rains are taking place, but the event has now ended.
All right, so that's straight from Dal Lake. And on this occasion of Yoga Day, we also bring you this conversation CNBC-TV18 Shibani Garat had with model, actor and fitness enthusiast Milind Soman, his mother Usha Soman and wife Ankita Konwar. Now, Shibani began by asking Ankita about how she maintains a fine balance. Listen in.
Ankita, you have been so vocal about body positivity and embracing one's physique.
Yes.
How do you maintain that healthy balance, between your, let's say, fitness goals and self-acceptance?
Most of the times, we work out and then we compare ourselves, what we looked maybe 2 weeks ago to today. We would like to see some difference, that happens. But so many times it happens so often that we completely forget the idea why we started working out. We wanted to be healthy. We have completely forgotten about it, and now we are obsessed over how we look. Yeah. We want to have abs, we want to have some muscles in a particular area, and that's only what we care about. Yeah. We have forgotten the holistic side of it, that okay, with a active physical body will also your mind will become calmer, cooler, and then you will be able to see everything clearly, right? There will be a mental clarity with everything that you do, your decisions that you will make, everything will come with a clarity. So many times we do that, and I think that's what kind of irks me, that we forget that okay, this is why we started our fitness journey, and now we have completely forgotten about it, and now we only care about how we look. So I have always made myself clear that, okay, this is not what we are going to look at. We are going to accept ourselves as we look at ourselves in the mirror, as we see us. We're going to accept us as we are. So there's not going to be like, oh, why do I have some fat around here? That's maybe because the body needs it. Why do I like this certain kind of food? Maybe because my body wants that. So just accept yourself for who you are, what you are. At this moment, this is the best version of yourself that you'll ever be. So why not accept yourself right now? Because 2 years down the line, when you look back, you will be like, oh, I was fantastic at that time. I had a fantastic body.
Happens to me so many times, actually.
So why did I not? Why did I not think about it? In fact, I wouldn't lie that, of course, that has happened to me also. I had also become very, very... I think I was a little overwhelmed by the whole idea of being fit. So I had also gone through the whole process, and finally I have come to this conclusion that doesn't matter. It doesn't matter how you look. It matters how you feel.
And Milind and you both have been such great advocates of fitness at all ages. What are your thoughts on adapting workouts for different, age groups, particularly seniors for that matter?
Start simple like walking. best exercise, I would say. I walk. So, because it doesn't need any equipment, any special things. So just walk and be consistent. I mean, even if you can't walk, say, kilometers every day, at least some walk. And preferably in fresh air, not on a machine.
Miran Soman and family in conversation with CNBC TV18, and with Nisha having her fangirl moment, it's time to call on curtains on this edition of Business Lunch. From Nisha, me and the team that put this show together, thank you so much for watching. Midcap Radar takes the action forward.
Of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence. This is India's election headquarters.
As the verdict emerges, the markets will react,
bringing market movements into sharper focus.
Good afternoon, welcome to Midcap Radar. I'm Sonal Bhutra. With me as always is Vivek Iyer. Well, it is a sharper fall than what we had seen in the morning. 103 points down on the Nifty. Midcaps are imagined to be in the green, but they have also come off from the highs. So it looks like it is another day where there could be some consolidation or maybe some profit booking.
You're right. You know, last couple of trading sessions, what actually happened was the fact that the Bank Nifty outperformed quite significantly. Today, what's happening there is a bit of profit booking after 2 sessions of significant outperformance. So that is one of the reasons why the market has slipped lower today. But we have a lot lined up on this edition of Midcap Radar. First up, let's start off with the top headlines. Indices slipped to the day's lowest point after a strong open. IT and pharma are the big gainers, even as FMCG and financials track. Midcaps relatively outperform better.
Mid-cap ID stocks like Persistent, Coforge, LTI Mindtree all gain on the back of Accenture's third quarter results. The company narrows its guidance for FY25 to 1.5% to 2.5% from 1% to 3% earlier, with strong growth in new bookings and increased adoption of AI raise hopes of a bottoming out for the sector.
Havells India jumps over 4% in trade on the back of a Jefferies note. The brokerage acknowledges Havells as a strong franchise, but keeps a whole rating with a target price of 1,800 rupees a share. Says the company's overall EBITDA margin will revive to 11% by FY26.
Aster DM climbs after 9.3% equity changes hands in a block deal window. Sources tell CNBC-TV18 that Olympus Capital Asia Investment is the likely seller.
And fertilizer stocks like Chambal, RCF and GNFC profit booking after the strong recent run-up. Chambal Fertilizers also comes out of the F&O ban.
Okay, all right, those are the top headlines, but the bigger headline is the fact that the market fall is a little steeper than what we had seen in the morning. 100 points gone on the Nifty right now. It's below that 23,500 mark. There was an attempt of recovery from the lows, but that also has been sold into slightly. Mid caps again, they are outperforming. They did see a dip in the red. It recovered from those levels. Now it's up around 84 points. So it's been quite volatile even from the mid cap angle, and it has come off sharply from the highs of the day as well. As Vivek was pointing out, banks are not doing well in trade today. They are not participating in any of the gains, but there's some support coming in from IT.
You're absolutely right. So what's actually happened is that the last couple of trading sessions, banks, some of the agrochem names, some of the fertilizer companies, sugar companies, all of them did very well. Today, seeing a bit of profit booking across all of those names. But this is our special segment, Mid-Cap Movers, where Hormaz is standing at the wall to take us through the mid-caps that are buzzing in the session today.
Well, it's slightly choppy as we speak, but the flows might just reverse in the last hour of trade because of the FTSE inflows coming in. So we will wait out for the last 60 minutes of the trade. But as of now, the broader markets are still holding on to some bit of gains, but the Nifty is underperforming. Let's look at some of the top losers within the broader markets, and HPCL here is leading the pack. So remember, the stock is trading ex-bonus in today's trading session. Supreme Industries also not having a very good day. Cochin Shipyard, after a gravity-defying run, is seeing some bit of profit booking, and Bharat Dynamics also seeing at down 2.5%. Fertilizer stocks were the stars in the last few trading sessions, all of them gaining anywhere between 15 to 20% in a single day, all of them coming off in today's session ahead of the GST Council meet tomorrow. Chambal, GNFC, Deepak Fertilizers, RCF. In fact, RCF was in a 20% circuit yesterday, so some 5.5% lower there as well. A sector bucking the trend, though, is railways, and that is the sector that is shining bright. Even after the broader markets being a bit choppy, RailTel is up 11% now. RVNL and IRFC also seeing some bit of buying interest coming in. Some stocks doing well on the back of volumes, and Cera Sanitaryware is among the toppers in that list, almost 9% higher on very strong volumes. Raymond off the day's high, but still 5% higher. VIP Industries is seeing a gain of 5% on strong volumes, as is Bayer Corp in today's trading session. And lastly, some stocks doing well on the back of positive brokerage commentary. We'll talk about them in the as the show goes on. PVR, Inox, Havells, both gaining around 4.5% each. And First Source, when Nomura is neutral, but the management commentary is something that has pleased the street. So 3% higher there as well. Back to you guys.
Okay, we'll discuss about PVR Inox in greater detail as well. Thank you so much, Hormaz, for joining us as always. On the fertilizer pack as well, of course, it's the meeting is tomorrow in terms of GST rates, and the analysis suggests that it will not impact fertilizer stocks so much even if there's a GST cut. So that's the word coming in from experts as well. So just keep those stocks on your radar as well. But it's a good time to get a technical check on the markets. Let's welcome Himeen Kaparia of KR Choksi Securities for just that. Himeen, good afternoon. Thank you so much for joining us today. Well, do you think this profit booking or the consolidation that we are seeing, at least in the benchmarks, that will continue and it could be very stock specific from here on?
A very good afternoon to you, Sona. Thank you for having me on the show. It's always a pleasure. I think you're absolutely right. It seems more stock specific because obviously the Nifty is looking a bit tired. We spent almost 10 trading sessions tightly bunched, and today we're looking a bit heavy. The volatility index, Sonal, is also getting a bit oversold. So a bounce is underway. So the VIX goes up after such a big decline. Logic says the markets also need to cool off a bit. 23,656 and 23,400 has been the range for almost the last 18 or 20 hours, Sonal. And if 23,400 breaks, we haven't yet done that. But if 23,400 breaks, then I wouldn't be surprised if we see a 150 or a 200 point decline. Stock specific, yes, a lot of action. And if you were to correlate this to the bank Nifty Sonal, the levels, I mean, the setup is almost similar, obviously. You have a range between 51,934 and 51,200. So there's roughly a 700 point range coming in over here. If 51,200 breaks on it, then I think we see a similar decline. This doesn't change the trend or something, but yes, we've had a V-shaped recovery and we've had a very smart move. After that, the stagnation, you see the Nifty slowly bunched and going sideways and now down. So I'm not saying too much, but a small correction seems to be on the anvil. But the levels of 51,200, 23,400 haven't been broken yet, Sona.
So 51,200 for the Bank Nifty and 23,400 for the Nifty are key levels as per. Heyman, which are the individual stocks or what is it that you're recommending today?
I think a couple of stocks which look interesting. The first one is a buy call on Apollo Tyres, Vivek. Had high bottoms above the 55-day exponential moving average. Mechanical indicators giving a crossover buy. Everything seems to suggest that we are heading for a further upside in spite of a slightly stagnant or a wobbly market. So one can buy Apollo Tyres at 497, stop loss 482, target of 527, risk reward ratio 1:2. And the second stock is a sell on ABFRL. A small rounding top stock looks tired. We are just breaking down from a 7 trading session consolidation phase. Now on the hindsight, I can say it wasn't consolidation, probably a small distribution phase. So not too much. The long-term picture still seems positive, but now a small correction is underway. So one can sell ABFRL at 317, stop loss 327 and target 297.
Okay, all right. Thank you so much for joining us, Heyman, today. Have a great weekend. With that, we'll slip into a short break. When we come back, we'll connect with Rohan Gupta, the director of Nuvama Institutional Equities. We'll discuss what's happening in the specialty chemical space. Most of these stocks are buzzing, and we'll also discuss the trends in the agrochemical space. Stay tuned for that.
Authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things are not looking very good for the ruling regime at this juncture.
Of course, things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com.
Welcome back. You're still tuned into Midcap Radar. We spoke about PVR Inox and how it's buzzing in trade today in an otherwise weak market. It is higher after MK has written a note on it. They have maintained a buy rating on the stock and cited some reasons as well. Vamakshi is joining us now on our special segment Midcap Spotlight with all the details.
Well, absolutely, Sonal. When we look at PVR Inox, over the course of this year itself, the stock has underperformed, and MK says that the weak performance could be highlighted, on account of patchy box office performance over the last few quarters. Structural issues still persist, which includes a rapid adoption of OTT, as well as higher ticket and F&B prices. And they have highlighted that occupancy is unlikely to bounce back to pre-COVID levels. Even the first quarter is expected to be a dampener, with the IPL, T20 as well as the general elections being hurdles for some of the movie releases. The high fixed cost structure of the company is also impacting the profitability and has aggravated this issue. But as far as the future is concerned, over the medium term, they expect to see some respite. Movie pipeline is expected to improve going forward, and the company is also taking a lot of initiatives both on the revenue as well as cost front. They are trying to maximize profitability. Screen addition guidance is now looking more calibrated in their opinion. Loss-making screens are also being culled on a regular basis, and the company itself is transitioning to a capital-light model. Fruition of some of these efforts, however, is unlikely until the medium term. What they're saying is that all of these negatives are now priced in. The stock performance now hinges on the improvement in the box office collections. So overall, given all of these factors, they've gone ahead, given a buy rating on this counter and a target price of 1,650 per share.
Okay, all right. The specific stock aside, I think over the weekend it's a good time to hit a theatre and go for a movie as well. But jokes apart, let's talk about specialty chemicals and the agrochemical space. Nuvama says domestic demand environment is favourable for agrochem and intermediate manufacturers. Demand revival is led by firm crop prices along with government rural push. They also add freight costs, and the Red Sea crisis may put pressure on near-term margins. To discuss this and more, we have Rohan Gupta, Director at Nuvama Institutional Equities, joining us now. Rohan, good afternoon. Thank you so much for joining us. I wanted to understand what has exactly happened to excite this space so much, because managements have been commenting that this recovery will come by in the second half of FY25. Is there any incremental trigger? Do you think the recovery has come in faster than expected, and that's why some of these stocks are buzzing?
Yes, hi, good afternoon, and thanks for having me on your channel. So yes, I mean, first of all, what is changing in the sector is basically the outlook, because we are now coming more closer to the recovery. I don't think that there has been a significant change in the commentaries of the management, and even as an analyst, we have been expecting that there will be sequential recovery, which should be in place already. And Q4 results have been broadly in line with the analyst estimates. I think that the Q1, Q2 also will mark a sequential growth, adjusting for the high base in Q4. So apart from that, I think that the sequential growth is already in place. Most of the agrochemical companies, the global environment is likely to improve in the second half. But yes, the things and visibility is now only just getting better. That's what I think the stocks are pricing. That is number one. Second, in agrochemicals, especially in domestic agrochemicals, intermediate manufacturer, I believe, are likely to benefit in a near term, because there is a vessel availability crisis in China. The freight rates have gone up almost 4x to 5x. That is definitely going to help some of the domestic agrochemicals intermediate manufacturers. That is a short-term idea, probably over next 3 months to 6 months. I think that these are the players probably which are rightly placed to benefit from this scenario.
Rohan, just to step back a little bit, could you give us a sense, or could you give us a breakup as to how is the Indian domestic market playing out, and how is it that exports are placed? So far the worry was that the inventory was still quite high as far as export markets were concerned. So are you now seeing a certain amount of recovery over there as well?
So as far as domestic agrochemicals markets is concerned, that the view was already positive, because initial estimates of IMD and other forecast agencies forecast was favorable for the good monsoon this year. So far now that is holding on, and that we are expecting even with the supported by the government rural push, domestic formulation companies are likely to do well. That's where we remain positive on the companies like maybe Dhanuka, Insecticide India. These are the players who are likely to do well in the domestic agrochemicals. As far as the exports markets are concerned, I think that especially companies focusing on agrochemicals for the exports market, they will see a recovery, more importantly in second half. However, as I mentioned, there's sequential recovery in place. I mean, the numbers will be on every quarter should get better. but large part of the growth should be coming in the second half. Companies which are not primarily dependent on agrochemicals for their exports, companies like Gujarat Fluoro, Aarti Industries, Galaxy Surfactants, these are the players who are not completely dependent on agrochemicals. In my view, they should be continuously growing on every quarter, even from the Q1 itself. And that's where we are more positive on the names like Gujarat Fluoro, Aarti Industries, Galaxy Surfactants, which are primarily focusing on FMCG or consumption-led business model.
Got it. So when you talk about consumption-led business model and some of the stocks which could cater to that, the recovery that we are seeing, is it demand-led or there's some pricing recovery as well that we are seeing? And if there is pricing recovery, so what happens to commodity chemical names, say Tata Chemicals, because they have been under pressure as well?
So what we have been maintaining that prices for most of the either commodities or specialty chemicals have bottomed out in month of August, September, and since then they have been stabilized. There was a concern that once China, after the New Year come in month of maybe March, April, the prices may again go down. So far now, it has not happened. So prices are still holding on, and on the contrary, in some of the chemical prices, there is a uptick of maybe 5% to 10%. So the bigger worry was that after September, October, people were expecting that once China come back after the New Year opening in month of March, like how they did last year, they dumped the commodities, they dumped the prices. So far now, that has not happened, and I think that is a good news for the sector. We have been maintaining that there is no further room for any price cut emerging from China, and that prices are still holding on. Now, the recovery which we are talking about, it will be all across. First of all, global inventories level are drying down, number one. Second, we are also seeing that re-inventorization has also started happening up to in some pockets, and a little bit of the price increases. So the recovery is not only driven by any one thing, it's across the drivers of the growth which are going to play out.
Okay, thank you so much, Rohan. We have a lot more questions, but today we are running out of time. With that, let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
We are hoping to see the credit growth in the range of about 14 to 16%, and we expect to see very broad-based growth in credit, right from SME, agriculture, retail, and also in the corporate. As far as we are concerned, our domestic NIM last year was 3.43, So I expect our domestic name should be around the same number.
The shock and awe story of NVIDIA, Shankar. I mean, you know, today the most valuable...
Welcome back to Midcap Radar. The beauty arm of retail major Shoppers Stop has launched Giorgio Armani in India, starting with fragrances and makeup. The company is also set to launch Prada and Valentino's makeup lines in India. My colleague Shilpa Ranipeta caught up with Biju Kasim, the CEO of the beauty business at Shoppers Stop, to discuss the launch of these luxury brands and the company's foray into Tier 2 and Tier 3 markets. Listen in.
Armani has got a beautiful portfolio of lines from men's and women's products. Makeup is going to be launched because the process is on. We are in the process of registration, which means that within the maximum about 2 months we should have it on the shelves. And the boutiques should be ready in about 4 months. Why you say 4 months? It's just that we are just finalizing the formalities. And obviously the design and things are being worked around. So normally it takes 90 days to 120 days to have the boutique well done.
I want to talk about SS Beauty overall. You know, last quarter it was the growth driver for Shoppers Stop. If you could sort of run us through how the performance has been so far. Are we expecting it to outpace Shoppers Stop growth again? Sort of can quantify the kind of growth that we've seen for the beauty business?
Beauty within Shoppers Stop did fairly well. This is a journey that we have seen in the last 2 years. Last year also we had very strong growths. This quarter as well we see positive and strong growths. Overall there was a bit of a softness for the category. This was largely due to factors that were not really in our control, whether it is a bit of a heat wave that was there due to the elections and so on and so forth. But we see that the numbers are coming back very, very strongly. Right. Beauty has been growing ahead of the company, and we see the similar trend continuing at this point.
Right. And what about store expansion for this fiscal? How many are we looking at? Store-in-store also, and exclusive SS Beauty stores as well?
So for Shoppers Stop, we had one of the maximum number of openings last year. This is going to continue this year. So which is the box, which is actually the department store, and we are also venturing into Tier 2 and Tier 3 cities, because this is where consumers are really eager to indulge.
So we did NARS, now we're doing Giorgio Armani. What other luxury global brands can we expect you to bring going forward?
So at this point, I could only talk about what we have signed. Okay. So Giorgio Armani makeup is going to come in, and we will soon have a Prada makeup, which will also be followed up with Valentino makeup. Okay. So these are 2 large projects that are in the pipeline, which should come to the market in the next 4 months to 5 months. So these are 2 large exciting projects that we are working on at this point in time.
Well, a very interesting conversation with Shoppers Stop bringing in new makeup lines in India. But one particular event that will happen in the second half or in the last hour of today's trading session will be the adjustments that will happen due to the inclusions that certain recent listings will see as far as the FTSE All Cap as well as the All World indices are concerned. Along with that, certain existing stocks within the FTSE indices will also see weight changes. Now, which are the stocks that are going into the FTSE this time around? Quite a few recent listings, so names like Tata Tech, JSW Infra, IREDA, Cello World, Hanasa, all of them come into the FTSE All World All Cap indices. All of them will see flows today from passive funds in the last half hour of the trading session. Along with that, remember, Sensex will have a new look when it comes to Monday. Adani Ports comes into the Sensex at the expense of Wipro. That adjustment too will be taking place in today's trading session. But that's all the time we have on this edition of Midcap Radar. Your stocks when we return.
World. For most of us, the big breakthrough moment as far as generative AI was the ChatGPT moment. But for you and for the folks at NVIDIA, I mean, when did you start to think that this was on the verge of an explosion?
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, you know, we've been doing deep learning since 2012. Jensen, you know, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, you know, like, where did NVIDIA come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, you know, small startups as well as mid-size and large startups, and all of the, you know, global research centers, global capability centers, and, you know, major ISVs. It takes a long time to build a market.
Steel, we are one of the best prime location of a steel asset, which is in Jharkhand, near Bokaro, is in the Bokaro. We have a proximity of all the raw material, iron ore and the coal. We are proximity of all the railways. We are proximity of all the gas. We have put this asset on the basis that if we get 1.2 billion per million ton, we have a 3.5 million ton of plant, which at the moment we are producing close to 2 million. 3.5 will be by end of this year. We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, you know, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we are largely quiet in today's trade. We have the Bank Nifty, which is under pressure, but it has recovered from the day's low. We have the mid-cap index, which is managing to hold up in the green, so up around 0.3% currently for the mid-cap index. IT stocks continue to be in focus post Accenture, so that continues to be one piece of news which dominates in today's trading session. For the Nifty as a whole, is just about consolidating with a negative bias, so down around 0.13% for the Nifty and 0.2% for the Sensex. Well, joining us today, we have Shaina Mukaddam, who is an independent market expert, and Vaishali Parekh, head of tech research at Prabhudas Leeladhar, to answer all of your queries this afternoon. Shaina as well as Vaishali, welcome to the show. Well, Vaishali, let's start with you in terms of the technicals of the market. It's quiet today. It's been, just about a marginal gain on the indices on a week-to-date basis as well. How would you approach today?
Very good afternoon, ladies. Yes, actually, market has been very good. In fact, I would say on a weekly basis. And we were expecting Nifty to go towards 23,700. So we were pretty much there. So I think now it is consolidating. And Bank Nifty also, we were expecting 52,000. So that's what we did. Today's high was also somewhere near 51,900 odd. So I think the target levels, and as far as the indices is concerned, it has been met with. Now it comes to consolidation phase, but stock specific movement still continues. So that is how we would be looking at the market now.
Okay, all right. Well, let's get in some questions now. We have Arunachala Balaji, who writes to us from Tamil Nadu, holds around 2,000 shares of Utkarsh Small Finance Bank. which is bought at around 55 rupees per share. So she's just about, breaking even. Wants to know the future prospects of his investment. Well, Shaina, what would you recommend on this particular counter? Just about breaking even. Do you think that there's further upside from these levels on a fundamental basis?
Well, I would say that the upside will be limited, at least for the medium term. The reason being, it's, I think, just about a year or slightly a few days lesser than a year when the stock initially listed. And as you're aware, it was a very, hyped up IPO. It got something like 100 times subscription, and it listed close to the current levels, which it is today. And it didn't really perform after that. So the investor has gotten at higher levels. And if you look at it, even for the medium term, while they are doing well because they are microfinance, bank, which they have presence in UP, Bihar. So these are faster growing areas in terms of credit. At the same time, if you see the last year's performance, like FY24, naturally it would have been, benefited by the funds that they raised via the IPO. So going forward, I think there is likely to be some bit of a consolidation in terms of both their financials as well as their stock price. So for the shorter term, I think there are better stocks available with a similar valuation. Like price to book for Utkarsh is now close to about 1.7 times book. So there are other banks which are available, larger banks, which the investor can look to switch. So I would prefer that she switches at current levels to some other maybe private sector bank that would look better for the medium to longer term.
Okay, all right, fair enough. Well, this year itself it's not done much. Technically, how would you approach this stock, Vaishali?
Yes, so I would say there's hardly any trend. I mean, the stock that we don't see a real, of course, the data is also quite limited as compared to the other stocks. So I would say there is nothing really happening. The stock has a range of 48 to around 53, 54. Unless and until this stock moves past 54, 55, we can expect a target of 60 to 62. In that case, I'd rather suggest if time is the factor, then we are already in a good strong trend in the small size banks like City Union or Bandhan Bank. Those are the banks which are likely to give you a faster return. So I would say you rather switch to these banks as compared to Utkarsh Bank.
Okay, fair enough. Well, we do have another query now. We have Pallavi who writes to us from Chennai, holds 20 shares of Happiest Minds, which she's bought at an average price of 14.26. She's a long-term investor, wants to know what to do, whether she should book her losses or probably stay invested. This is a tough call on, on a stock such as Happiest Minds. So let's get a fundamental view in first. Shaina, what would you recommend? Do you think that there could be some amount of turnaround when it comes to the stock performance?
I think, this stock is likely to continue to see some bit more of consolidation in the medium term. So here again, my recommendation would be to switch. There are a couple of factors going into this recommendation. One is, of course, the IT sector as a whole. We are going to see some bit more, time before we see the demand actually come in back for the overall sector. That is one. Second is valuations. If you compare it with some of its other peers, it looks expensive at current levels. If you look at the PE multiple, it's 32 times FY26, which is expensive. Even if you look at it from some other parameter like EV to turnover to market cap, there also it's expensive. It's about 9 times. So there are other quality stocks which are available at a more reasonable valuation. While if you are a long-term investor and you have invested at low levels, then yes, there are a couple of upsides because it is done pretty well in getting market share in digital, and I think it has or it is planning to make more acquisitions in the BFSI space, which actually could see it grow better over the longer term. But as of now, the financial performance is also a bit subdued, so I would switch.
Okay, you would switch. What about you, Vaishali? Technically, how would you approach Happiest Minds?
So I would say actually to start with, the whole IT index is showing signs of recovery and signs of reversal. Now talking about happiest mind. I mean, on a daily chart also, if I'm looking at it, the stock did make a bottom at around 800 levels, and now it's getting into a trend. Even the weekly chart, what I'm seeing is it has, after a very long time, come about a cluster of moving averages. So that implies that this stock is ready to now give a good bounce back. So I would wait and watch. I mean, if he has bought, I would rather say average out even at these levels. Because once the stock, because we've been seeing an improvement in the volume also since a couple of days. So if the stock moves and sustains about 950 on closing basis, I think this is ready to go towards 1200. So no harm averaging the price right now, so you can lower the cost price.
Okay, all right. Well, we now have Sahil Shirke, who writes to us from Mumbai. He has an investment query as a whole. He wants to invest in PSU stocks and is asking which one he can buy. Well, that was and continues to be the flavor, China. It's broken up into various categories as well in terms of what you can invest in when it comes to the PSU space. What would your recommendation be if you had to pick out one stock and if you had to pick out a portfolio?
Ekta, this is a very difficult question because, PSE stocks, they weren't fancy for some time back. They have rallied such a lot that for me to give a fundamental call on basis of earnings, it's become very difficult. At the same time, so I think the best way to invest in the PSE stocks at current time frame, because what has happened is they're so expensive that it's better to buy a portfolio of them, do something like an SIP, and there you have a couple of sectors which have done very well, which have been multi-baggers last 1 year, but I believe if you again hold it for 2 to 3 years, they will give you decent return. So the top of the list in sectors would be, of course, defense. Like something like a Hindustan Aeronautics, something like a BEL, very expensive at current levels, but like even I have invested in HL at much lower levels, and I would probably continue to hold, though I think it's a bit expensive because the order book is so substantial and it's likely to continue going forward. Second sector, of course, is the banks. If you're looking for PSU space for investment, I think SBI tops the list for banks. And then you could look at some of the others, maybe something like a Canara Bank, which their valuations are still not too aggressive. So you could look at something in banking. Then another sector you could look at, in my view, something like a shipyard building. There again, the stocks have run up a lot. But I think something like a Cochin shipyard, I used to like it at much lower levels. I still continue to like it for a medium to longer term, given the fact that they have huge order book. The sector is going to do well going forward.
Okay. All right. Well, anything within the PSU space that you like, technically, Vaishali? I know it's a broad question, but anything that you are tracking within the space?
So I would say I would go sector-wise. Actually, even if you see in the metal sector, whole of metal sector is doing well. So I would put my thoughts on SAIL, Steel Authority of India, because I think still there is a lot of further upside. I would choose Hindustan Copper also as a SIP strategy. Besides that, well, as Shaina mentioned, even in defense, so BHEL, BEL, they all look good even. I mean, but at this juncture, when market is already at 23,500 levels, I would say it is always better to start accumulating at every dip from here on, because at some point or the other, we are definitely going to see some corrective move coming in. So the ideal way would be, considering the long-term trend intact, we are seeing good hype projected targets in all these stocks that I'm talking about. So it would be better to start accumulating at every dip. That would be my strategy right now in a market condition like this.
Okay, all right. Well, we have another investment query now. Neetu Jain writes to us from Bihar. She says she wants to invest in new age stocks and is asking which one she can buy right now. Well, this is a question which comes up repeatedly on the show, that people are interested in buying a couple of these new age stocks, the Zomatos of the world and the others. What would you recommend, Shaina? Any of the stocks that you like within this entire basket that you would recommend at these levels?
See, I think, the investors, like, for example, in Zomato, which looks good even at current levels for a new age stock, should keep a lookout for some of the IPOs that come out, in the new age space. Like for example, two-wheelers, electric two-wheelers. There is a likely IPO in the medium term, short maybe couple of months. So you could keep an eye and put in money in those sort of IPOs. Also, I think travel is a space where we've seen a couple of new IPOs that have come up, which are doing well, and where valuations, are not that stretched, because I think to an extent it looks a bit stretched, but last year was pretty bad for them. So I think going forward things should look better. So like something like I would say Ease My Trip. That is one of my top picks in the travel space for the new age companies. So you could actually also look at the power space, something like an IEX. So there are a couple of stocks that you can look at even in the current portfolio, and then keep a watch out for the new IPOs that come out.
Okay, all right. What about you, Vaishali? Ease My Trip, Zomato, Paytm, technically any of these stocks?
Zomato has already done a good run-up, but well, having said that, I think still there is scope of further upside. But yes, I do agree with Shaina on Ease My Trip. I would also look at Paytm now, because that too is showing signs of reversal. So a calculated risk in these stocks should be taken.
Okay. All right, so that's the word coming in on a couple of these new age stocks, as well as queries which we've answered. We need to take a quick break on that note, but a lot more questions lined up on the other side. Stay tuned.
Let's go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice, and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the Content Authenticity Initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what.
Welcome back. You're still tuned into Your Stocks. We have with us Shaina as well as Vaishali Parekh to answer all of your queries this afternoon. Let's get in Unni Krishnan, who writes to us from Chennai now. He holds 200 shares of HUL, which he's bought at around 2,710 odd rupees. He wants to know the future prospects of his investment. So he's currently sitting on a loss when it comes to HUL. His buy price is higher than what he bought it than where the current price is. There's been a lot of positivity around HUL, especially post the elections. It was momentary, but nonetheless, there is some amount of, focus on the consumption story, Shaina. So in that context, how would you approach HUL going into the remaining part of FY25? Do you think that it's a long-term buy?
It has always been a long-term buy, because valuations are so expensive that you cannot really make money in the over a 2 to 3 year period. When these type of stocks make money, they make it in a quick a couple of quarters, and then they stagnate. The stock stagnates for a long time. So these are stocks which are like portfolio stocks. And even if you look at pure fundamentals, if you look at the earnings, if you look at the profitability, last year was pretty disappointing. Actually, the expectation valuations that were there from improvement in margins didn't really happen. Now, in the current year, we are talking of better monsoons, improved demand from the rural space. So things hopefully will look better. At the same time, valuations are so expensive that the stock could give you returns which I would say may be better than the interest rates that you're getting. But to expect it to be a multi-bagger for the shorter term or medium term, I doubt. So if she wants to have a fast-moving stock in her portfolio, then she needs to move. She needs to switch.
Okay, all right. Faster moving stock in your portfolio, then you probably need to consider switching. Vaishali, HUL technically?
Technically, I think it is quite well poised, and I think 2350 acts as a very good support. So since you said that this person has bought it at higher levels, I would say no harm again accumulating, keeping in mind 2350 as support, because once we see momentum setting in, we are looking at a target of 2700 to 2900. So that's the way one should go about handling this stock.
Okay, all right. That's any other FMCG stock that you recommend also technically?
So I would say why not Tata? Yes. So Tata Consumer, ITC, they all fall in the FMCG counter, and I think these are all stocks which can give, as far as the risk-reward ratio is concerned, there is a good run-up expected in these stocks. Because if you see in this rally, ITC has just not participated, but technically it is at a good level. So I think at these levels, one should start accumulating, because once the momentum starts, you can get good returns.
Okay. All right. Well, Prasad, now writes to us from Bangalore, holds 40 shares of Hero Moto, which he's bought at 4,820. He says he wants to switch to other stocks such as Eicher, Escorts, Kubota, or auto ancillary stocks. He's asking where he can invest. So he's looking to invest in auto stocks, and he has an investment in Hero Moto, which he's making a profit on. Well, technically, let's start with you. Give us a sense, Vaishali, on Hero Moto, as well as any other auto stocks that you would prefer over Hero Moto.
I would say that because actually, technically, if you go to see, Hero Moto has seen a one-way run-up. And even on a monthly chart, the stock has got into an overbought zone. So little partial profit booking should not be ruled out. And from here on, I think four-wheelers still has upside potential. Like Maruti, if we look at it, it has still got an upside potential of 14,000, 14,500. And talking about auto ancillaries, I was just looking at JBM Auto today. JBM Auto technically very well placed. I think this can give good returns from here on. Even Uno Minda, what we have been seeing in the past, has run up, but still there is good scope on an upward momentum. So I would say JBM would be a pick right now as far as the ancillary is concerned. And in the front line, I would still choose Maruti at these levels.
Okay, all right. And what about the fundamentals, Shaina?
Well, see, her specific question was whether he should switch to, he's given two specific stocks. So if, Hero MotoCorp, I would say that, yeah, well, things are looking much better for the current year compared to what it did last year, though it did well. Two-wheelers, rural demand is picking up. At the same time, yeah, I would prefer that he can take profits, and partly he can switch to, he wanted to switch to, I believe, tractors, yeah, Escorts. So Escorts, Kubota, of the two that he selected, I would prefer. One is that if you see last year Escorts' performance, on a flattish type of turnover, they did a substantial improvement in margins, overall margins and profitability. This was on two fronts. One is because they were able to contain their costs, and two is because of they started exports to their partner. Now, exports to their partner over the next 2 years is going to, increase substantially. I believe by FY26 it will improve it will go up in a major way. So I think this is the stock that over a 3-year period will give you better returns than a Hero MotoCorp. So yes, he can switch. Valuations are expensive, no doubt, but if you take a little longer term call, I think I would prefer Escorts.
Okay, all right. Okay, well, we have Hardik Shah, who writes to us from Mumbai, holds 20 shares of BEL or Bharat Electronics, which he's bought at 308. He wants to know whether to hold or to sell at these current levels. So he's just about breaking even on this particular counter. Would that be prudent then to probably exit, Vaishali, on the technicals?
I don't think so, because the trend is really very strong. And I would say that there is still no reversal as far as the indicators are concerned. I think continue holding, and in all likelihood, if market continues to move the way it is, this is ready for a target of 330, 350 to start.
Okay, all right. That's on BEL. It's done well in the past few months technically, but fundamentally, Shaina, how would you be placed on it?
I will agree with Vaishali. I don't think that one should book out at current levels, though fundamentally it is expensive, like, most of the other PSU stocks. They have run up, defense stocks especially. But here, if you look at the order book position, it's almost 35,000 crores. And if and it's a multiple time compared to what its current turnover is. So the growth is, huge growth is possible. I think it's just how much they can deliver, so that over a period of time should improve. Even if you saw last year, I believe on, the profitability had shown a good spurt. So therefore, even if the valuations are expensive, if you take a 3 to 5 year view, given the fact that the defense sector is going to continue to do very well, it is a stock that you should hold in your portfolio.
Okay, all right. It's a stock that you should probably hold in your portfolio. Well, Vaishali as well as Shaina, on that note, we're going to wrap up and wish you a good weekend as well. That's all the time that we have on the show. We wrap up with the news that we have a quiet day on our hands. We have the Bank Nifty, which is underperforming. You can always remember, for your stocks, email us your questions. We'll address them with our experts. Closing bell will take you through the last hour of trade for the week.
Like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that, the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person, either owning a team or at least supporting a friend's team.
And so it's a passion, and I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, whether it's Satya or me, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League, cricket here. And, I'm part of the San Francisco Unicorn team. And so it's fun.
So the Hyderabad Mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, I mean, rather than, in this case, the mafia. This is all about a passion, and cricket's a global sport. And actually, the funny thing about sport just brings together people like no other activity. And, just the amount of excitement. But now we have to go win it all, right? I mean, we've just got to the, Super 8s. And Unfortunately, the India-Australia match, I have a board meeting on that day, so it's going to be
big conflict.
No, the board meeting is going to take priority, but I'm going to perhaps sneak a look now and then at what's happening.
I would imagine.
Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity, and low self-esteem.
In India, you see a lot of gum disease, which is also promoted by things like tobacco and supari.
Poor oral health is linked to serious systemic issues like heart disease.
The Taiwanese index is trading with losses of almost 1%, as is the Hang Seng. First, with a $16.5 billion, there's a down 1% in US dollar terms.
The Nifty is up 35 points, so looking good.
Post the election day fall, we have seen markets make a very strong comeback.
It is turning out to be a Friday, which was not something that the bulls would have liked. Nifty is down 150 points from the highs of the day.
It shows you that technology moved from something that the techies did to impacting every one of our lives.
Spaces where customers have always clamored for Meraki, but we've both been very cautious about, bringing Meraki to those markets and those customers.
Most of the FTSE additions were already announced on May 24th.
Well, it is a sharper fall than what we had seen in the morning. 103 points down on the Nifty.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that was the day so far. Hello and welcome. You're with us on Closing Bell, and we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me is Sonia Shnoy as well as Manglam Malu. So, guys, we're wrapping up the week, a week that's been really quiet, because if you look at the tally so far, Nifty is absolutely quiet, mid-cap index maybe about 0.5% higher. Banks have been the story, but I guess, as of now, it's slightly, you could say, maybe a little inconclusive, because the market's not falling, but that rapid rise kind of has come to a bit of a halt.
I think consolidation, right? Yeah. That's all you can... that's the word you can use. For the last many days, we've just been ambling around this 23,500 mark. There was so much traction last week and the week before that this market is just cooling off. Today, of course, the market is down about 100 odd points. The Nifty is down about 100 odd points. But if you see the chart, you'll realize that it's still just ambling within that very, very tight range. The Nifty Bank also just about ambling, and the mid-caps absolutely flat. So not too much happening at the moment. But by and large, you'd have to say individual stock-specific action.
Individual stock-specific action, indeed, fly upwards of 23,600, right? Look at the three numbers that come up for you. Day before yesterday, the high on the Nifty, 23,664. Yesterday, 23,624. Now, 23,667. Pretty close to what we saw earlier as well. And from there, the Nifty is actually corrected about 200 points from the highs. What is the one leading the correction? It is the Nifty Bank. After doing extremely well over the last two trading sessions, maybe some give back on the Nifty Bank rallies, on the Nifty Bank also being sold into. The good part is that IT and metals are holding on, and as a result of which they've supported the Nifty at lower levels. In fact, the Nifty saw a recovery from lower levels of around 23,400 today as well. So it is in a range, it is consolidating, volatile in that range, and that's exactly what the street is playing for as well. Next Thursday, we will have the June series expiry, and the markers are placed at those levels itself. 23,600 call has a premium of what? 100 rupees. So 23,700 is the upper side of that range, and at the lower level you have the 23,500 put, again a premium of 100 rupees. So option writers are playing for 23,400 to 23,700. That seems to be a bit of a range on the Nifty.
Absolutely, I guess so. Range bound is the best way to describe it. On the mid-cap screen, don't be fooled by the index itself. The index is absolutely flat right now. It's not doing much, but in terms of individual stocks, there is action. Some buying has come back to PSU, so that's telling you that PSU trade is not dead at all. In fact, on the volume charts today, once again, some of the railway stocks have been looking good. RailTel is up about 10.5% higher. There's been Aircon. So some of these names are back up and about. Even on the private sector side, TexRail is up about 5% as well as IRFC, which is up about 3%. So buyers are going back to some of these momentum moves in the PSU side of the market. But aside of PSU, there's stock picking going on. Cera Sanitary, about 8.5%, 9% higher. Sirma is finding takers today. Sirma is up about 10%. There's Arvind Fashions, which is up about 6-7%. I mean, lots of names: Venus Pipes, Inox Green, Alembic. So the point is, I think at an individual stock level, there's a lot of action. It's just that sectors as a whole are not moving, or the market as a whole is not really firing away.
Absolutely. And
just a word on the broader markets as well. You know, one chart that tells you the story of the day is definitely has to be the advanced decline chart. When we started the show, when we started trade today, for instance, we had 1,600 stocks advancing for about 400 stocks which were declining. Those lines kept coming closer, and now they've intersected. We have the red line above the green one. We have around 1,100 stocks which are advancing, and the number of decliners have increased, crossed past the 1,100 mark, close to around 1,300. So that's, last 3 or 4 swerves that we can see in those crisscross lines has definitely told you about the market.
Okay, well, we have last hour of trade. So Mitesh Thakkar is joining in with some closing strategies. Mitesh, hi, good afternoon, and thanks for joining us. It's been a bit of a volatile day for the market, volatile week actually. It's been all over the place. But for the last 1 hour, last 55 minutes, what are you recommending, and what are the individual stocks to look at?
Yeah. So one, I think the market isn't looking very weak per se. It is a market which is doing reasonably okay, and my sense is that there is some kind of a profit booking kind of a move happening. I think as long as it doesn't show signs of correction, I would be pretty okay. Now the levels on the downside where this profit booking can be arrested would be one at 23,420. We are practically there. If that kind of gives away, there could be slightly a severe case of profit booking, but I still believe that 23,250, 300 zone should hold. So if you look at the overall index, it will still be less than 1.5% kind of a correction, but it could be choppy in the next few days. It could be, a market which will be sideways, but with a slight negative bias, and therefore you will see some profit booking taking a higher place. This is all due to the fact that this entire rally which started post the election result, on the hourly and the 2-hourly chart, we are losing momentum, and we are now, trying to come out of extremely overbought situation. So maybe a few days of consolidation is required. The idea should be to look at stock-specific cases to trade and wait for the index pullback to play out. So around 23,350, 250 zone is where I would want to see a reversal and then buy into the index. Till then, trading will be more stock-specific.
Okay, so let's talk about those specific stocks then. Mitesh, for the last hour, what would your picks be?
So I have one sell, which is and one buy. A buy on India Mart with a stop at 2640 for targets of 2760, and L&T is showing signs of a pullback and cool off. So L&T is a short term or a one today kind of a sell. Keep a stop just about 3590. Look for targets of 3400.
Okay, thanks a lot for that. Well, market expert Prakash Diwan is joining us now to tell us what one should be doing in the last hour of trade. Prakash, hi, welcome to the show. Well, so many stocks in focus, but I guess, all eyes will be on the banking names. Now, what's interesting today is that a lot of PSU banks have come under profit taking. So, whether it's SBI over the last couple of days, Punjab National Bank as well. Today, even in private, something like an Axis Bank is down about 1%. But would you buy any of these banks on a dip?
Good afternoon, Sonia. So I think banks have just started to kind of get their act together. On the stocks, that is. We've seen the kind of, interest that's building up towards some of these private sector under-owned banks where there is a very clear catch-up that's potentially available. And amongst that, if you take the hype around HDFC Bank away, I think Axis, ICICI, some of the smaller ones like IndusInd definitely stand a very good chance to participate in this rally. So, I mean, these are typically market leaders with a lot of strength. The sector has been out of favor. It's getting that favor back. So I would be surprised if, every time Bank Nifty kind of charges up another 1,000, 1,500 points, some of these banks will make the new highs, retest the new highs. And that's the way the story is going to pan out. Of course, there are fundamentals. I keep on saying, credit expansion because of private sector capital formation is around the corner. We've already seen signs of that. The budget will probably give more clarity and depth to that. And then, of course, you have the interest rate softening cycle happening maybe end of this calendar year, or it would begin with early Jan or something next year. So everything kind of starts falling in place. I don't see any reason why banks should participate in the next leg up of this. Of course, the market itself is a bit frothy on the other side, but banks definitely seem to be giving you some sort of a comfortable potential to move up.
Right, Prakash, I'm looking at a couple of stocks from the consumer space. In particular, the beauty and wellness space. HUL, for instance, is now declining. In fact, this morning, at one point, it was below the 200-day moving average as well. From the highs that we recently saw, the 52-week high, the stock is down about 12%. On the other side, we have Honasa, which is Mamaearth, which is doing extremely well. So if you just take a 1 month look as well, HUL, while, through its ups and downs, is up 5%. Mamaearth has moved 10%, and from the time Mamaearth listed itself, the issue price was about 324. It's a good 30-35% gainer. It's growing much faster than everyone else in the industry, has margin levers going forward, but also is trading at expensive valuations. How would you view Honasa from here?
So, Manga, very clearly, the answer lies within your question. Honasa has a very strong franchise, the strength that it derives from its product portfolio. They've also started expanding the product portfolio, and most of the new additions, if you see, are fairly high margin accretive. So, they're getting all of that in place, but it's just a case of coming up with an IPO much earlier than all your growth would start looking promising. Had they come up with an IPO with these kind of numbers and not, last year, things would have probably been different in terms of acceptance. I would not really want to buy into something like this as yet. Of course, turnarounds are something which can happen very sharply. But, the options that are available, alternatives that are available within that space. I mean, you would probably have a Nykaa doing far better, and the way it's kind of consolidating on the brick and mortar network also. It'd probably have a slightly better chance than Mamaearth in that sense. So I know I like this. The path to profitability is getting established and defined, but you'll still have to give it some time. The new age businesses that have floundered and recovered in the past, led by Zomato, I think that pack has far more salience in terms of what you could look at if you wanted to go into some sort of a business like this. So delivery, of course, is the one that I keep on talking about. See where it's moved from 240, 250 to almost 400 plus. So it's kind of a space where everybody has a different cycle and stage to kind of move into. And from that perspective, you'll have to wait for Honasa to actually participate in a very wholehearted way.
Speaking of new age consumer companies, guys, did you realize that now Swiggy Instamart is not just groceries and personal care, it's beauty? I got the shock of my life. And not because you can buy lipsticks on Swiggy now, but just what it might mean in terms of the disruption that the sector is in for.
Did you know you can even buy clothes on Blinkit now?
I bought my T20 jersey from Blinkit. And that's the beauty of quick commerce, and that's why they're valuing it as much, right? When you started out, everyone thought that maybe the assortment would just be things that you would need immediately, a few knickknacks here, there, some medical emergencies, etc. But now the kind of assortment that these guys are selling on quick commerce is incredible. Case in point, the latest phone was launched on Blinkit, and you had the latest PlayStation, which was launched on Blinkit as well.
Wow.
The reason for which was what? If I've made the purchase decision in my mind already,
then
so
you just
why
want
wait
it
for
delivered
it?
at
I want it right now.
So I just want it right now, instant gratification, and that's exactly what quick commerce is.
But then that got me thinking about the kind of moat that, the likes of Nykaa would claim. That is no longer a moat. Absolutely not, right?
Well, that may not that may not be a moat from a long-term standpoint. But then again, quick commerce has its limitations as well. It can't obviously give you the entire assortment in 10 minutes. So if you're willing to wait, then maybe never say never. But if you're willing to wait, then get more products, etc., then let's go about that.
Okay, well, let's. Yeah, I know. It's crazy. It's crazy what's happening with quick commerce. But let's move on. Adani Group stocks are in focus. Jefferies met the management of the group. Hormuz is here with the key takeaways. Hormuz, over to you.
Well, the Jefferies met the management of the Adani Group, and plenty of takeaways specific to the stocks as well. But we'll start off with the group as a whole. And they're saying that the group as an entirety is eyeing around $100 billion in capex over the next decade towards energy transition and towards digital infra. And it says that it is viewing its leverage position to be strong enough for the next leg of growth. Now, what the management also said that it is looking to capitalize on the large consumer base that it has when it comes to Adani's infrastructure platform business. So that is something that it wants to capitalize on. So $100 billion is the big number that the group is eyeing. Now, when it comes to specific stocks, I start off with Adani Enterprises, the flagship company, where Jefferies has a buy recommendation there. The management of the company there highlighted the fact that it is expecting a gradual rollout of the green hydrogen ecosystem, and that the setup will be the group's most capex heavy venture. So that $100 billion number that they're talking about, most of it might go to this. And the airports business should also benefit from the growth in traffic and in non-aero trends as well. When it comes to copper, they're saying that their copper project was recently commissioned and the work on the coal to PVC project has just begun as well. The management, when it comes to the debt levels, the management said that they don't expect the net debt to EBITDA crossing levels of 5 times during this capex phase. Now, when it comes to Ambuja, the management, the Jefferies here has a buy recommendation here as well, and the management is saying that the expansion plans that the company has envisaged, they are on track, and they continue to guide for an EBITDA per ton level of 1,500 rupees is what the management is guiding for, and they have a plan to consolidate all the cement companies under one head in the medium term. So that is a bigger takeaway from the Ambuja management. From Adani Energy Solutions here as well, Jefferies has a buy recommendation. The company here said that they are aiming to construct close to 17,000 crore of under construction transmission assets by the end of FY26, and they have indicated that there is a 1.1 trillion rupees TBCB pipeline in the next 12 to 15 months, where the company currently has a 16% market share. And when it comes to smart metering, remember now these smart metering stocks have been in the focus all through this year, and they are saying that this remains an exciting opportunity as well. And within the smart metering space, they have already executed projects worth over 27,000 crore rupees. And lastly, for Adani Green Energy, Jefferies says that they have an installed capacity of 10.9 gigawatts as of March 2024, and another 11 gigawatt projects are under construction as of now. The management says that they are guiding for a 6 to 8 gigawatt per year capacity addition each in FY25 and in FY26, and they have reiterated their stance of raising their capacity to 50 gigawatts by FY30, including 5 gigawatts of pump hydro projects. So plenty of commentary coming in from all Adani Group companies, but the big number is the $100 billion capex.
All right, got it. Thanks very much, Hormaz. Very interesting note there coming in from Jefferies. Let's get Prakash's views. Prakash, I'm not sure, if you're a fan of many of the listed entities from the Adani Group or not, or if you like them. And a lot of people seem to find relative safety with ports, considering their marquee assets. What are your thoughts on any of the group companies?
No, absolutely. I think ports is the one that's demonstrated a very strong organic growth chart till now, and we've seen, the execution has been absolutely superfluous when you compare it with some of the other projects that the large companies have undertaken. But what's the, if you ask me, the most promising piece today within the Adani Group actually resides in the unlisted areas of Adani Enterprises. And it's extremely difficult to put a value to it unless you do a sum of parts, which is really thorough and detailed. But if you look at the airport business, you look at some of the data center business, you look at the new energy business, all of that sits there at this point in time for me. And I think at some point, the management will start wanting to monetize some of this by a smart demerger route or some sort of a subsidization, which gives them an opportunity to list some of these companies. So that piece is going to be the most interesting, because the rest of the business have reached a mature stage where they will kind of grow with very clear, defined metrics. So I would definitely look at Adani Enterprises in a very different light. And this note actually brings out some of the salience that is there within the entire group, which actually dovetail into this thought. So we'll look forward to that. And at some point, I think the monetization effort will actually be underway.
All right, so that's about the Adani Group. Meanwhile, this seems like a market where, you are seeing a lot of luxury, high-ticket items being bought into. So we have Thangamal Jewelry, which is now up 15% as we speak. Most of the gains accumulating in just the last 20 minutes or so. So Thangamal Jewelry has done extremely well this afternoon. The other one which is doing well is Ethos as well. Ethos is up around 5.5%. Remember, this has been a week for jewelry stocks. Earlier in the week, we had a Motilal Oswal note saying that there is higher propensity towards the organized players in the jewelry space. And this morning, Pankaj Tibrewal did speak about the luxury space, which one can play as well in terms of consumption. Ethos is the one that sells premium watches at an average price of close to around 1.9 lakh rupees odd. So those are high ticket items. Let's talk about low priced items which give us as much joy, and this is bhujia, chips and gathia that we're talking about, the ethnic snacks makers, all of them doing well in today's trading session. We have Bikaji up around 1.5%, Gopal Snacks about 2.5%, Pratap Snacks about 9%, ADF Foods, the ones that make Act 2 popcorn, up around 9% as well. There's an initiating coverage coming in on Bikaji this morning from Nuvama. They've initiated coverage on the stock with a buy rating and a target price of 885 rupees. And the rationale is pretty clear that it is a rapidly expanding Indian savory snacks market in which Bikaji is gaining market share. It's the third largest player in the organized ethnic snacks market. It has 9% share. But, the salience that they have of larger packs, which are family packs, is 60% of their overall sales, and they are the market leaders out there. So it's not for individual consumption, for family consumption. They're they're the brand, and they're leader in core states, which is Rajasthan, Assam, and Bihar, and they're looking to increase their market share in these states itself by about 1 to 2%, while focusing on other states as well. They've invested ahead of demand, so with asset utilization or capacity utilization increasing going forward, the return on capital can actually increase all the way up to 32% by FY27. So as a result of which they find this favorable. But looking at this and the rapid acceleration towards packaged foods itself, we're seeing traction in all the other names too.
Okay, thanks a lot for that. And traction and
serious business, clearly.
Traction in my hunger as well. So,
by the way, unlisted Haldiram's, there were reports that it's valued at around $8.5 billion. That's almost as much as Tata Consumer right now in terms of valuations. But the average selling, the sale of all the three Haldiram groups put together is actually a lot more than Domino's, McDonald's and Burger King put together. So obviously, the consumption of
never take your bhujia and your chart lightly.
I mean, coming from a person who's from Bikaner,
salt.
Yes, I'm from Bikaner. Bhujia is never side of plate; it's always center of plate.
Okay. Explains that valuation then.
Well, Prakash Diwan, your thoughts on all the bhujia eating that's happening and also the stocks surrounding it?
Oh, absolutely. I think I agree with Mangalam. This is ethnic snacks is getting to be much more mainstream than what it used to be earlier. And still, you'll be surprised, the organized market is just in its mid-teens. It's not even kind of crossed that 20% Rubicon. So there's much more that could come in terms of market share gains. But let's look at valuations. Some of these companies have had a phase where Pratap Snacks, for example, it kind of came down on valuations from its lofty levels. The earnings caught up. It became fairly well balanced, but then again, it's become expensive. So, and that's the reason why this brokerage note that Mangalam was referring to also will not be in a position to look at price objectives which are incrementally very high, Sonia. So you will have to give it space. You will have to give it time. So both these things, but it's a lovely segment of consumption which will probably be much more robust and the kind of inroads that they make in terms of segments. Whether it's through price point changes, whether it's through a new SKUs, all of that is kind of helping them get a stronger foothold. So I don't see any reason why you can't look at it, but you need to be comfortable with the valuation, which in some of the cases are fairly stretched. So we'll wait for dips as a classical response to this.
All right, wait for dips. And also what it does is it allows people from other parts of the country to get a taste of what is prevalent in some regions of the country. So sitting in Kerala, you can probably enjoy the gathia of Gujarat if it's an organized player, or the otherwise you can, if you're in Bengal, maybe call for a bhujia from Rajasthan and a Bikaji.
Now suddenly, when you mentioned Bikaner, I remember why the Bikaner wala near, my original residence in Delhi was so popular. So yeah, it's pan-India.
Right.
Pan-India appeal.
Let's take a bhujia break. We come back. On the other side, we have Pashupati Advani of Global Foray on the other side to talk about markets and investments.
Digestive problems, bacterial pneumonia, preterm delivery and cancer.
If your teeth the way they meet, what we call occlusion, is not proper, it can lead to other damage to the joints, to the gums. We have bone loss around the teeth.
Use a soft brush, destroy your brush, don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Welcome back. A bunch of stocks picking up now. We have Suntec Realty from the broader markets now at the high point of trade. Real estate has actually been doing well for the last few trading sessions. Raymond, which is now more of a real estate company than just a textile company, doing extremely well as well, up around 6.5%. And we're seeing some traction come by on a couple of these other names as well. V-Mart Retail, for instance, up around 3.5%. Good time to get in Pasupati Advani of Global Foray joining in to give us his views on the market and the themes that he likes right now. Afternoon, Pashupati. Always a pleasure speaking with you. How do you feel about the market right now? What is it that you're liking? What is it that you are uncomfortable about?
Well, what I'm seeing like as a helicopter view is that basically the FIs are kind of still cool on India because they've got huge profits and they've had losses in other countries, particularly in China. So they're booking profits against their losses in China and Russia over the time, and that's why we've been seeing exodus. On the other hand, we've got local money that's coming into SIPs with a vengeance. Huge numbers, getting larger and larger every month. So it's good that the savings of the retail public is coming into the markets in a if you call it a derivative way rather than straight in stocks. And what we are seeing is a sector shift. I mean, we are seeing people in countries where the markets are not really doing very much, and they're looking at India in a positive note, and they're also coming into India in defensive stocks. So, obviously the first place people look is the big index, and what's in the big index? First of all, big banks, IT, oil and gas, and some consumer durables, and that's most of the index. So that's where we're seeing some of the action, more into the defensive stocks rather than the others. But we are seeing some movement, new money coming into indices.
New money coming into the indices. Pashupati, good speaking to you after a while. Here on the channel. Thank you for taking the time out. We're heading into the budget as well. Any high expectations this time around, and
Any sectoral expectations? Manufacturing, infrastructure, affordable housing?
So definitely the aim of the government is to get the private sector to spend. As far as the government is concerned, they're continuing to spend. The infrastructure spend is still coming. So therefore, you're still seeing movement in cement, steel, construction material, and also because they've got a message to spend on defense. So again, all the defense stocks have done really well and will probably continue to do well. I am not seeing too much. There is some. I'm not seeing too much movement in private sector to start scaling up. And one is because they made it difficult for the banks to give money, but also that they haven't actually decided to come in with a vengeance. So until that comes, we're not going to see a huge movement in the market upwards, because that would be a confidence that, frankly, I'm seeing hidden. But at the same time, you're seeing real estate doing well because people feel that we're prices are going up and they're firming up, and the sector has cleaned itself up, and therefore the organized realty will be doing well, and we're seeing that in the prices. So it's going to be new sectors coming into vogue, not rather than the old ones, and I think that's what's going to make the market really interesting.
Ashwati, hi, great to have you on the show. So what are these new sectors? Hi. So, looking for markets to be interesting. So what could be new?
So as I said, real estate was hammered down because, there was a lot of things happening in the sector. And now real estate is coming back into fashion. IT has been hammered. I don't think that's going to churn. I saw earlier in the program that you got our good friend Salil coming on the program later to talk about Infosys. But I think the IT sector is tough simply because you've got AI, and now what I've told is a new derivative called AGI, which is where you get computers to write the software to do AI. So that's the next derivative. So, I think the IT companies are going to have some issues. But again, banks, we're having some shift from the PSU banks to the private banks. A couple of the larger private banks have not really performed too well, HDFC Bank and Kotak. So maybe, there's a chance of movement in the other private banks like IndusInd and Axis. But, that's another shuffling of the Nifty Bank Index, which has to happen, because I personally feel that there's a lot of fintech companies that are struggling, and that's going to come back on the banks. But again, they're new sectors, like you mentioned jewelry earlier in the program, gold is going up. So all jewelry companies naturally are going to do well, but I'm not seeing retail public coming and buying jewelry like crazy. But now we've got festivals coming. So let's see how they manage those over the next 2-3 months. So it's interesting times. And again, this is a market which has been for stock pickers. And therefore, you have to pick the right stocks, and those are the ones that are going to, really do well.
What about the SMID space, the small and mid cap space? Are there any interesting themes out there? Because, like you said, jewelry. Now you have stocks across the spectrum. You have Titan on the one end, and you have Thangamayil Jewelry on the other, with Kalyan and Senco somewhere in the middle. So, how do you pick stocks? Like you're saying, it's a stock-specific market. So, how do you back these themes, and what are some of the stocks that you like, if at all?
So actually, I'll take an analogy of jewelry stocks versus like broking stocks. Now, some of the more transparent brokers are saying these are our number of trades. This is the average value per trade, and trying to open up their balance sheets to be more sort of transparent. Maybe the jewelry companies can start saying, this is our raw gold inventory. If they do that, all of a sudden you'll have a differentiator. You'll know who's actually holding gold and who's not. And then, given that gold price seems to be doing well, I think that that will also take a new turn and provide a differentiator within the jewelry stocks. I mean, I honestly don't know how much gold Thangamayil Jewelry has in stock, but if it's like got tons and tons, then maybe it's a stock worth looking at. That's just my thought. You're talking about also mid caps. One of my favorites was Indus Tower, because I actually believe the telecom sector is going to continue to raise its ARPUs, and that's going to be good for all of them. And all of a sudden, it got put into an index, so it jumped up, and now all of a sudden Vodafone decided to sell off a big chunk of their holding, so it's come back down again. But I think that's a stock that is definitely worth having. And as telecom grows and as more and more people use data and more people use 5G, the towers are obviously going to be needed. And they're the leader. They are the publicly listed tower company. So I think definitely it's participating in the telecom sector.
Okay, that's Indus. That's interesting. Pashupati, give us another name, one or two more names, stocks that you're finding interesting at this point, or stories that are really, capturing your imagination.
Well, I have had fun being up and down in Paytm. It looks like Paytm had a lot of things going for it, and then they lost their banking license, and now it looks like it's getting peeled into pieces. So actually, I'm not as wild about it as I was. I actually lost money in it, so because I thought that the business model seems to have gone haywire after they lost their banking license. But again, I think at some point, once they're now talking about selling off their theater and tickets business, it'll probably come down a little bit once that sale takes place. And then, maybe there's a chance that it'll come down, because at the end of it all, I believe the marketplace has some value to one of the larger players, and what that value is, we'll see. But, I think it's maybe the value is 50 rupees lower or 75 rupees lower, but at some point it's going to be interesting to buy it again.
Do you, Pashupati, do you like the guys who could be buying Paytm's theatre and tickets business? I'm talking about, of course, Zomato. We were just discussing, before you joined us, how this quick commerce is a whole different world. You can, from your toothpaste to your clothes to your shoes to, what have you, the biggest brands, everything's out there. And of course, the next big thing for the market is going to be the Swiggy IPO. So what do you think of Zomato at this juncture?
They're all going to do fine. They're all going to do great. And what they're all doing is going to other product deliveries. And the delivery last mile is, again, always been a challenge in India. The Chinese seem to have cracked it, because in China, they're so used to getting delivery in half an hour and 1 hour that, if you have if you say, I'm going to deliver you tomorrow, you're not going to get the click. And I think we're heading there. It's going to take time, and there's going to be a lot of blood on the streets. But I don't know how they've done it, but it's absolutely fantastic the way they do it. And, I remember maybe 3-4 years ago meeting someone who was very senior in Carrefour in China. And he said, we can only do business if the person is within 2 kilometers of our stores. Everywhere else, some other... He didn't call it that, but a kirana wala was doing the delivery and getting the contract. So, it's a very difficult space. But again, if they're focusing on last mile, they will do fine. And, certainly the number of players is going to get less, and therefore it's going to be more interesting. And the ones that survive are going to do really well.
Okay, well, thanks a lot for joining in, Pashupati. Have a good weekend, and thanks for being with us on the channel.
Sonia.
Thank you. That's the word coming in on the market and on individual stocks and sectors. Market, by the way, is flattened out completely now. So just a day of consolidation after all that to and fro. We'll take a quick break. We still have about half an hour, 20 minutes to go before the day comes to an end. Stay tuned. Celebrate our own 25th year with new milestones being achieved on the large street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
This is India's election headquarters.
As the verdict emerges, the markets will react.
Bringing market movements into sharper focus with the most authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things are not looking very good for the ruling regime at this juncture.
Of course, things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community.
Welcome back. You're watching us here on Closing Bell. As always, let's get you what the dealing rooms are saying in an otherwise consolidating market. We're seeing some traction in a lot of stocks. Kalyan Jewellers, we were talking about it, just spiked up right now. Vertical up move is what we're seeing on Kalyan Jewellers. So that stock's up around 4.5%. Also, PVR Inox is one of them which is doing well. Granules has been doing well. That's one we'll keep an eye out on, alongside something like an Escorts Kubota, which too is sitting with a 4% gain. So individual pockets of gains here. What are the dealing rooms saying? We have Nimesh, as always, joining in with an insight into that. Nimesh.
Hi, Mangal. Yes, it's a day of consolidation, but it's extremely volatile as well, right? I mean, Nifty is all over the place since morning. We've seen some recoveries, but again, that got sold into. So that's the kind of a day. But in terms of flows, again, it's going to be a mixed day of trade. But do remember, there is this FTSE and Sensex rebalancing. That's going to have an impact on the institutional data today. So that's something to watch out for in the post-data numbers. In terms of sectors, telecom, IT, and a bit of pharma. That seems to be the place where there's a bit of buying interest back from larger institutions. However, the big overarching theme has been the large block deals, which we saw a big amount of blocks happening this week. And the sense I'm getting is, that trend is likely to continue maybe next week as well. So, that supply is going to continue from promoters is what my sense is. But today seems to be a day of consolidation. But I guess there is a Friday factor as well, and we're seeing some bit of profit booking as well in mid-caps and broader market stocks.
Okay, Friday factor and profit booking. Nimesh, what about individual stocks? What are we looking at this afternoon?
Well, Sonia, as I said, the trend of promoter selling continues. The first stock is Gujarat Fluoro. Well, the stock has recovered from intraday lows, but there was a large block, 1.2% equity got changed hands. I understand the promoter entity was a seller in today's block, and some domestic mutual funds were buyers. So again, the disclosures will be quite interesting in Gujarat Fluoro today. The second stock is Vedanta. Well, the stock has been in a very narrow range today. The stock has actually moved up a bit, but now I understand there's going to be a large block deal in Vedanta very soon. Again, the trend of promoters and promoter family members selling, that continues. So maybe a large block in Vedanta as well. The third stock is SAIL. After long term, some bit of traction seems to be back in SAIL as well. The volumes are on the higher side, and I understand a leading domestic mutual fund is an active buyer as well in SAIL of late. And the last is Bandhan Bank. The stock is smartly recovered from the recent lows of 170, 180, now at almost at 210. There is a bit of buying interest as well from larger HNIs is what I understand. But the big trigger point is the appointment of the new MD and CEO. Remember, Ghosh's tenure ends in mid-July. So before that, there is a high anticipation that the announcement will come. And that is the next big trigger for Bandhan Bank.
All right, Mesh, thanks a lot for that. So those are a bunch of stocks which are on our radar. Bandhan Bank in particular, some flows at the HNI desk. Kalyan Jewellers, we were just talking about that with a gain of almost 3.5%. It's extending right now, and volumes are picking up as well. So that's something we'll watch out for. Almost 6.5% up move is what we're seeing. It seems like a vertical up move that, the stock has just taken off, and it's been a big mover. In fact, over the last 12 months or so, it's more than tripled, 3.5 times from, the levels that it was earlier, a little over 150, and now around 460, currently adding on more gains. Good time to get in Mitesh Thakkar to tell us what to buy or sell today for a reverse trade on Monday. Mitesh.
So Indigo is something which has come on my radar. I think, after a few days of pullback, we've seen this stock try to get back into up move again. So BTSC here, keep the stop below levels of 42.85. Look for a 43.50, 43.55 kind of a target for tomorrow. And on the selling side is on the STBT side rather is oil refinery. That's IOC. Take a STBT with a stop at 168 and look for a target of around 166, 165 after.
Do you have a view on Jubilant Food, Mitesh? The stock is higher in today's trading session. It's recovered from the lows, defying the otherwise weakness that we're seeing in the mid-cap end of things.
So Jubilant Foods, Mangalam, I think the chart is improving drastically. In fact, if you see the weekly chart, the stock has rallied from 460 to now at 560. The last swing high was around 580, so that is the target which I'm looking at. But in case we start getting past 580, then I think we'll even look at the monthly chart turning positive and look at a revised target of 620. So there are two targets, 580 and 620 here, but that's from a slightly more long-term kind of perspective.
The reason why I asked about that is because this morning we got a note from Macquarie on the consumption sector, and they said that the government has actually announced an increase coming in for the minimum support price for Kharif crops. Does well for rural consumption. The key crop this season has been paddy, which has seen a 5% increase in MSP. But now what they're pinning their hopes on is some budgetary support for the consumption sector coming in. And were that to happen, it will boost consumption for urban masses. So in a situation of any sort of improvement in urban consumption, they believe that there is an upside risk for same-store sales growth for the QSR space. And as a result of which, at a precautionary level, they've removed Jubilant Food from their marquee sell list. Remember, the stock has already seen a bit of an up move from the lows, as Mitesh pointed out as well, from 450 all the way up to 550. So with this outperformance that we've seen, maybe there was more upside risk, and as a result of which it's been removed from their marquee sell list. And that explains the further upside that we're seeing on Jubilant Foodworks.
Okay, well, Prakash Diwan is with us, so let's get his view in on this. Prakash, Jubilant Foodworks, any thoughts there?
So, we just spoke about ethnic snacks and how some of these big brands actually add up to much more than all the QSRs put together. But nevertheless, Jubilant Foodworks seems to have bottomed out on a few metrics, the business metrics. Primarily, the cost control, the cost rationalization that they did. If you see the menu, it's much more leaner, fitter, and arguably, more profitable for them. So so what they've done is all the frills have been actually done away with. And if this price hike for the input side is not such a inhibiting factor, my sense is that their revenue growth will probably turn into far more profitable business for them going forward on the SSD also. So the single store sales growth that we keep looking out for, even if it's not very high and superlative, will probably add up to a much better bottom line. So from that perspective, it's probably attractive. But then you'll have to have the patience for the business to transform, which means that you'll have to hold on for at least the next 6 to 12 months before the real transformative thing comes up. But yes, quite positively inclined on this name, Sonia.
Well, a few stocks going with big cuts into the weekend. Torrent Power, that's the one that should come up for you. It's a big cut, and it's a vertical downtick that we've seen. Down 7% now. There has been an update on the exchanges, just trying to find out what it is. In the meanwhile, RVNL has emerged as the lowest bidder for a project worth almost 200 crores. So that stock's rising, but Torrent Power, definitely something's up. The stock down 7% and seeing a lot of volumes on the downside as well.
Yeah, that's actually quite a huge fall. I don't think there's been not that I've seen a block. Perhaps some other news announcement. We'll try and get to the bottom of it in just a bit. 7% absolute decline coming in on Torrent Power. Prakash, by the way, I just wanted to check, have you had a look at Time Technoclast?
Oh, yes, of course.
Yeah, so it's really celebrating this hydrogen win, right? They're doing cylinders for hydrogen and they've got the government approval. What thoughts on this company and the stock?
No, absolutely. If you look at this history, and it has a fairly long one, they've messed up on certain acquisitions that they did when they were trying to actually create a global footprint about 7-8 years back. That entire structuring that they thought would help them has actually been undone and reversed, which means that there's been a lot of stress on the balance sheet. They've kind of been able to get out of that as well. And now they seem to be, all this while we were waiting whether the LPG domestic usage cylinders would actually transform into composite cylinder usage, but that's not happened. Fortunately, hydrogen starting from a much cleaner slate doesn't need a little bit of reworking that LPG cylinders would need, and hence decision making has been far more efficient and faster. So I think the time for composite cylinder announcement is very positive. I would believe that this gives them the right to be able to become like the poster child of this new age cylinder material that they're talking about all this while. And that is what will kind of fetch them some premium. So earnings will come, P multiples will expand, all of that will probably fall in place. So this is a great start. I don't see any reason why this will not have a rub-off effect on their other businesses as well. So quite positive. Of course, it's run up in the last 1 year quite significantly in anticipation of all these developments. But I think the story is just begun. But you could definitely add up on dips since, as I said, it's run up quite a bit in the last 12 months.
Okay, well, thanks a lot, Prakash, for that. We just have about 10 minutes left for the markets to close. John Chambers, who's the chairman of the US-India Strategic Partnership Forum and former CEO of Cisco, says that we are in the age of AI. In an exclusive chat with Shireen Bhan, he says that AI will be pivotal to economic prosperity across geographies. As we slip into a break, let's listen into that conversation.
It's not just the age of AI, it's the age of AI and agility.
Everybody can either disrupt or get disrupted, but the same thing's going to happen to big companies. People compare it to right before the dot-com bust. I think that is wrong. Now, don't misunderstand me. Are there going to be some spectacular train wrecks with AI and companies that just missed the mode, got overfunded, etc.? But I'd say, using an American term, I'm trying to learn cricket, as the Olympics hopefully will come to India in the mid-30s coming up. We'll see if we can win that one. But I would compare it to being, in baseball terms, the second inning. So where the internet growth, etc., clearly peaked and there was overinvestment in certain categories, Cisco came through it fine, but it was very painful. I think we're in the second inning in terms of what AI is going to represent. I think this will be the decade of AI, and it will be the century of AI, and it will be the foundation to determine economic growth of companies and directions.
At 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective.
Welcome back. You're watching us here on Closing Bell. The Nifty down about 90 points right now. The Nifty Bank is the one which is leading the decline, down about 0.33%. It's been wobbly. It's been in a range. Dips are being bought into and rallies are being sold into. That's exactly how the day has panned out in today's trading session. We'll have about 90 points of decline at close. But, it's been a good week nevertheless for the bulls. A lot of supply has been absorbed by, the institutions, the paper supply that was there. Banks have broken out, and the Nifty Bank will still end this week with a decent gain, close above that 51,500 mark as well. All eyes, however, will be on what takes place in the GST Council meet that will happen tomorrow. It's elicited high interest on hopes that some big changes may be announced. In fact, the fertilizer pack, a lot of these stocks are up anywhere between 30 to 40% this week. A couple of these online players, online gaming players as well, have been higher. So what are the expectations? What's likely to be announced? We have Timsy joining in with all that roundup. Timsy.
Well, that's right. It's a packed agenda for the GST Council. The Council may consider a proposal not to levy higher GST when lower rate was paid due to a general industry practice leading to retrospective demands. Experts say that this particular law amendment is going to give relief to sectors like online gaming, shipping lines, foreign airlines, insurance companies, IT, etc. Also, other items on the agenda include recommendation to reduce GST on fertilizers from 5% to exempt hair. Group of ministers on rate rationalization could lead to further detailed study. Also, Council could bring in several other clarities for sectors like telecom, highway builders, insurance, ESOPs, reducing TCS for e-commerce operators, insurance, aerated drinks, tobacco products, excellent neutral alcohol. Council may also bring anti-profiteering measure to a logical conclusion. And yes, bringing in mandatory Aadhaar-based biometric verification for new registrations. Let's see what all Council decides.
Indeed, Timsy, thanks a lot for that. Let's see what all comes this time around. A bunch of stocks, can't keep your eyes away from that. We have Pfizer from the broader markets, which has again seen a big dip. Most of the cuts have come by in just the last 15 minutes or so. In fact, not even 15 minutes. Last 3 or 4 minutes, we've seen a big cut in Pfizer. So the intraday chart of Pfizer comes up for you at the low point of today's trading session. Ramco Cement has been one of the weaker stocks today at the low point for that counter as well. And as has ICICI Pru, actually. ICICI Pru too ends the week at the low point of trade. What is in store for the markets in terms of earnings, and what should one do? Pankaj Tibrewal of Ikigai Asset Manager joined us today to give us his perspective. He said the next 12 to 18 months are where you focus more on capital protection rather than wealth creation because of the big rally that we've seen across the markets.
The contribution of mid and small caps as a percentage to overall market capitalization stands at about 36%. And their profit contribution is about 25%. So the divergence is clearly there between the profit as well as the market capitalization contribution. We believe that the earnings growth after a long time is starting to slow down. Last year, NSE 500 companies grew at 30% from a FY23 base. I think this number could be about 14-15% this year. So I think we need to take cognizance that earnings have started to slow down in the broader markets. And I think valuations are not factoring in that. We analyze the data very carefully. The government lost about 60 seats in the rural areas. And that's a large number. Our sense is that probably a part of that expenditure, which has been flat for the last 4-5 years, will see an uptick. And on the same breath, the capex expenditure, which was at about 3.5 lakh crores, is expected to be 11 lakh. Consumer durable space probably can make a comeback. We have seen very strong summer, and that's likely to sustain going forward as well. 3-4 sectors where we believe that there's a lot of margin of safety. The first one is private sector financials. We believe that they have been continuously growing, delivering good numbers. And there is reasonable margin of safety when we look at their franchise and when we look at the growth potential ahead.
Right. Wise words coming in from Pankaj Tibrewal. Interglobe Aviation, that stock's surged. In fact, it was one of those buy today, sell on Monday calls from Mitesh. So that stock's moving higher, and this despite oil prices moving higher as well. So that's only telling you about the demand that is there and the kind of occupancies in the flights. So Interglobe Aviation continues to do well. The other one that is now picking up is Oil India. Oil India is higher. Upstream oil companies typically benefit from the increase in crude prices. Now Brent is closer to $86 per barrel, not near uncomfortable levels, but definitely good levels for some of these upstream oil companies to make some money. And the one gravy train that continues to roll on is the entire railway space. So we have Titagarh Rail Systems, another day, another 7% up move that we've seen on the stock. I mean, just look at it. It's up around 13-14% in the month of June itself so far, despite all the volatility. Add to that, this year, the first 6 months of this year, we've seen a gain of nearly 53%. And if you look at the stock over the last 12 months, more than tripled. And over the last 24 months or so, it has given you more than 500% return. So a big mover in the railway pack, Titagarh Rail Systems. We were talking about how RVNL gained on account of a 200 crore order win. Railtel is the other one, which is up around 10% as well. Prakash Diwan is still with us. Prakash, at what point does this train stop? I mean, when does it look expensive?
No, I think most of the stocks are expensive, Mangalam. It's just you need to understand vis-a-vis historic order execution and order booking, what's the positive correlation. And from that perspective, some of the ones like Ircon, to an extent, rights, they are the ones which will continue to do very well, even if the others kind of start seeing a shakeout. So in most cases, we've kind of priced in the earnings growth for the next 2 years. So the ones that probably have vulnerability in terms of executing what is expected in 2 years are the ones where the correction will be very severe. So you'll have to slice and dice from that perspective. But I think Ircon, rights, to some extent, RVNL definitely stand a chance to win. So I would be very worried about these.
Quickly, before we let you go, do you have a view on the telecom space? You've always been a Bharti Airtel fan. I know that you liked Vodafone at the price it was trading at as well. From there, it's seen a near 65-70% rally already. And shortly, a short while ago, we had Pasupati who spoke about Indus Towers as a play. Now, with the supply overhang having gone, the stock has actually seen a recovery from the lows. In fact, Indus Towers is now surging at the high point of trade. What of these three do you like and how would you play it?
No, so I think Bharti definitely, as a stock is very promising. There's no doubt about that. But, I would go with the change that's happening in the tower business. Indus is, of course, fully priced, Mangalam, but then there are smaller companies. And one of the very small companies in that space with just about 1,200 crores market cap is the one that we are very positive about. But it's too small to discuss at this point in time, but for another day. But I think that space is something which you will see allocations come to in a very profitable way. So quite positive on that.
All right, we'll leave you at that. Prakash, thank you so much for joining in. Have a good weekend. We'll see you on Monday as well. Time to wrap up on this edition of Closing Bell. Let's recap the way the market has gone. The Nifty, for the record books, closes about 110 points lower. That's the last tick, 23,450 on the frontline index. Led lower by the Nifty Bank, which is down about 0.5%, led lower by HDFC Bank and a couple of these other private sector banks as well. But that is not to say that, that's how they went in the week. In fact, it's been a very, very good week for the banking index. It broke out a couple of days ago and has actually managed to hit a fresh record high in the last couple of days itself. So the Nifty Bank actually ends about 3% higher for the week, notwithstanding today's profit booking. The Nifty absolutely flat. We've seen a fair amount of traction in the broader markets as well. So the mid-cap index this morning as well hit a record high. And if you look at, this entire week, the mid-cap index ends about 0.5% higher. The small-cap index about 1% higher too. What were the stocks that did not do too well in today's trading session? We had L&T, which was lower, Ultratech Cement, which was lower, Tata Motors, Nestle. FMCG seems to be, back to its losing or underperforming ways. On the way up, it was the IT pack that supported the index, and that was largely on account of positive results coming in from Accenture. The broader market is where the action was. We ended with an even keel in terms of advanced decline ratio, and a bunch of stocks that did well. We had Granules, Havells, Vodafone Idea, PVR, Inox, and Alembic Pharma, alongside all the rail stocks that did extremely well. But on the way down, we did see some profit booking in fertilizer names ahead of the GST Council meet. Chambal Fertilizers, GNFC, Torrent Power saw a big decline in the last hour, and Coromandel as well. So all said and done, it was a week of consolidation for the frontline indices. The Nifty Bank breaking out. Alongside that, we did see some traction in a couple of mid-caps. Small-cap index ending the week at another record high. With that, we will wrap up on this edition of Closing Bell. You don't go anywhere, because on the other side of this very short break is our Friday special offering, Editors Roundtable.
We are hoping to see the credit growth in the range of about 14 to 16%. And we expect to see very broad-based growth in credit, right from SME, agriculture, retail, and also in the corporate. As far as we are concerned, our domestic NIM last year was 3.43. So I expect our domestic NIM should be around the same number.
The shock and awe story of NVIDIA, Shankar. I mean, you know, today the most valuable company in the world. For most of us, the big breakthrough moment as far as generative AI was the ChatGPT moment. But for you and for the folks at NVIDIA, I mean, when did you start to think that this was on the verge of an explosion?
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, you know, we've been doing deep learning since 2012. Jensen, you know, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So in no overnight success, which is what people sort of suddenly, you know, like, where did NVIDIA come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, you know, small startups as well as mid-size and large startups, and all of the, you know, global research centers, global capability centers, and, you know, major ISVs. It takes a long time to build a market.
Steel, we are one of the best prime location of a steel asset.
Well, the Nifty and the Sensex post minor gains but ended in the green for the third straight week. The banks outperformed, with the Nifty Bank posting its biggest weekly gain of 2024. Private banks gained the most. Hello and welcome to the Editors Roundtable. Over the next 30 minutes, we decode the week's market action and put the spotlight continuing trend of stake sales in multinational companies. I'm Sonia Shenoy, with me Surbhi Upadhyay and Nimesh Shah. Also joining me on the show today is Mahesh Patil, the CIO at Aditya Birla Sun Life AMC. Mahesh, thank you so much for being with us on the show. Well, you know, it has been a very volatile last couple of days, but give and take everything, this market, after a big run last week, is just consolidating, buying time around these record high levels. So not such a bad outcome at all.
Not such a bad outcome. In fact, you know, despite a truncated week, it looks so long, right? I mean, we feel like, I mean, every day there are so many block deals, there are so many stake sales happening, reporting every day to come and talk about this block, that block. And I'm sure, you know, Mahesh is equally busy participating in most of the blocks of this week as well. But again, you know, looks like there is more of churn happening within sectors as well. This week belonged to the private banks, a bit of surge in the private bank stocks. A lot of the laggards of the last few weeks have seen a bit of bounce back as well, and a bit of profit booking in metals in some of those sectors. So looks like this momentum is going to continue purely on back of what Mahesh and the team, domestic mutual funds, are doing. They're just buying out every promoter and every MNC. So I think that's going to be the trend, I guess.
No, absolutely. Nimesh has had a really busy week because every day he has at least, I think, 6-7 block trades to talk about, to tell us who could be potential buyers and what's happening. But Mahesh, thank you so much for dropping into our studios. It's great to have you here. It's like finally pausing for some breath, right? After the roller coaster run up to the elections, the announcement, digesting what has happened. And now, I guess, just anticipation, waiting for the next event, and that's the budget. How have you sort of, you know, let it all sink in?
Yeah, no, so it's been a kind of a volatile week in that sense. I mean, the budget day, I mean, the election day was the best one. I think idea is to stay cool, right? Because we've seen that everything really bounced back to this level. So again, we can't react as much being a large fund house. I mean, you have to be positioned in stocks or sectors where you think, okay, which will withstand any kind of volatility. Obviously, they'll follow the market, but with less. So I think in this kind of a market where we're seeing a lot of pockets where there is a lot of exuberance which is there because of the large liquidity which is coming in, I mean, idea is to try to focus on better quality names, right? So you want to not get carried away, okay, because of price action and momentum, okay, which is happening in a few pockets. But I think structurally the markets is still in good shape. I think we've seen after the elections, policy continuation is there. There should be steady growth. Obviously, the markets have rallied quite a bit, so there could be some consolidation. But I think this is a time where we see some amount of sector rotation. I mean, the big winners of last year, right, which has been some of the cyclicals, the industrials, the capital goods sector, the PSUs for that matter. I think you could see some rotation coming through because it was more investment-led. I think post-election, I think you'll see the budget probably whether the lean is more towards trying to stimulate consumption.
Correct.
That has still been lagging. If you look at the economy, that is still well below the pre-COVID trend.
Correct.
And if that's the section of the economy also which comes, then we'll see some of these stocks related to that, whether it's consumer discretionary, consumer staple, that could see some interest coming in.
In fact, you know, we had a very interesting discussion with one of our consumer durable companies a couple of days ago, and they said that there is so much traction now coming in, especially from some of these pockets like real estate, infrastructure, etc.
Right.
And now the capex that they've invested in, now they're seeing the fruits of that.
Yes.
But apart from that, the other sector I wanted to ask you about was IT, because this week IT was back in focus, you know, with Accenture giving out their guidance and numbers, etc. But your thoughts overall as we head into the earnings season as well, how are you positioned on the IT names?
So IT sector, we are kind of a neutral-ish because it's a sector which looks to have bottomed out in terms of at least its earnings trajectory, right? I think last 2 quarters or 3 quarters, we have seen some downgrades in the IT sector. I think from here on, I think the downgrade cycle looks like behind us, right? So most of the negatives are priced in, and we are seeing some early shoots in terms of the new orders, if you look at it, right? Especially the big transformational projects. I think those orders are coming in, but they are slow to execute. Discretionary spend is still weak, but we are seeing from the BFSI sector, like globally, things are looking to have bottomed out. So this is a sector, I think where if you are trying to be counter-cyclical and trying to take a contra call, it could be a good sector to look at slowly, because I think in a market correction, if at all, then this sector should outperform because it's under-owned. Again, a lot of FIs, if you look at it, is probably the most under-owned sector in that sense. But it's not going to be, again, a very high growth, right? Okay, the growth will still be muted. I think as we move into the next 2 quarters, you will get more visibility. And that's where I think one can build in this space. I think structurally, we think that IT spends are going to only increase, right? The way things are happening, I think there's not going to be any kind of a slowdown over there. Currently, companies are just waiting and watching over there. So it's a good sector to accumulate, I would say, at this point in time.
Sure, you know, absolutely. When I guess we haven't seen any company come out with a decidedly upbeat commentary, but at the same time, no one's saying it's getting worse. They're saying that, you know, incrementally, it should get better from here on. We caught up with Mohit Joshi. I mean, last Friday we were speaking with him at the Mahindra Investor Day, and he said the same thing, that the environment is definitely better than where it was a couple of months back. So the optimism is on. Just very quickly, before we move on, I thought I'll put some numbers and stats for this week on the table as well. So what has the market done? Consolidation means the Nifty is virtually flat, absolutely, but nearly unchanged, 0.1, 0.2% kind of a move on the index. It's been a better week for the broader market. The mid-cap index is up about 0.5%. The small-cap index is up a little over 1%. But the big story, the big trade of the week has been the revival in private banks. You know, the bank Nifty itself has done very well. It's up almost 4%. The private bank index is up 3%. And PSUs, they've kind of fallen off the radar a little bit this week. Some profit-taking coming in the overall PSU basket and in PSU banks, which is why the PSU bank tally for the week is actually a negative 1.2%. Now, what has triggered the interest? It's very simple. Bank stocks follow the money, and the foreign money has started showing up this week. So if you look at you know, the weekly inflows, we did have a couple of positive days, and more importantly for the month of June, the net number has turned positive from the FPI fraternity. So what is the number? The June net inflow number is now about 11,000 crores. Now, mind you, these are final depository numbers, not provisional numbers, and they also take into account whatever's coming in through these blocks. But for whatever it's worth, you've got 11,000 crores of FPI inflow coming in, contrasted with about a 26,000 crore outflow in the prior month. So FPI numbers have come in. Now, is this going to be a building trend, lasting trend? This is the big question, and we'll ask Mahesh that in just a moment. So where was the profit taking? It was quite evident in the auto space, one of the best performing parts of the market. So stocks like Mahindra and Mahindra, Maruti, I mean even Hero, Moto, Bajaj, all of them lost a little bit of ground today, you know, today and over the last 3 or 4 sessions. The other space, as I mentioned, was PSUs, and interestingly, FMCG, though there is this anticipation of you know, boosting consumption at the bottom of the pyramid, it's not really showing up in FMCG stocks. It was there on the day of the result day. when we got the election verdict. But since then, the markets kind of moved on because of continuity, etc. And the focus has come back to some of these capex stories. The short point is this week, the FMCG index was an underperformer. Now, IT, we've discussed. IT is beginning to see a lot of tactical buying. Also, mind you, the rupee was weakening throughout this week. In fact, it hit a fresh all-time low on Thursday. So that's something to keep in mind as well. IT is definitely getting in the buying. Now, the big events are over. Elections done, the Fed meeting is done, the RBI meeting is done. Going forward, it's going to be all about the budget and a lot of these pre-consultation meetings that are happening. And also, when we come back on Monday, remember the GST meeting would be over and done. And the anticipation of that meeting kept some sectors, like fertilizers, for instance, very excited through the course of this week. So I guess it's going to be more of this tax talk and what's going to happen in the budget. Will some sector get us soft? Some of this chatter perhaps is going to keep the market excited.
Oh, absolutely. Mahesh, what's your call? Because you spoke about consumption as a theme. Do you expect anything from the budget for a revival or some sort of boost for the consumption sector stocks?
Yeah, so I think, again, consumption is not only in the budget itself. I think it's also about how the monsoons, because rural is, again, a large, if you look at large population over there, and that has not done as well, right, if you look at last year. And if monsoon is also good, I think then that's the real demand side, okay, a stimulus, okay, which is much more sustainable. But I think there will be something at least to make feel good, especially on the rural side. There could be some increase in the allocations, okay, which are given to the farmers, right? We are seeing also some measures been taken to boost housing, because while housing, we have seen the premium housing has done well. I think the affordable housing has still not seen that kind of a boost. So those are the areas, okay, where you could see some because this year the budget, there is some extra provision which is there from the RBI dividend, right? There's almost 1 lakh rupees more than what it was last year, and that's where there will be some room for the finance minister, okay, to see how it really deploys that.
Correct.
So I think given that, but again, it has to be supplemented also, okay, by good monsoons, because just trying to give some donor will not be good enough.
But Mahesh, so just quick follow up on that point. What in your mind is the best way to play bottom of the pyramid consumption? Would it be FMCG? Would it be some of these housing finance companies? Something else?
Or maybe like a QSR, because they've not done anything in the last 1.5 years.
Yeah, so I think again, it's not only the bottom of the pyramid, also it's on the middle, right? If you look at it, even that segment of the population has also been impacted over there. So I think the better way to play that is through, say, consumer discretionary, some of the consumer durables, right? Okay, that's also because they're also getting aspirational, right? And again, while a lot of retail credit is also coming in and helping that, but it's also a feel-good factor, right? When you spend on these aspirational stuff. So I think that's an area, okay, consumer discretionary, whether it is the QSR space, whether it is the retailing sector, the consumer durable sector. I mean, these are the sectors where you could see a kind of a marked shift. I mean, consumer staples, you will see that much increase over there, right? Sure. Beyond a point, I think that's not something which is aspirational. So that's an area where I think which has clearly lagged behind in the last 1 year, okay, which structurally also bodes well, right? Because as India, as the per capita income goes up, naturally you will see a much bigger growth over the next many years. But temporarily, I think that this boost comes in, okay, you could see a better takeoff in some of these categories.
Okay, I have some questions for you on individual sectors as well. But before that, Nimesh, what are you tracking today?
Well, Sonia,
deals,
right? This week, Sonia, 25,000 crores and counting. That was the amount of block deals which have happened. And again, this week was largely dominated by MNCs, right? 3 large MNCs have sold big chunks into the Indian subsidiaries. So to start with, Indus Tower, Vodafone PLC sold 18% stake in a single day, and they've raised 15,000 crores by selling that 18% stake. They've very clearly mentioned that they will use the proceeds to pay off or to repay the lenders. They'll still be holding 3% stake in Indus Tower. That was a large block deal. The second block deal was ZF Commercial. WAPCO, which owns 75% in the Indian arm, they sold nearly 7.5% stake in a single day and have raised close to 2,800 crores by selling that stake in the Indian arm. So that was second large block by an MNC. The third was Gland Pharma. In Gland Pharma also we saw Fosun, which is a Chinese parent company. They've sold nearly 6.5%, nearly 6% stake, and they've raised close to 1,800 crores by selling that stake. So they were owning close to 57, now will be close to 50%. So these were the 3 large block deals where MNCs participated for this week. But that's been the trend as well. It's not the first thing, or maybe it's not the last thing as well. If you remember, I highlighted in the past as well. If you look at the past few large block deals from MNCs, Timken stands out in May 2024. The parent company sold nearly 6.5% stake. They sold a second tranche as well very recently. So Timken was a large block. ITC was another large block where BAT sold 4% stake, and they've raised almost 17,000 crores by selling that stake. So that was another large block. And the last was Whirlpool. In terms of size, that was the largest. 24% stake was sold by MNC in an Indian arm, and they raised close to 4,000 crores. So these were some of the large blocks where MNCs participated. But even in general, a lot of promoters, a lot of strategic investors and PEs have sold large chunks in the last few months. Mahesh, you've been tracking these whole block deals. I guess as a house, you'll have participated as well in some of those. How do you classify between like participating in an MNC deal and like in a general deal where a promoter is selling out?
Yeah, so I think again, one has to look at, normally when the markets touch new highs, you see some promoters selling, coming in, people, whether it is PE investors or promoters want to encash some, to meet their other requirements, right, which is there. So I think in that, specifically in the MNC space, again, we run a large MNC fund also. I think in that space, normally in these companies, you don't see any liquidity because they don't do any fundraise. Most of the MNC companies, you hardly see them coming in with a secondary, with the primary issuance, which is there, right? So the only way to get that is to some of these liquidity events which come in. And some of these companies which you have talked about, I mean, they are not selling because they are negative on India or negative about the company. They have certain compulsions, in their parent company. It could be higher debt, and they find that, probably that is with still maintaining control, right? If you can get some money and repay that debt, I think that will ease their problems, in the home markets. So what we look at is whether the business itself or the industries where they are, where the opportunities is good, right? And whether these MNC companies are committed to the Indian operations, right? Because that is most important. It doesn't mean that once you sell down, right, it should not happen that their interest in the Indian operations, whether they're still committed, and that's a comfort level which we now normally tend to get. And if the opportunity is good, then there will be continuous flow of technology and new products, which will come into the markets as Indian markets mature. So this is a good opportunity to buy some of these good quality names, right? And look at it. And they're not so much bothered about the valuations and trying to really say that they want to
Which
get
is
the
what
best
I was getting
price.
to, exactly. I mean, they're selling not with any malified intent, I take your point. But is there selling
buying back
indicating...
their parent, which is at a very, very...
Perhaps,
obviously, the valuations when they compare, right, in India...
People ask, is this a top, at least a near-term top? Because, all the so-called smart guys are selling out.
Right. No, obviously, the valuations in India, if you compare in the home markets, they are much, much higher. But then if you look at it in the context, the broader market in India itself is expensive, right? So one has to look at relative valuations, where it stands. But again, it's when you buy in some of these names, we don't look at, say, over the next 1 year, right? Because here to get entry, some of these quality names, right? Even at not you get it, never get it cheap, right? You're buying it with a longer term view, really long term view, right? We structurally like, if you like, these companies, and that's the only place, we would look at in some of these promoter selling, because promoter selling, you have to be more careful.
Very careful.
Yeah, absolutely. We have many more questions for you, Mahesh, so do stay tuned in, all of you. We're going to take a short commercial break. We'll continue to decode the week on Dalal Street on the other side. Stay tuned.
Near Bokaro, is in the Bokaro. We have a proximity of all the raw material, iron ore and the coal. We are proximity of all the railways. We are proximity of all the gas. We have put this asset on the basis that if we get 1.2 billion per million ton, we have a 3.5 million ton of plant, which at the moment we are producing close to 2 million. 3.5 will be by end of this year. We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of...
Welcome back. You're with us on Editors Roundtable, and this week we're in conversation with Mahesh Patil of Aditya Birla Sun Life Mutual Fund. Mahesh, so, at a slightly broader level, I think when we talk about the dip in the market or some consolidation in the market, this market, I don't think, has seen a real dip ever since COVID ended, right? It's been a near one-way rally, and dips are 2-3% very shallow, right, because of the sheer amount of money that you guys are pulling in. Look at those numbers. I mean, the SIP numbers, 20,000 crores on a monthly basis. Last month's equity number was a very solid 27,000 crores. So is the sheer power of domestic liquidity, while it's great in the larger scheme of things, is it itself becoming a challenge now in the near term as a fund manager?
Yeah, so I think that the wall of money which is coming in, okay, it's good also because you want a steady inflow, right?
Yeah.
So I think SIP flows are fine, I think, right? Because they come on a regular basis, so I don't think it's such a challenge over here. Obviously, when there is a large deployment issue, if you raise a large fund, for example, right, and suddenly you get a very large inflows over here, then you have to put that money in a defined kind of a time frame. In that case, probably it can become a bit of a challenge, and more so in the small cap, right, in the mid cap, where the liquidity is very, very low. Obviously, you get events like some of these liquidity events which come in, right, where there are some blocks which are offering, and at higher levels we see